Everyone, good afternoon, good morning, good evening to all of you. आज है 25th of March 2025. वेलकम once again to this लाइव एनालिसिस। स्टार्ट करते हैं। एक बार क्रूड ऑयल को देखेंगे। फ्लैट ही ओपन हुआ था, कल के रेजिस्टेंस के पास पहुंच गया है। यहाँ से एक सेलिंग का प्लान कर सकते हैं। देखो, रेजिस्टेंस वैसे पिछले दो बार रेजिस्टेंस ले चुका है, थर्ड टाइम आया है यहाँ पर। एग्जैक्ट लेवल की मैं बात कर रहा हूँ। ठीक है, ऐसा नहीं कि पहली बार ये इस लेवल पे आया है। सो क्रूड का थोड़ा ध्यान रखना है। यहाँ से सेलिंग प्लान कर सकते हैं क्रूड ऑयल में। एंड टारगेट दो रखेंगे, एक बीच का रहेगा, क्योंकि ये तीसरी बार आ रहा है तो देखना पड़ेगा कि लोअर लो बनाएगा नहीं बनाएगा। क्योंकि लोअर लो नहीं बनता है तो फिर समझ जाओ कि यहाँ पर भी आने वाले समय में फिर ब्रेकआउट होते हुए दिखाई देगा। टारगेट डाउन साइड पे ही रहेगा अप्रोक्सीमेटली। बड़ा ऐसा ले भी नहीं सकते, तो दैट इज़ द ओनली लेवल वी हैव लास्ट। थर्ड टाइम आ रहा है, वैसे तो ओवरऑल टारगेट ये रहना चाहिए, बट डायरेक्टली तो शायद यहाँ तक जाए ना। बिकॉज यहाँ पर भी प्राइस के बीच में एक मार्केट थोड़ा बहुत रुकने की कोशिश ज़रूर करना चाहिए मेरे अकॉर्डिंग, विच इज़ अप्रॉक्सीमेटली। देखोगे ना कंटिन्यूसली, जैसे कल ओपन इक्वल टू लो, ओपन इक्वल टू लो बना के मार्केट यहाँ पर मूव किया था। सेम थोड़ी देर पहले यहाँ पर मूव किया था प्राइस एक्चुअली। तो उस वजह से लास्ट ही एसएल है। थोड़ा क्वांटिटी कम रख लेना, टारगेट बड़ा रखा हुआ है, डोंट मेक ह्यूज क्वांटिटी। बिकॉज एज ए सेट ऑलरेडी दो तीन बार टेस्ट हो चुका है प्राइस। ठीक है, एक लेवल पे मल्टीपल टाइम टेस्ट होता है तो लेवल थोड़ा सा वीक भी हो जाता है। फाइट चलेगी, देखते हैं कितने देर रोकते हैं सेलर्स। ये समथिंग अराउंड एक हमारा टारगेट हो जाएगा। एंड देन इसके नीचे कहीं सस्टेन करेगा तो फिर नीचे लो का टारगेट रहेगा। ऊपर कोई और लेवल दिख नहीं रहे तो लगा ही नहीं है फिलहाल के लिए। जाएगा ऊपर तो फिर देखा जाएगा। क्वांटिटी थोड़ी कम रखना, टारगेट बड़ा रख लो। ये ओवरऑल तो सुपर ही बुलिश बना हुआ है कल से न्यूज़ की वजह से। बाकी नेचुरल गैस में देखोगे तो नेचुरल गैस में जो एक करंट चार्ट आप देख रहे हो, दैट इज मार्च मंथ। ठीक है, मार्च मंथ का ही चार्ट है ये फिलहाल के लिए। ऑप्शन में ऑलरेडी एक्सपायरी हो चुकी है कल, तो अभी फ़िलहाल के लिए अप्रैल मंथ में ही ट्रेड करना पड़ेगा। बट जो फ्यूचर है नेचुरल गैस का वो अभी भी 2 दिन है एक्सपायरी में। तो आज वॉल्यूम है ठीक ठाक, तो मैंने मार्च का ही लगाया है, कल से फिर अप्रैल का लगा लेंगे। ठीक है, अभी मार्च का ही चार्ट है, अप्रैल का नहीं लगा रहा हूँ मैं अभी। मुंबई सेशन ओपन हुआ था, लंदन सेशन ओपन है अभी फिलहाल के लिए 12:30 के बाद, न्यूयॉर्क सेशन 5:30 और 7 PM पे यूएस मार्केट की ओपनिंग रहेगी। उसके अलावा अगर देखोगे तो 6:30 पे इंपॉर्टेंट डेटा है गोल्ड और सिल्वर को, और 7:30 पर ये भी गोल्ड और सिल्वर को इम्पैक्ट करेगा। बाकी नेचुरल गैस मार्च मंथ का चार्ट देखोगे तो कल एक छोटा सा सेलिंग का ट्रेड था, उसके बाद सपोर्ट से थोड़ी बहुत बाइंग आई थी, फिर साइडवे चला गया था। अभी भी सेम ही लेवल है, ऊपर रेजिस्टेंस अभी मैं मान के चल रहा हूँ स्ट्रॉन्ग ही माना जाएगा। ठीक है, दैट रेजिस्टेंस एरिया एंड अबव दैट इज स्टिल स्ट्रॉन्ग, नो डाउट अबाउट इट। यहाँ तक पहुँच जाए तो यहाँ से वापस सेल कर सकते हैं। नीचे अब मेजर सपोर्ट रहेगा डाउन साइड पे, यहाँ पर आपका 317 से 320 के अराउंड। एंड इम्पॉर्टेंट थिंग क्या है वो है करंट लेवल। देखो एक करंट लेवल मल्टीपल टाइम टेस्ट हो गया, यहाँ पर रिगरसली टेस्ट हुआ था, उसके बाद फिर कल यहाँ पर भी 2-3 बार टेस्ट कर चुका है, अभी भी वहीं पर रुक रहा है। तो यहाँ से बाइंग हो सकता है आ जाए, क्वांटिटी कम ही रखियो। ऊपर कोई रेजिस्टेंस और बना नहीं है, मेजर रेजिस्टेंस अपर लेवल पर ही है, वहाँ पहुँच जाता तो बेटर रहता सेलिंग करने के लिए। बट जब तक ब्रेक नहीं होगा तब तक कंसिडर जरूर करेंगे इस लेवल को। डेटा का ध्यान रखना, इम्पैक्ट जरूर डालेगा शाम को। बाकी नेचुरल गैस में ऊपर जो सबसे ऊपर टॉप में रेजिस्टेंस बनाया है और सबसे नीचे वाला जो सपोर्ट बनाया है, बोथ आर गुड सपोर्ट रेजिस्टेंस। इन पे भी आ जाए तो भी अच्छी बाइंग सेलिंग देखने के लिए मिलेगी। देखते हैं ऊपर कहाँ तक जाता है ये। 339 के ऊपर अगर निकला तो वेल एंड गुड, नहीं निकल पाता है 339 के ऊपर तो प्रॉब्लम। क्वांटिटी कमी होनी चाहिए। क्रूड में फिर रिपीट कर रहा हूँ, क्वांटिटी कम ही रखना, ठीक है, टारगेट बड़ा है, मल्टीपल टाइम टेस्टेड लेवल है। नेचुरल गैस भी देखो, मुझे तो ये साइडवेज ही लग रहा है। अगर ये 339 341 के ऊपर कहीं सस्टेन कर गया तभी ये ऊपर जाएगा, नहीं तो ये तो या तो साइडवेज या फिर और फॉल कर सकता है नीचे वाले सपोर्ट के एरियाज के आसपास। अगर ये इस लेवल के ऊपर सस्टेन नहीं करता है, इसको मैं रिमूव कर देता हूँ, इसकी ज़रूरत नहीं है। 41 के ऊपर नहीं गई कैंडल तो नेचुरल गैस का बहुत मुश्किल हो जाएगा ऊपर जाना, या तो यहीं पर साइडवेज। वैसे नीचे आ जाए तो बेटर ही है, इतना कंसंट्रेटेड लेवल है, रिमूव करने में ज़्यादा अच्छा रहेगा, फिर एक सपोर्ट रह जाएगा, यहाँ रेजिस्टेंस बन जाएगा, ये भी बढ़िया है। इस लेवल को एज अ रेजिस्टेंस मान के चलते हैं। ठीक है, इस जोन के ऊपर सस्टेन हो जाए अगर ये, तभी कुछ है। नहीं होता इस जोन के ऊपर सस्टेन तो फिर मुश्किल हो जाएगा, एज आई सेड। नेचुरल गैस में थोड़ा वेट करना, ठीक है। नेचुरल गैस में फ्रेश एंट्री बनाने से पहले थोड़ा वेट करना। या तो ये 341 के ऊपर एक बार क्लोज करने दो, या फिर थोड़ा और नीचे आने दो इसको। क्रूड ऑयल के रिगार्डिंग स्पेसिफिक नहीं, तो क्रूड ऑयल के रिगार्डिंग तो ऐसी कोई स्पेसिफिक न्यूज़ है नहीं। कोई स्टेटमेंट आ जाए कहीं से तो उस पर मैं कमेंट नहीं करूँगा, ऐसी न्यूज़ तो नहीं है अभी तक, टिल नाउ।
One question.
Can you share how your information about war plans against the Houthis in Yemen was shared with a journalist in The Atlantic? And were those details classified?
You're talking about a deceitful and highly discredited so-called journalist who's made a profession of peddling hoaxes time and time again, to include the hoaxes of Russia, or the fine people on both sides hoax, or suckers and losers hoax. So this is the guy that peddles in garbage. This is what he does. I would love to comment on the Houthi campaign because of the skill and courage of our troops. I've monitored it very closely from the beginning. And you see, we've been managing 4 years of deferred maintenance under the Trump administration. Our troops, our sailors were getting shot at as targets. Our ships couldn't sail through. And when they did shoot back, it was purely defensively or at shacks in Yemen. President Trump said, no more. We will reestablish deterrence. We will open freedom of navigation, and we will ultimately decimate the Houthis, which is exactly what we're doing as we speak from the beginning, overwhelmingly.
Why were those details shared on Signal, and how did you learn that a journalist was privy to the targets, the types of weapons used, and
I've heard I was characterized. Nobody was texting war plans, and that's all I have to say about that. Thank you.
News when you want it with Bloomberg News Now. I'm Valerie Teitel.
And I'm Stephen Carroll.
The Trump administration is confronting a major security breach after a journalist was inadvertently added to a group text by U.S. National Security Advisor Mike Waltz. The group chat in the Signal messaging app was used to discuss details on plans to bomb Houthi targets in Yemen. It included the U.S. Defense Secretary, the Vice President, the Secretary of State, and the Director of the CIA, along with other top officials. Speaking to ABC News, The Atlantic's editor-in-chief, Jeffrey Goldberg, said that he at first thought the group was a hoax.
It seemed completely absurd to me that the national security leadership of the United States would be meeting on a messaging app to discuss forthcoming military action, and that they would also sort of invite the editor of The Atlantic magazine.
Jeffrey Goldberg went on to say that at one point, Defense Secretary Pete Hegseth shared a post that included what he said were operational details of forthcoming strikes on Yemen, including information about targets, weapons the U.S. would be deploying, and attack sequencing. Speaking after The Atlantic published the story, Hegseth sought to dismiss the claims in an exchange with a reporter.
How did you learn that a journalist was privy to the targets, the types of weapons used, and
I've heard I was characterized. Nobody was texting war plans, and that's all I have to say about that.
Hegseth's efforts to play down the leak came as the White House National Security Council spokesman Brian Hughes said the message thread appeared to be authentic, and they were reviewing how an inadvertent number was added to the chain.
The private texts among top US officials also revealed how some members of Trump's administration feel about their European allies. With more, here's Bloomberg's James Woolcock.
A back and forth between Vice President J.D. Vance and the Defence Secretary Pete Hegseth will make for particularly troubling reading in many European capitals. A user identified as Vance in the chat wrote of plans to strike Houthi targets, quote, "I just hate bailing Europe out again." Hegseth reportedly responded 3 minutes later, quote, "VP, I fully share your loathing of European freeloading. It's pathetic." White House National Security Advisor Mike Waltz goes on to say that the US would tally up the costs associated with the strike on the Houthis and levy them on the Europeans at Donald Trump's request. The US president claimed to be unaware of the breach when asked about it at an event later Monday. His spokeswoman, Caroline Levitt, said in a statement he has the utmost confidence in his national security team, including Waltz. In London, James Woolcock, Bloomberg Radio.
Donald Trump says his tariff rollout on the 2nd of April will feature rates on a country-by-country basis, corresponding to trade barriers on U.S. products. Speaking to reporters, the president twice signaled that trading partners may be given exemptions or reductions.
We may take less than what they're charging because they've charged us so much. I don't think they could take it. In other words, they've charged us so much that I'm embarrassed to charge them what they've charged us. But it'll be substantial, and you'll be hearing about that on April 2nd.
Trump's comments sowed further confusion about his plans for a sweeping tariff announcement scheduled for next week, which he's dubbed Liberation Day. The president also said he planned to proceed with tariffs on auto imports over the next few days, as well as measures targeting lumber and semiconductors down the road.
HSBC is considering outsourcing parts of its trading business to save on technology costs. Bloomberg has learned that internal discussions have been held at the bank about sending some of its fixed income orders to an outside market maker like Jane Street or Citadel. In a separate exclusive interview with Bloomberg, HSBC's CEO Georges Elhedry stressed the importance of the bank's wider restructuring drive.
We're also looking at the what we do and recognize that there are further focus that we can achieve in our business, where we will be taking $1.5 billion from activities that we are currently doing that are either non-strategic or non-returning.
George Al-Hedri there speaking to Bloomberg at the HSBC Global Investment Summit in Hong Kong. He went on to say the bank expects to double down on investment banking in Asia and the Middle East after exiting key businesses in Europe and the US.
The governor of the Bank of England says Britain needs a breakthrough like artificial intelligence to break out of its low growth trap. Speaking to students at Leicester University, Andrew Bailey said that advanced economies like the UK need productivity enhancing technologies to sustain their aging populations. The central bank chief went on to say he's not concerned about AI taking people's jobs. The speech comes as the financial regulator told firms they can stop following more than 100 pages of guidance on mortgages and investments as a part of a government drive to slash regulation and boost growth.
US and Russian officials held 12 hours of talks over Ukraine and Saudi Arabia yesterday. The two sides are expected to release a statement detailing their progress later, but a Kremlin spokesman said that they discussed navigation in the Black Sea. The negotiations follow discussions between the US and Ukraine on Sunday. Ukraine's President Volodymyr Zelensky says strong measures will be needed to keep Russia on a path to peace.
We need a movement towards real peace, towards guaranteed security. And we all need this. In Ukraine, in Europe, in America, everyone in the world who wants peace in international relations. Russia is the only entity that is dragging out this war and mocking our people and the whole world. And to pressure Russia towards peace, strong things, strong steps are needed.
Zelensky and Trump still have not signed a pact to give the US part ownership of Ukraine's natural resources. Russia has continued to fire missiles and drones at Ukrainian cities during the talks. And those are our top stories on the programme. On the markets, the Stock 600 up 0.4%. The FTSE 100 is 0.5% higher. Turkey's benchmark stock index, the BIST 100, is up by 2.5%. Looking at Wall Street futures, S&P E-minis are 0.2 weaker. Nasdaq futures are down by 0.25%. The Bloomberg Dollar Spot Index up by 0.1%. That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Valerie Teitel, and this is Bloomberg.
Congratulations, Mr. President.
Well, he's back. And guess what he's talking about?
We will tariff and tax foreign countries to enrich our citizens.
This is a surprise to no one because it's one of his favorite subjects.
I do like tariffs. Tariffs, tremendous tariffs, tariffs that are massive. To me, the most beautiful word in the dictionary is tariff.
Trump has ordered federal agencies to investigate the impact of tariff policies, or in his words, recommend appropriate measures, like global tariffs, to fix these deficits. The topic was low on boardroom agendas under former President Biden, but since Trump's election in November, talk of tariffs has spiked.
The new president has promised to put tariffs on goods coming to the US from all around the world, not just from trading rivals such as China.
He's seeing tariffs as a leverage point to get other people to do what he wants.
In his first week back, Trump threatened to enact 10% tariffs on China, 25% tariffs on Mexico and Canada, and to use them as a tool to try to stop the Russia-Ukraine war.
Trade policy under President Trump has the potential to send shockwaves through the global economy.
Even if Trump's threats don't materialize, the mere thought of a trade war is already upending international relations and forcing companies to prepare for the worst.
I feel like a pawn in a big game of chess.
Let's start with what we know. Tariffs are government-imposed taxes on imported goods and services which increase the cost of imports. And that's the whole point, to make them less competitive compared to domestic products in a bid to help or protect local industries. Their use in the United States declined dramatically after World War II.
More and more, the cargo ships of the great trading nations are making New Orleans a regular port of call.
And in the globalized 90s, they became a dirty word.
No country can escape the global economy, and the greatest, largest, most powerful country in the world cannot escape the global economy.
Broadly speaking, everyone agreed that the freer flowing of goods and services lended to prosperity for all. But that kind of economic thinking has been turned on its head when it became clear that there are not just winners, but there are also losers from globalization. President Trump wants tariffs to raise revenue for the government. He wants tariffs to bring manufacturing back to the US. And of course, he wants tariffs to level the books with key trading rivals around the world.
While Trump frames his tariffs as a way of raising trillions of dollars to pay for tax cuts, it's worth taking a look at the numbers. The blue line is what the government is estimated to collect from existing tariffs over the next 4 years. Only a drop in the bucket compared to the black line, which shows revenue from income tax. Of course, we shouldn't forget that we have been here before.
President Trump's first term, when he implemented tariffs, it sent shockwaves around the world because it was breaking with convention.
Front page of every newspaper in the country right now, a dive on the Dow because of this trade war.
In Trump's first trade war, the scope of the tariffs was targeted toward capital goods and intermediate goods from China, and it was not a very large increase in tariff rates. So overall, it took average tariff rates from 1.5% to about 4.5% on overall U.S. imports. During that second half of 2019, the trade policy uncertainty was clearly having an impact on dampening business investment. So it de-escalated in late 2019 when the U.S. and China signed the Phase 1 agreement.
In the Phase 1 deal, China promised to buy at least $200 billion more in U.S. goods and services. But that didn't happen. Now, Trump wants to change that and cut a new deal with the Chinese government.
Until I came along, China never paid 10 cents to this country. They ripped us off and they never paid anything.
Even before Trump's Inauguration Day memo calling for a fresh look at U.S.-China trade relations, companies in China have been bracing themselves for a second trade war by chasing new markets and offshoring production to neighboring countries. The memo also singled out Canada and Mexico, using tariffs as leverage to achieve domestic policy goals.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people to come in, and fentanyl.
Whatever the motivation, it's American companies that could suffer the most.
U.S. auto industry has a very long supply chain that is very complicated, that takes many parts from many countries. A lot of this supply chain and auto parts came from Canada and Mexico. So imposing tariffs on Canada and Mexico basically effectively would be imposing tariffs on GM and Ford's production.
If he goes ahead with the kind of threats that he's talking about, then you would see question marks over how will that impact inflation, how will that impact where business puts their investment, how will it impact the flow of goods around the world.
Many U.S. businesses are trying to wargame what's coming next.
During the first Trump presidency, when tariffs were enacted, it was the biggest strain our company has ever seen. 100% of our products are manufactured in China. It took us 24 to 36 months to adjust the supply chain. I would estimate the spend to be around $30 million. If new tariffs are enacted, the costs are going up. And if our cost of goods sold goes up, unfortunately, the cost for everybody goes up. This is not a tax on other countries. This is a tax on you.
And that's really only the first layer of the onion, as you can't have a trade war without retaliation. Something that on the surface the U.S. might have an upper hand in.
China has more to lose than the U.S. because U.S. imports about 450 billion of goods from China, but China only imports 150 billion of goods from U.S. So even if China wants to retaliate against the U.S. tariffs, there's only 150 billion of U.S. goods to retaliate.
But China's intrinsic role in global supply chains could offer fresh methods of retaliation.
China dominates the production of some important metals such as germanium, gallium, and these are metals that are very critical to build semiconductors. So if China were to impose export controls on these crucial minerals, that will have knock-on effects in U.S. ability to build up the AI industry or build up semiconductor plants.
I'll bet it all.
And as with any fight, things can get personal.
So in the first Trump administration, EU, in retaliation to the U.S. steel and aluminum tariff, imposed 25% tariffs on U.S. bourbon from Kentucky, with the explicit goal of making Mitch McConnell, the Kentucky senator, unpopular. And similarly, China decides on what to retaliate in order to hit at the red states, the agriculture centers in the U.S. And so the industry that could suffer from a retaliation from our trade partners could range from agriculture, winemakers, and automakers.
But like all policy, the devil is in the details, something the international business community anxiously awaits. The how and the when and for how long all remain unknown, and that uncertainty takes its toll on the economy.
The challenge becomes, are you protecting against the risk of tariff? Or are you protecting against the risk that expected tariffs are not going to be put on?
It's been found that when uncertainty on trade policy increased, what you have in a couple quarters down the line tends to be economic slowdown.
When Trump was last in office, news coverage of trade policy uncertainty was high. It dropped under Biden and stayed low, but now that Trump's back, so is the uncertainty.
I can't tell you if our cost is going to go up by 0%, 10%, or 25%. I have no idea what's coming. And when you're having vague conversations with your big customers, they don't like it.
Ultimately, how this trade war impacts both the US and global economy will depend on the specifics. We'll have a long way to go before we can truly count the costs and the benefit of it.
Against individual countries or groups of countries. And so this is just the environment we're in, and it means that for companies and for economies, they've got to adapt to that.
Roz, I mean, the other question, and I imagine that one of his big pillars is trying to get cheaper energy, including cheaper oil, is actually what's happening in these Russia-U.S. talks on Ukraine. Are we closer to something?
Well, they had very, very long talks yesterday. We understand that the US officials are back talking with Ukraine officials again this morning, so they seem to be pushing towards something. We know these conversations were very technical. Yesterday focused very much on the Black Sea and maritime traffic, so probably some arrangements around that, to your point about making sure that, you know, everything can leave Ukraine, including grain potentially also, which is important for a lot of regions around the world. And so can you get certainty around trade and maritime traffic, whether it's going to extend to something broader than that, or it's a bit of a sort of Lego ceasefire where you're stacking ceasefires on top of each other again, and you get the energy arrangement, then you get the Black Sea, then you get something in terms of the situation on the ground inside Ukraine with territory. So it's a bit by bit move, but we are expecting some kind of statement from the US and Russia collectively at some point today, and it seems they are gearing up to announce something, but it's probably more around the Black Sea.
And Yari, how should we look at the energy complex for Europe? Again, if you look at inflation pressures and the fact that we still don't know whether tariffs hurt growth more than they bring up inflation, how should we look at the price of oil?
Yeah, I mean, this is one area where over the last few weeks there's, of course, been some relief for Europe. I mean, oil a little bit, but mainly gas. Yeah. So when you look, for example, at the cutoff point for the ECB staff projections in March and what has happened since then, a weighted average of oil and gas is down almost 15%. So I think it does help in terms of the inflation outlook. Mm-hmm. We, of course, have also seen some appreciation of the euro recently that, again, helps you with the inflation outlook. And so we do think that despite all this uncertainty around trade, that we are on track in terms of the inflation picture to converge to 2%. And I think the ECB can take comfort from that despite all these uncertainties that we're talking about.
Okay, thank you both. Our Bloomberg EMEA News Director, Ross Matheson, and Yari Sten stays with us. We'll also talk, of course, about the spring statement. Coming up, Donald Trump says he'll announce tariffs on autos in the coming days. We'll examine the potential impact on Europe's car industry. That's next, and this is Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart. a focus on your story, our legacy.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Stories of corporate redirection, one that worked for New Balance and one that didn't for Hertz, and the business of video gaming as the world waits for Grand Theft Auto 6.
It's still the standard bearer for the industry, and that's kind of astonishing.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome back, everyone. European auto stocks higher this morning, brushing off President Trump, saying he'll announce tariffs on autos in the coming days. Well, still with us, Yari Sten, Goldman Sachs' chief European economist, and we're joined by Craig Trudell, who leads Bloomberg's global autos coverage. So thank you both for either sticking around or joining us. Craig, cars, I mean, are they going to be really in the firing line of the Trump administration?
I think, if we go off of what he's been saying consistently, not just for years, but for decades, it's been that, when he talks about trade and when he talks about the way the U.S. is treated, even by countries that we would consider U.S. allies, that he strongly views cars as being a sort of front and center example of the ways in which there are inequities and how U.S. cars are treated relative to other countries. Now, is there nuance to that? Is there reasons that U.S. cars aren't desired elsewhere in the world?
I was going to ask you.
Important question.
I mean, it's true. I mean, there are not that many Fords, right?
Correct.
I mean, maybe there are a couple of Ford Mustangs, which is a good-looking car, but there's just not that many, cars driving through European cities. Is it the size or is it regulation?
I think size, regulation. I think importantly, a lot of the Fords that you do see here in Europe are made here in Europe. So what need is there for Ford to import into European countries? And you have GM, the biggest U.S. car maker, essentially absent from Europe, right? They pulled out years ago when they sold Opel and Vauxhall. So you have these sort of structural, issues where, there's not really a sort of way in which Europe can sort of answer his criticisms by saying, sure, we'll open up when the companies aren't even trying, in the case of GM.
Yeah, how much do you look at, Yari, car makers, frankly, have had a dismal run, full stop, in Europe for a number of reasons. How much do you look at the car makers, manufacturing sector as, I guess, a benchmark or a blueprint of what Europe needs to do to fix it overall?
Yeah, I mean, I think it's clearly been under pressure in the firing line for a while. I think you've kind of seen both cyclical effects, but also structural forces, headwinds. I mean, the auto tariffs obviously would be another negative on top of that. But I would also say it's pretty widely expected at this point. I would also say, reiterate a point made earlier that a lot of the production of German cars is actually in the US, to the US market and so on. So you kind of need to take all that into account. And the macro effects, I think, of these car tariffs are clearly negative, but not as big as some of those broader uncertainty effects we talked about earlier. I would mention one other point that I think is interesting in conjunction with the German fiscal package, which of course is raising spending massively, as we heard earlier. And And there's a big question around capacity. Does the German economy actually have the capacity? And one sector where there clearly is capacity is in manufacturing and in cars. And so I think that's going to be an interesting question for the next couple of years, to what extent Germany can kind of repurpose some of the spare auto capacity, into other sectors, into defense, into sort of other manufacturing goods.
Craig, I'm looking at Tesla. Why is it doing so badly in Europe?
I think, people jump to Elon's politics potentially being at play here. I think we're going to find out in the next few months just how much that is having a real impact and how much of this has been a really important changeover that they have within their lineup. The Model Y was in need of a bit of refreshing. It debuted back in 2020. They've redesigned it, and that was going to cost them weeks of production in the first quarter. And it takes time, of course, once you've done that changeover for that production to ramp back up. So really dismal start to the year for the company in Europe and honestly globally. I think the first quarter numbers, there's real concern about that report coming next week from the company, just how bad the numbers are going to be.
I also wanted to really focus on the UK because of the spring statement, but I don't know whether there's a difference in terms of car usage in the UK compared to the rest of Europe. But spring statement, of course, tomorrow. It's quite exciting to see the changes that the Chancellor may or may not put in place. Does she restore her fiscal headroom? I mean, does she have any other choice, frankly?
So I think the spring statement really is about the updated OBR projections and then how the Chancellor responds to that to restore headroom. So the updated projections are likely to show pre-measure somewhat negative headroom, mainly because interest rates have gone up since October. And then the Chancellor is expected to respond to that by trimming some of the spending commitments. So I think the comments imply it's very unlikely that she's going to change either the fiscal rules or raise taxes for this event. So the signaling has been in the direction of some welfare spending cuts, some departmental spending cuts to the tune of 10 to 15 billion, which would then roughly restore the headroom, the pretty small headroom, but the headroom that we had in October. So I think that's quite likely for tomorrow. But in some ways, the bigger question is, of course, where we're headed for the rest of the year and into the budget in October and what the fiscal pressures are going to be for the rest of the year.
I mean, how does this country grow, I think, is the ultimate question that, investors will want to know. Is there a clear blueprint from the government reducing some of the planning, even reducing regulation, that you think will really kickstart the UK?
Yeah, I think in the near term, what will be important will be to get lower interest rates coming through. So I think a priority at this stage is not to jeopardize Bank of England rate cuts by, for example, raising taxes that could have inflationary effects. So I think that could give you a little bit of leverage in terms of growth over the next few quarters if the Bank of England does cut as we expect them to do. But longer term, obviously, the productivity growth statistics are poor. I think two areas that the government has talked about are planning reform, as you mentioned. I mean, there's the mechanical effect of building more houses that helps GDP, but actually the more interesting effect is if you allow workers to move towards big cities where productivity levels are higher. So you want to try to create scale effects and boost productivity growth that way. So I think that's one interesting initiative. And then the other one is, of course, around trade, closer trading relationship with Europe, where most estimates would suggest you can get some productivity lift from that over the coming years. So I think those are the two longer-term initiatives to focus on.
And Craig, I mean, if you look at the buying of Teslas as a benchmark of wealth, are the Brits buying new EVs?
I do think it's interesting. I mentioned Musk's politics, and of course he's inserted himself both in Westminster and in Berlin, right? And it has been interesting to see, in the early goings of this year, they've actually had a bit better of a time here in the UK versus Germany, and it's been pretty dramatic. Where in Germany we've seen 70+% declines versus relatively moderate gains here in the UK. That may have something to do with the fact that they are highly reliant on Chinese production for this market, and maybe had some inventory to work with earlier this year.
So interesting. Thank you both for joining us. Yari Stender, Goldman Sachs' chief European economist and Bloomberg's global autos editor. We like calling him the Auto Tsar, Craig Trudell. Coming up, we'll be joined by Rishi Khosla, co-founder and chief executive of Oak North Bank. We discuss the fintech environment ahead of the UK spring statement. We'll also talk about loans and some of the tariffs, what kind of impact he sees for the companies they service. This is Bloomberg.
The top names in business are on Bloomberg.
Is an IPO possible now for you for Ripple?
Well, it's certainly something that is possible. The United States SEC under Gensler was so hostile to this industry. I mean, ironically, they approved the S1 from Coinbase and then sued them for doing the things they said they were doing. So this SEC, fortunately, is going to be, I think, very constructive and positive for this industry. That being said, it isn't a huge priority. You know, I think most companies are going public. Raising capital is something that is high on their radar. You know, we have been in a very fortunate position to be able to grow the business organically. We're also, frankly, more proactive in looking at acquisitions. This is an industry that finally is going to be able to thrive in the United States, the largest economy in the world. And I think the industry is still underestimating the shift from the headwinds to the tailwinds. That's going to make a bigger difference than people think. And finally, the U.S. market is really unlocked.
Nobody covers business like Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top headlines. More trade uncertainty as President Trump says auto levies will be announced over the coming days. Now, he also appears to invent a new economic threat, warning of secondary tariffs. Tesla's dismal run in Europe continues with a 40% drop in sales in February. Car makers on the continent also see a broad drop. Plus, HSBC targets growth in Asia and the Middle East after exiting key businesses in Europe. And the U.S. will have more of our exclusive interview with the chief executive, Georges El-Hadary. Now, it's also crunch time for Rachel Reeves as she's set to announce billions of pounds of spending cuts in her spring statement on Wednesday. Now, it will be a make-or-break moment for the Chancellor, who had promised stable public finances and a single major fiscal event a year. For more on this, we're joined by Philip Aldrich, Bloomberg's senior UK economy reporter. So thank you, Phil, for joining us. I feel like every time we say make or break, it's make or break. But actually, this is going to be a quite delicate one because she promised cuts, which she probably can't deliver.
Yeah, it's a tricky one. Obviously, she's going to supposedly make about £10 billion of cuts. Some of it will probably be done within the spending review envelope. Some of it will be in the final year, which is always being characterised as a fiscal fiction because these don't have to be sort of costed into departmental spending plans. But some cuts, I think, will be taken off the envelope and be real. And so departments are going to feel it. And obviously, you're already getting a backlash from Labour MPs about the welfare cuts. We're going to see spending cuts in some unprotected departments in particular, there's likely to be more complaints about that.
Yeah, so, I mean, she's facing pressure, frankly, from all sides, right? The public, MPs, millionaires or billionaires. Like, how is she going to land the plane?
Well, I think that there's one constituency which they've become really focused on, and that is Bloomberg's sort of core client base. It's the markets, right? Everything went a bit wrong back in October because she left herself so little headroom. There was no insurance against any sort of changes in market interest rates or any changes in the sort of economic outlook, and that has basically been the sort of backdrop to a lot of the problems since. So one of the key things she's going to do is restore the headroom, because she's effectively she's lost about 15 billion. She's -5 is where she starts, having been at plus 10 billion pounds in the October budget against her fiscal rules. She is going to, we think, going to restore that headroom, which will provide some reassurance to investors that she is focusing on this economic stability that she says all of the growth plans that they have are built upon. So I mean that's basically the bedrock for what they're going to be announcing next week, to try and rebuild confidence in their plans.
Yeah, so because the spending review is a big one. I mean, there's so many. Like, what is actually the biggest for her? There's the OBR, there's spring statement, and the spending review. Well,
I guess this is the biggest immediate issue, because the OBR is going to cut the growth outlook. It's going to show that she did make a mistake back in October at the budget, and there is potentially going to be a warning that this is just a prelude to even worse forecasts that, in the autumn budget. The OBR has got this heroic assumption about productivity. Should they downgrade their productivity forecast, it will blow a hole in her numbers, come October, November time again. So, this really is the key event. The spending review is going to be ugly politically, because it's at that point that you start to identify who's going to bear the burden of the cuts, and then people will really see what's coming through in public services. But in the meantime, there's also the details of the welfare cuts that they outlined last week, where we'll identify how many people and who are going to lose these benefits. And so, Labour they're not elected to make people poorer, but the accusations are already coming out that they're going to leave some people who are already poor worse off.
Yeah, it's going to be a definitely bumpy ride politically for them. Thank you so much, Phil Aldrich, there, our senior UK economy reporter. Now, a reminder that we'll also have special coverage of the Chancellor's spring statement from 12:30 p.m. London time, March 26 tomorrow. Let's also discuss the UK's fintech environment ahead of the spring budget. My next guest is a co-founder and chief executive of Oak North Bank, a digital business bank for entrepreneurs. Now, as Labour tries to revive London's struggling listing market, Oak North has recently expanded its U.S. presence by acquiring a Michigan-based bank. Well, Chief Executive Rishi Khosla joins us now. Rishi, thank you so much for joining us. Now, first, I want to start about the UK, and then I want to ask you why you're so attracted by the U.S. lending market. But I mean, are you frustrated with the UK market? We have a new government in place. There's been a bit of up and down. There's the threat of tariffs. It doesn't look like it's a pretty picture.
So look, we set up Oak North really to help entrepreneurs, right, starting here in the UK. Over the last 9.5 years, we've helped create something like 56,000 new jobs through the lending that we've done to entrepreneurs in the UK. I think fundamentally the way to have a positive environment in the UK is to have growth. The best way to have growth is to have the human capital which drives growth, i.e. the entrepreneurs, right? So creating an environment which is very fertile to actually attract global entrepreneurs to come and set up in the UK, in various cities in the UK, in the same way that you have almost a dozen cities around the world which are setting up their stall to attract those entrepreneurs. I think that's what the UK needs to do much more of. It needs to lean significantly more into that contingent. And again, very specifically, I would call out those growth entrepreneurs versus the CEOs of big PLC type multinational companies, because their level of productivity gains that they give when they come in and invest is significantly smaller, although the dollars may be larger.
But Rishi, I mean, this is a problem, is that actually there was so much in the autumn statement from the government that it's unclear whether they're entrepreneur friendly or not. They're trying to do things like, cutting planning, making things quicker, trying to revive growth, even, putting pension funds to put more money in UK companies, the smaller UK companies. At the same time, they increase NICs. So do you think they're business friendly?
I mean, overall, you come out of the autumn statement and it's hard to say they're business friendly, right? I mean, absolutely trying to unlock the pension money to come into private companies, great. But over what period? Over 3, 4, 5 years? I mean, the challenge in terms of some of the measures from the autumn statement is that you cause an exodus of entrepreneurs out of the country, right? And you're telling global entrepreneurs that the UK is somewhat indifferent, right, or arguably even worse, to actually attracting you to come and establish your businesses here or grow your businesses here. Whereas I think we know what we need to be doing exactly the opposite. And, I'm forever the optimist, so maybe there's something tomorrow.
But do you think, I mean, again, have you seen an exodus of entrepreneurs saying, look, I'm going to look for capital elsewhere, I'm going to be... I mean... Is it easier 100%. To do a business in the US?
There are so many cities, again, I specifically call out cities versus countries, cities which are setting up stall, right, to attract those entrepreneurs, and whether that's, Milan, whether that's Abu Dhabi, whether that's Singapore, whether that's various US cities, New York, Miami, etc., Austin, there is a lot of incentives and effort going in by those cities to attract those entrepreneurs. And do we see them leaving from the UK? I mean, the stats, I think, which are shared from Henley and Partners at least, shows that the UK had the largest loss of millionaires after China. And obviously, we're sort of, a 20th of the population, if not less, of China. So that's a pretty stark stat.
Rishi, does that hurt how much does that hurt your business actually in the UK? I know you're also looking at, listings. What would it take for you to list here?
So look, we continue to grow here in the UK. We continue to support British entrepreneurs, right? In terms of overall size of our business today, compared to market size, we're less than 1% of the market. So our ability to continue to grow, and there will always be great entrepreneurs to support, and we're there to support them. So does it hurt the business? I would say it doesn't hurt the business. We continue. And yes, we are expanding in the US, right? And we have been over the last 2 years or so. And that continues to go incredibly well. In terms of listing, who knows?
Who knows? Very diplomatically put, you recently acquired Community Unity Bank. This is a US bank with a license. Why buy a bank with a license instead of looking for your own US license?
So number one, we signed the deal subject to regulatory approvals. Okay. So closing will be whenever we go through, get past the regulatory approval process. Why buy a US bank rather than go through a de novo process? Fundamentally, we found a relatively small bank which had an excellent team, which had already gone through the process and had just a very aligned culture and view of the world, and therefore that acts as a small springboard to our plans. Fundamentally, I think the assimilation of that team into our culture is one which is going to be easy and therefore very logical.
Rishi, what's drawing you to the U.S. market right now, given these tariffs and some of the uncertainty surrounding the U.S. market globally? I have to say, but also the U.S. market.
I was going to say, look, we started the business since September 2015. There's only been uncertainty, obviously with Brexit in the UK, and then all the way through to today. So living in an uncertain environment, I think, is just the new norm. And fundamentally, if you look at the U.S. market, it's over $4 trillion versus $500 billion in the UK for us. So in terms of just general market size, it makes sense to play that. And also the US has evolved in terms of moving away from pure bank funding. And as OakNorth combining private credit, fintech, and commercial banking elements for our customer base, it's sort of the US is a market which already accepts alternative finances. So ultimately, a great place for us to expand.
How much do you want to grow in the US?
A lot.
What's a lot?
I mean, look, we've been, if you look over the last several years, the business has been growing about over 20% a year very consistently, right? I think our baseline is to continue that growth profile over the next years. Obviously, that means much higher growth in the US comparatively off a smaller base. So continuing that overall trajectory.
But is it because you actually found a gap in the offering, or is it because you just think the pie will grow for everyone?
There's absolutely a gap. In the whole idea behind setting up OakNorth was the fact that banks generally focus very well on either retail customers and consumer customers and micro businesses and or large businesses. And in the middle, you get this whole contingent which just gets, in a way, underserved, overlooked. And it's that market, the lower middle market, the missing middle, which is our core focus. And that's the same in the UK, it's the same in the US, it's the same in pretty much every market. So there is a gap, and ultimately that gap, in our view, is the highest productivity element of any economy, because that's where the growth businesses are.
Yeah, I mean, again, in the middle of tariffs, it's not an obvious choice, right? It's a brave choice, I would say.
Setting up the third new bank in 150 years in the UK was a relatively brave choice. So,
what surprised you the most since you set it up?
You know, it's just been the ease of actually getting into the market and the velocity under which we've been able to build. So we are already about 3 times the original plan that we expected in the US. So just the velocity of activity in the US is just very significant, even in environments which are bumpy. Like just the entrepreneurial spirit, those animal spirits are just so strong.
I know you won't say much, but are you thinking about IPOing, or is it not, one of your priorities at the moment?
Look, the last time we raised equity capital was 6 years ago. We've been profitably funding our growth ever since, and really since we started the business. So it's not an imperative.
And the markets is volatile. I mean, does that come into your thinking, or also your clients' thinking?
I mean, look, the way the public markets have evolved over the last decade has just been relatively adverse for issuers, right? If you compare it with where it was. So if you look at liquidity, if you look at sort of passive versus active, etc., you look at the volatility levels, you sort of say, if you need to, it makes sense. But ultimately, if there's a choice, you evaluate options.
Yeah, and it feels like private companies actually have been doing okay. I don't know whether, again, that conversation has changed over the last couple of years for you.
I mean, ultimately, being a private company, I think, has a lot of benefits. Again, if you're a consumer-facing business and being public actually gives you a massive branding uplift, or if you're a continuous issuer, you need to continue to fundraise, totally different. The capital markets actually work extremely well. But actually, if you don't have those dynamics, being private actually takes away a lot of noise.
Rishi, thank you so much for joining us today. That was Rishi Khosla there, the co-founder and chief executive of Oak North Bank. Now, the chief executive of HSBC has told Bloomberg that he plans to double down on investment bank operations in Asia and the Middle East after exiting key businesses in Europe and the U.S. Well, George Alideri says restructuring will save $1.5 billion. We spoke to him exclusively at the bank's Global Investment Summit in Hong Kong.
So what we announced is we will be incurring about $1.8 billion of cost, essentially severance cost.
Okay.
That the saving, most of the decisioning for that will take place this year. Most of it will take place in the first half of the year. That the benefits will start materializing this year, where the $300 million benefit will come this year. That the benefits will materialize in full by the end of full year 2026. So the full year 2027 will benefit from the full $1.5 billion saves that we're targeting. What we also committed that these will be permanent saves going forward, and that we're taking these saves straight to the bottom line. So it's a payback period of effectively roughly 2 years, but it's a permanent benefit that we will achieve.
And then the other component there is a further $1.5 billion, which I was looking at your earnings statement, and it was page 11 or 12, I think, of the strategic review. And the way you phrase it there is a reallocation of those costs into growth businesses. So I think it's a two-part question I have is, if you're reallocating costs, is that a net savings? Is $1.5 billion net savings? And what exactly are you looking at doing? Because there's not a lot of detail on that.
Yeah. So the organizational simplification benefits, which are efficiency saves, not impacting revenue in any material shape, $1.5 billion, those will be taken to the bottom line.
This is my office. They can feel how proud we are contributing to this destination and building something for the nation. I love it. It's my dream job. Come to the Red Sea Mountains and regenerate your body.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Is the worst finally over for this market, or, well, is it simply the eye of the storm? Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Alex Steele. Welcome back, by the way.
Thank you. I'm so glad to be back at work.
I can imagine he's just so brimming with happiness. All right, let's get a check here on the markets. It is definitely a relief rally underway. The S&P up 1.6%, right around the highs of the session, despite the fact that President Trump said that automaker tariffs are coming sometime soon. Lumber and cars and chips maybe as well. Equity markets taking it in stride, a bit into the NASDAQ. You have a sell-off in the Treasury market. Look at that back end there, up by about 8 basis points. And gold also selling off. Classic risk on trade, Romaine.
I don't want to jinx it, Alex, but it does look like, at least in the equity market, maybe there is some actually conviction to this rally. 57.18, that was the market open on the S&P. That was also the low of the day, and that does suggest a degree of conviction here, which is setting us up for what is actually going to be the first back-to-back daily gain for the S&P since mid-February. That optimism, of course, rooted in the bet that the Trump tariffs may end up being more precise and less of that scattershot that had rattled investors for the past few weeks. Even Morgan Stanley's Mike Wilson is feeling more optimistic, seeing scope for a, quote, tradable rally as oversold momentum, stronger seasonal performance, and quarter-end flows support a rebound. The optimism, though, dependent on follow-through from the White House on being more precise. So until we see a more deliberate approach on that policy, Wilson and other Wall Street strategists are still urging folks stick to high-quality stocks as a natural hedge against volatility and economic risk. That economic risk front and center with a report on consumer confidence tomorrow morning that economists expect will reflect anything but confidence. A PCE report on Friday that will likely show core price inflation rising at double the pace consistent with the Fed's 2% target. And then, of course, there was that report this morning that showed U.S. manufacturing slipping back into contraction while sentiment among services providers deteriorating once again. Alex, what's going on?
It's that soft data, right? Just does not look good, which raises the question, are we eventually going to be in a stagflation scenario? So growth kind of middles along, and then you wind up having inflation moving higher. So Bank of America had this great chart out that took a look back to stagflationary periods to check out what actually did really well. And they say quality and cash return momentum did really well, right around 5%. Where you don't want to be is risk, growth, and value. So if we are going into a stagflationary environment, where are those quality opportunities? On the flip side, Julian Emanuel of Evercore ISI said, look, we've hit or we're near peak uncertainty, and you could also see now recovery in stocks as that pessimism has really come out. And Romaine, it feels kind of binary from that direction.
Yeah, absolutely. Well, let's get some answers maybe out of our first guest. Mira Pandit joins us. Global market strategist at J.P. Morgan Asset Management. Great to see you. It's been a while.
It has.
I think the last time, at least we've spoken to you in the show, was kind of before some of the market ructions that we've had. We had that correction, which I guess now is a thing in the past. When you look at the price action today, and even kind of what we saw towards the tail end of last week, does that give you a little confidence that maybe the worst is behind us?
It's certainly good to see that volatility has come down. The VIX is back below 20, and markets are somewhat stabilizing here. But we haven't quite seen that recovery in the overall market yet. I do think we need to see a couple of things in order to have a more durable, sustainable recovery in markets and a more degree of stabilization. One would be that valuations are still about 22% more expensive than their long-time averages, so seeing a little bit more of a re-rating there. Earnings expectations are still about 270 on the S&P 500. We'd like to see that be a little bit more realistic, in line with how companies individually are guiding for the future. If we think about once we actually see earnings come down a bit, that's going to artificially then push valuations up, so you have to see a bit of a feedback loop there. 3 would be to continue to see some pretty solid economic data. Jobs, CPI, retail sales have looked good. More recently, industrial production, some of the housing data around existing home sales, housing starts, have showed that maybe some of the January slump was weather-related. And then if we think about tariffs, the talk of the town today is seeing somewhat of a consolidated strategy around tariffs. It's not that they necessarily need to go away, because we don't think that they will. But if there's at least some degree of markets being able to price in and out things that are and aren't subject or in scope, that's helpful.
Is the political risk, the policy risk, I should say, I know it's not gone, but has it been minimized to a little bit, or is it still elevated to the point that investors should at least be cautious?
It's still elevated. Investors should still be cautious. It's hard to say what the next step is here. While there's a lot of optimism around April 2nd and seeing, again, that consolidation of the tariff narrative, we don't know if that's it. It certainly probably isn't. And there could be some upside risk to policy here. There are certainly things like deregulation and the M&A and IPOs that might bring along with it, or tax cuts that could start to provide some upside policy risk here. But overall, we're still in wait and see. I think the good news in terms of markets is that equity markets are starting to catch up to where yields landed, because yields went on quite a big slump for a while there and have somewhat stabilized, and the equity market is now, I think, catching up.
So does that mean quality? Does that mean value? Does it mean growth? Where in the equity market?
It means that if you're getting back into the equity market, we still don't want to just jump into the index level, because while the Mag 7 are down about 12% year to date, the concentration issue is still there. So while some of that has been passively allayed to some extent, it's still mostly there. We want to think about being a lot more selective. And actually, outside of tech, consumer discretionary, the rest of the sectors within the S&P 500 have moved higher. You've also seen that if you look at stocks and their 200-day moving averages, about 40% of stocks are above that. A year ago, that was 80. So clearly, this is not a momentum rally anymore, but certainly there are still pockets of the market that are doing well.
There is a narrative out there that you want to move away from, say, U.S. exceptionalism towards countries that are actually fiscally expanding, like a China, like Europe. Do you guys over at JP Morgan feel the same way?
A bit of a mix. I would say areas like China, you've already seen the rally start to fade a little bit. And as much stimulus as they might want to do, I think there's somewhat of a cap in terms of wanting to continue to foster quality growth and deleverage, right-size the property sector in a sensible way. We have seen this story before with China, a couple of different 20% rallies over the years, and usually they do fade. Europe is a different story where you're seeing that optimism there. And if you look at the composition of the rally so far in China and Europe, what I think is most interesting about the European rally is not just the multiples component, which you're seeing consistently across the board, but the currency component. Because to me, that points to the fact that while from a rates perspective, Europe is probably headed to 2%, the U.S. might be headed to 4% right now. But from a growth perspective, that U.S. exceptionalism story is cooling off a little bit as growth moderates. But there's actually potentially some acceleration in growth in Europe. And that's how currency has become such a big factor there, too.
I'm also curious, too, about that European trade, because some of that was also based on this idea of just structural changes, the idea that they would have to increase, Europe as a whole would have to increase defense spending, as well as other types of spending that normally, I guess, would have drawn or sort of would have pushed more towards the U.S. side. And that's why you're seeing some folks there. That hasn't really changed, though, right? I mean, even, if he backs off on tariffs and backs off on this, Europe's not somehow going to do an about-face and say, OK, we're going to re-embrace America again, or are they?
Well, I think that they could play the best of both worlds, really. To not have trade as a headwind anymore would be great, but also to continue to move towards greater self-reliance, because I still think this is an aha moment, not only in terms of defense, but also when we think about bureaucracy wanting to be innovative and self-reliant on their own. Some of these knock-on impacts, I think, is gradually tweaking the psychology within Europe, and those provide some pretty powerful catalysts to start to get earnings to contribute a bit more to the rally, and some of the earnings revisions have been positive.
So how do you then, if you're looking at the totality of your portfolio, I mean, how do you diversify? Because some of that diversification over the last few weeks was geographic, right? European stocks versus U.S. stocks. Some of it was also had to do with, momentum and growth and other growth factors. Is there sort of a reliable diversification strategy now, or is everything unreliable?
The unloved areas have done remarkably well this year. When we think about Europe, when we think about value, positive over growth, which is still negative. Again, Europe double-digit returns relative to the U.S. down. Duration has been an area that has really helped portfolios as well. So it's essentially everything that people thought coming into the year would continue to be unloved and that have been reluctantly held in portfolios for the sake of sensible diversification is actually winning. Because so many times over the last couple of years, when we've looked for something more defensive, it's actually been tech. And that hasn't been the case so far this year. So the diversification is working.
All right, cool stuff. Mira, great to see you again. Always great insights. Mira Pandit, Executive Director and Global Market Strategist over at JP Morgan Asset Management, kicking us off to the close on this Monday afternoon. A big focus on tariffs and the consumers that are spending wisely as the world remains on that tariff watch. A catch up just in a little bit with Michelle Meyer, Chief Economist at MasterCard.
Looking forward to that. Plus, Guggenheim analysts like what they see and they're pinning it up on their boards. Pinterest shares up today after an upgrade. We're going to talk to the analysts behind that call.
And we're building up to KB Home results coming out after the bell tonight, hammering out the details of those second quarter results. We'll do that just a little bit later. All that and more coming up in just a bit, right here on The Close on Bloomberg.
We're standing next to Desert Rock. It's one of the most unique places. The view, the quietness. Let's go! If you're adventurous or someone who just enjoys a picnic, Red Sea is the destination. Regenerative tourism helps you connect with your values.
I love this area. In the past, the people coexisting with the nation. When the visitors go home, I want them to remember the smile of the people.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart. A focus on your story, our legacy.
BYD sales surpassing the $100 billion mark in 2024, beating estimates, breezing past Elon Musk's Tesla when it comes to revenue. BYD has a range of EVs and hybrid cars packed with high-tech features and now 5-minute EV charging. Joining us to discuss for more is Bloomberg's David Welsh. David, why is BYD doing so well right now?
Look, they've got good products. They've got them at competitive prices. And all of the EV companies in China are really surging, but BYD has really been the leader in getting more sales in the EV segment there. Their plug-in hybrids are really good for certain buyers in certain markets, including China. And they've got some cool technological features. So you give them an open road like they have in China to grow, with the foreign automakers, GM, Volkswagen really struggling there. A lot of that's because of things the government is doing, but a lot of it is because the domestic cars are also very good. And it's a recipe for growth there. And they've done a very good job exporting as well. They're growing in Europe, they're growing in South America, and they're selling vehicles in Mexico now too. So they're on our doorstep. And there's really there isn't a major market other than the U.S. and Canada where they're not really making a big push at the moment.
Yeah, it'll be interesting to see if they can crack the U.S. market. I am curious, David, though, about how much this company has grown. Are they basically broadening the market for EVs, or are they actually taking share away from Tesla itself?
It's a little bit of both. I mean, they are getting buyers from Tesla, but you look at the Chinese market, and there are a lot of incentives and a lot of rules against straight-up internal combustion vehicles that make EVs the thing to buy. But they do have good technology. They've got low cost, so they can sell their vehicles and make money on them at lower prices than a lot of companies can. They've just got a supply chain for battery minerals and ingredients that just make it easier for them to sell these vehicles without having to charge a big premium like you see here in the United States. So they're getting some new converts, some new buyers, and they know their own market very well.
We can't buy those cars here in the U.S. Do you think at some point we will? And I realize that question's a little silly considering the auto tariffs maybe coming down the pipeline, but nonetheless.
Look, eventually I think we could, but there are some barriers to that aren't just the tariffs. And the tariffs are real. That's one of the reasons they're not coming here. The other is they haven't had to come to the U.S. because they have so much growth going on in other markets. But it's very difficult for BYD to sell a vehicle that would meet U.S. safety standards for the prices that they sell them in other markets. So their vehicles would be more expensive if they sell them here. For example, I know someone personally who bought a BYD vehicle. It's about the size of a Chevy Bolt, and it sold for, I think he paid $29,000 for it. and it gets less range than the Chevy Bolt did before the GM took it off the market. So, the stuff that they're going to be selling in this part of the world is not going to be super cheap like it is in China, but it's going to be very competitive if and when they do get here. But they would have to make the vehicles here. They would have to meet U.S. safety standards, and that's a whole different calculus than just exporting a vehicle here from the current park of cars that they're selling in China.
Yeah, particularly given the change in political climate over the last few months. David Welch, your man out there in Detroit, the headline of the day, BYD, the Chinese EV maker, now topping Tesla in terms of actual sales on a dollar basis and also matching them on a unit basis as well. And, Alex, I was just on vacation, in case you didn't hear.
You weren't here last week?
Yeah, I know you missed me. I was driving around the country, as I do, talking to real people. We actually rented an EV.
Oh, you did?
I'm not going to say what brand or make because I don't want to get myself in trouble here. I was a little disappointed in the experience. We went through this whole process of thinking we were going to buy an EV last year, and we ended up getting a hybrid.
Yeah.
And we actually drove one of the EVs that we wanted to buy. The range was concerning.
So meaning that it just drained really fast, and that's what was upsetting about it?
And it drains even faster if you're like at 50%, it drains faster if you're 100%. So there was all this, and then it was always, we have to find where an EV thing. And keep in mind, for our viewers, we were in California, so there were plenty of EV stations, but they were still spread out pretty far, and you really had to do a lot of math and calculus and making sure that you were going to be at the right place at the right time, whether the charger was going to be a fast charger. When we plugged it into one charger, and it was it'll be 100% charged at 2 a.m. Which was like about
7 hours
9
later.
hours later, right? And it's like, okay, well.
Which is interesting because it was California, which is the area where they have a lot of stringent rules in order to sort of reignite EV adoption. So you'd think that the charging stations would be a little bit different. Do you feel like, does the hybrid work for you?
Yeah, it does.
Okay, so you like the hybrid?
Yeah, you fill it up a couple times a month.
And you feel good about that?
Yeah, I do, sure.
Okay.
All right.
Good
Thank
chat.
you. This is a nice conversation.
I'm glad we had this conversation.
And I'm back, Alex.
Here.
All right, we're going to take a look here at what's been going on with Pinterest. Those shares actually popping today after an analyst over at Guggenheim boosted their rating. That's coming up.
Guys, natural gas को देखोगे थोड़ा बहुत रुक सकता है इस एरिया पे ध्यान रखना वैसे तो साइडवेज ही है नीचे सपोर्ट ऊपर रेजिस्टेंस कल वाली रेंज में फंसा हुआ है फिलहाल के लिए स्टिल कोई मोमेंटम नहीं है रेंज के बाहर यहाँ पर रुक सकता है इस जो छोटा सा एक जोन बनाया है ऊपर आ जाए अगर क्लोजिंग दे देता है 341 के ऊपर देयर इज अ वेरी हाई चांसेस ऊपर चला जाएगा 349 350 तक अगर 341 के ऊपर क्लोजिंग नहीं आती है तो फिर या तो साइडवेज इसी रेंज में या फिर हाई चांसेस भी रह सकते हैं कि ब्रेकडाउन होकर नीचे सपोर्ट पे आ जाए एग्जैक्टली क्योंकि एज जो मैंने कल मेंशन किया था मल्टीपल टाइम सपोर्ट हो चुका है एक ही लेवल पे देखना पड़ेगा अब कितने बायर और एनकाउंटर है यहाँ पर सेलर्स के साथ बाकी नीचे आता है तो रेजिस्टेंस और सपोर्ट ऊपर दोनों ही इंटैक्ट है नीचे 318 320 का सपोर्ट इंटैक्ट है ऊपर रेजिस्टेंस 349 350 का इंटैक्ट है ये मार्च का चार्ट है याद रखना अप्रैल का चार्ट नहीं लगाया अभी वैसे एक्सपायरी हो चुकी है ऑप्शन की फ्यूचर की कल होगी बाकी क्रूड ऑयल मॉर्निंग पे फ्लैट ओपन हुआ था फिर कंटिन्यूसली न्यूज़ के बाद मार्केट ओपन इक्वल लो बनाते बनाते कल वाला ही रेजिस्टेंस है वहीं पर आ गया था इस एरिया पे मैं पहले ही बता चुका हूँ मार्केट ऑलरेडी दो बार रेजिस्टेंस ले चुका है पास्ट में ये थर्ड टाइम आया है यहाँ पर क्वांटिटी कम रखना टारगेट बड़ा रखा है एसएल जाएगा तो निकलना भी है बाकी और कोई लेवल यहाँ पर बना नहीं है नया एसएल हिट होता है तो देखते हैं फिर ऊपर कोई नया लेवल अभी यहाँ पर है नहीं बाकी डेटा 6:30 और 7:30 5:30 न्यूयॉर्क सेशन ओपनिंग यूएस मार्केट फिर 7 बजे ओपन होगा इंडियन मार्केट भी क्लोज हो चुका है ऑलरेडी
To their social media peers of really extracting revenue from that user base. How's that going?
Well, I think it's going very well for them, and I think they're really well positioned to see some continued momentum throughout the year. As you mentioned in the lead-in, we believe they will grow faster than the industry average. They will be an above average grower. And remember, this digital advertising industry is a high growth space in and of itself. So we're looking for some healthy teens growth both this year and into 2026. And we think that's a function of them taking this great platform that they built, really nurtured and drove a lot of usage and a lot of engagement within the user base. And now they're really turning on a successful monetization engine that we're attracted to. We think we have a good opportunity to buy it at a great valuation here.
I mean, what's kind of the secret sauce in that? Because when we talk about monetization, we're basically saying, like, look, we put something in front of you. In theory, there's going to be some follow through. You're going to click on the link, or you're somehow going to follow through with some type of a purchase or other types of engagement. Is there something unique that they're doing that the others aren't?
Well, I think the real uniqueness of Pinterest, first and foremost, is that people go to Pinterest with purchase intent. So that's the thing to keep in mind. For most social media platforms, the monetization in the form of advertisements is an interruption to the experience, right? In the case of Pinterest, the advertisements actually enhance the experience for most of the visitors. And that's why you see a situation with Pinterest where I mentioned they've grown their users. They've grown their engagement and the frequency of visitation and the length of visitation, and they've even grown the impressions that they serve. So they're able to provide more advertisements even while seeing more engagement, right? So you're not degrading the experience; you're actually lifting the experience through monetization, which is very unique to Pinterest amongst social media peers.
Which is such a great point. Like, you're going there at the express point of looking to buy something. So the spend that they've done on AI, it's obviously done really well in terms of attracting user engagement. Is that AI spend, though, like capped out, and they can just can kind of recoup and go from here?
Yes, so it's a little bit of both. When we look into the coming year, I think you will see them invest and actually invest at an even higher level with respect to their tech investment growth in 2025 versus 24, but not faster than the top line. So you will still see profitability growth and margin expansion for the company, albeit at a little bit of a lower rate, which we don't have a problem with because what they are investing in has already proven to be successful. So we see the company investing in these AI-enabled processes that include everything from helping their advertising partners with their creatives. And that's great when you want to get into medium and small sized businesses and help them when you can provide that creative service for them. But it's also about getting the right advertisement in front of the right person at the right time and then measuring the performance of that advertisement so advertisers themselves can feel comfortable with putting more money to work. So really several fronts that they're showing success on with the use of that technology that they will lean more into in the coming year, even while growing their profitability.
So, Michael, that is the Pinterest specific upside. What about the macro economy and consumer? Like, what's the relationship between consumer spending and Pinterest, because that could be a risk?
Absolutely. It is the largest risk in the near term, in my opinion. So I'm not making a macroeconomic call here per se. We do a lot of work on the advertising market health in general. We speak to advertisers, we speak to the companies, and there's certainly a little bit of shakiness in the market right now. I think less so on performance-based advertising, those types of advertisements you see on digital platforms that have things like click to go to a new site or perhaps make a purchase. That advertising has held in better than the so-called brand advertising, which tend to just drive awareness. That said, I think it's very difficult to say there will not be any more incremental pressure at these advertising platforms. Okay. However, I think that expectations for Pinterest as I look into the second quarter and the balance of the year are conservative at this point. So we do like the setup from a tactical perspective. And also, I believe that the advertising market in general over the longer term will be healthy and very durable. And this is not just a cyclical story here. This is a secular story that Pinterest is able to seize on and be a beneficiary of. And that's why we're using this sort of pullback on the economic concern and the advertising concern as an opportunity to get long the shares.
All right, Michael, thanks a lot. Really appreciate it. Michael Morris, CFA and Senior Managing Director at Guggenheim Securities. My daughter's birthday cake and decorating a house. Those are the two things Pinterest love, my jam.
Yeah.
But that's not consistent. But
yeah, I know a lot of people use it to plan parties and weddings and things like that. So maybe my next party I can
was like,
try to
your next wedding? Like, what are you saying?
No, gosh, no. It's a bit.
But do you really plan your own parties?
Yes, I do. As you know, I'm pretty controlling, Alex Steele. But yeah, I've already thought ahead to my. And isn't your birthday coming up?
No,
it is.
It is
actually,
absolutely not coming up.
You know what? Egg party for Alex.
Egg party?
Wheel out the melon cart.
What's an egg party?
You're going to find out.
Okay, great. All right, coming up, you got consumers watching their spending. You got new tariffs set to be announced on April 2nd. We're going to speak to Michelle Meyer, chief economist over at MasterCard, to get an idea of what they're spending on, what they're holding back on, and how much they're putting on their credit cards. This is The Close on Bloomberg. Happy Monday, everybody.
.30 p.m. here in a rainy New York City. This is the countdown to the close. I'm Romaine Boston.
I'm Alex Teal. Aren't you glad you came back to New York with
I
this
love it.
lovely weather? So
incredible.
great. So clearly we're around the highs of the session, which is extra interesting because the PMI data that we got from global S&P earlier was not great. Manufacturing contraction again. Services, the headline number was okay, but if you take a look at expectations in terms of services, it was rolling over.
But should I be worried about that? I mean, because it seems like all the bad stuff are expectations. It's not really the hard data in terms of what's happening in the here and now. So can't those expectations change?
Absolutely.
Okay.
So does it get deferred and all of a sudden it doesn't transfer into the hard data, or does that soft and then negative soft data actually translate into no buying? Well, good for us that we're not going to answer that question, but Michelle Meyer will, chief economist over at MasterCard Economics Institute. The negative data that we've seen, do you expect that to become part of the hard data in terms of consumer spending?
I think, as Romaine said really, really well, which is we just really don't know, right? Most of what we're seeing now is the expectation starting to roll over in the survey data. And for good reason. There's a ton of uncertainty right now. And a lot of that uncertainty is coming from potential policy changes, trade, top of mind, tariffs. We're going to learn a lot more potentially on April 2nd. But until there's clarity, I think expectations are going to remain a bit low because of that discomfort about what's to come.
So do you get the impression that consumers are delaying purchases, or are they going into heavy purchases now just to avoid tariffs, or are they just going to put them off altogether?
Look, I think there's a lot of cross currents right now for the consumer. So when you first take a step back and you think about, okay, what are the fundamentals for the consumer? Have they changed since the end of last year? And I think largely the answer is no. Job creation is still running at roughly the same rate. There's been a sell-off to some extent in the stock market, but when you think about the wealth effect, that happens, it's cumulative, and it happens with a lag as consumers respond to it. So maybe there's a little bit shift to wealth effects, but most of the research would suggest that takes a long time for that to roll out into the data. So for the most part, the fundamentals are roughly the same. The big factor that has changed is the unknown on the horizon, that uncertainty, right? And potentially some of the tariffs already kicked in are starting to show up in terms of price increases on the margin. I don't think in a big way yet. You can certainly see that from the CPI data. So I think it's really about what's on the other side that's making consumers a little bit uncomfortable, but you're not seeing a big shift in terms of the trends.
Well, and I am curious, though, too, when we talk about expectations, if expectations are sour and we say that affects spending in the here and now, like what gets deferred? Is it like, okay, I'm not going to buy a new washing machine, or is it something like I'm not going to take a vacation?
Well, I think if you're looking to buy a new washing machine, you probably want to do that soon, right? Like I think that is the tariff story where people may actually look to pull forward some of that spending. And we did see that to some extent when we look at this card spending data. We pulled out durable goods like appliances, and there was an acceleration at the end of last year and into early January. So potentially that was consumers trying to get ahead of the tariffs. Hard to know the drivers for that. But I think when you look at the breakdown of spending, so here's another good example, right? When you think about food spending, that's a choice that consumers make. Do they go to the grocery store and eat at home, or do they decide to go out to restaurants? When we look at grocery store spending, it's been trend-like. It's been very stable. When we look at restaurant spending, you saw lots of strength right around the holiday season. Prior to that, a trend of about 5% or so year-over-year growth. It certainly softened in February, kind of flatlined a bit. More recently, it's looking like it's returning to trend. Is that uncertainty? Is that weather? Is that the typical February lull? Is that the timing of tax refunds? There's so many dynamics that are out there that I think it makes it really hard to dissect what's actually happening.
Are you seeing any meaningful difference let's assume people are still spending. Are you seeing any meaningful difference in whether they're paying with cash or they're willing to buy things on credit or other types of debt?
Well, I think for that, looking at the Federal Reserve's G19 data, monthly consumer credit installment data, or the New York Fed's quarterly household survey, both of those are good. And again, very trend-like. You're not seeing things break or shift in a meaningful way that would indicate consumer dynamics are changing. The only thing that's breaking and shifting is survey data suggesting that consumers are worried about what's to come.
Have you ever seen something that divergent before?
Oh, for sure. We've seen periods where survey data says one thing and real data said up. In fact, this most recent episode with COVID creating uncertainty, policy changes, again, being a little bit up in the air following that, and big inflation swings left consumer sentiment surveys, particularly the University of Michigan sentiment survey, to suggest a pretty tepid environment for the consumer for a while. Yet all the hard data, all the real spending was still coming in very strong. So we constantly had conversations in the last few years about, well, why is sentiment saying one thing and actual spending saying another? And in that situation, it was because consumers were facing unwanted price increases that were making them uncomfortable, but they had the ability to still spend.
Right, they didn't like it, but they could still afford it.
But they did it, yeah.
So my takeaway from what you're saying is that things are fine. There are worries, but there are no actual cracks in anything that you've actually seen yet.
To me, it's going to be very much a function of the labor market. At the end of the day, for consumers, it's the health of the labor market. It's whether or not consumers are employed today, how they're seeing their wage growth evolve, and whether or not they think they'll be employed tomorrow. And when you look at initial jobless claims, they're staying at low levels, absent, of course, some of the layoffs announced in the federal workforce. And we'll see what the next jobs report reveals. But certainly last month showed pretty trend-like job creation.
It's kind of interesting, too. I mean, we get some more survey data this week. We talked about the conference board, and I think you, Mish, at the end of the week. We also, though, get some interesting hard data, particularly, obviously, the PCE data that the Fed pays a lot of attention to. That's still deteriorating or rising or whatever the phrase is. Basically, inflation's still here.
Yes.
Or at least above target of where the Fed wants it to be. Are they more concerned about that right now? Or, as you just pointed out, the labor market? Can they look to the labor market as a salve and say, look, as long as we're not seeing any massive job losses, maybe we can bear a minor uptick in that inflation rate?
Yeah, so there's a few things that I'd offer on that front.
Yeah.
First, absolutely, I think the PCE report is going to be important, not just for inflation, but also to understand personal income trends and savings rates. So very keen to see what that data shows. We have the retail sales numbers. We have card spending numbers like we track. But absolutely, that complete picture is going to be important to see income, spending, and savings. And then to your point around the Federal Reserve and how they navigate inflation versus jobs, of course, they have a dual mandate. To me, when you listen to Chair Powell in the most recent meeting, he was emphasizing the labor market quite a lot, especially if you have temporary shocks to inflation because of tariffs. They're going to have a hard time being able to determine price level shocks versus something that's more sticky when it comes to inflation.
Yeah, just real quick, we only have about a minute left, but you mentioned savings. If that number is going up, is that considered a bad? I know economists kind of look at that as being bad for the economy because obviously it's not money in theory going into the economy.
It depends by how much. If you have a shock up in the savings rate, then it would suggest precautionary savings could be happening. But when you look at how things are trending for aggregate wages based off the last jobs report, which is a very good indication of what personal income will look like, it doesn't seem like it's going to be a break.
All right, Michelle, always a pleasure. Michelle Meyer, chief economist over at the MasterCard Economics Institute. A lot of data on tap this week, including consumer confidence data, PCE, as well as home sales. When we come back after the break, a closer look at the market as we get closer to the closing bells, and a closer look at the shares of the decking company AZEK, rising on news that the Australian-based James Hardie Industries is going to acquire the company. We'll talk about that next in our Stock of the Hour. This is Bloomberg. AZEK, that's the name of the company, and it is the biggest mover in the Russell 1000 this afternoon, up 17%. This after reports that the Australian company James Hardie Industry agreed to acquire the company for almost $9 billion US, and some of those investors in James Hardie aren't happy with the news. Those shares, which are based over there in Sydney, actually were down 15% in trading over there. Drew Redding joins us right now from Bloomberg Intelligence to talk a little bit more here about this deal. And I just want to kind of get to the nuts and bolts of it because I was going down the rabbit hole. I wasn't too familiar with James Hardie, but they get the majority of their revenue from the U.S. They're buying a U.S.-based company that in theory is going to sort of create additional exposure to the U.S. But this does seem to be a very deliberate bet on the idea that the home building sector in the U.S. will be supportive of this for the company that basically makes decks, moldings, and other things.
Yeah, it's a great point. After the deal on a pro forma basis, they'll be about 80% exposed to North America. And I think it's a long-term play on the housing market. I think the company acknowledges that in the near term, there are some consumer challenges out there. And I think that's what you're seeing reflected in the shares of James Hardie. I think investors are just a little bit skeptical of the opportunity in the near term. But if you look longer term, I mean, AZEK has one of the best growth platforms in the building product space. Not only from a company perspective, but from an industry perspective. If you think about the composite decking space, it's only about 24% of the total market. The industry as a whole has taken about 100 basis points a share annually, and they think that market could get to about 50% of the total decking market in about 10 to 15 years. So I think it's more of a long-term play on what we call material conversion from wood to composites.
Drew, what do you make of the number? $8.75 billion?
Yeah, a healthy price for the stock, and I think that's what we've heard from a lot of people on the James Hardie side. The announced deal was about a 20 times multiple on 2025 EBITDA for AZEK. So look, I think if you're an AZEK shareholder, you're certainly happy with this. One, because of the full value of the deal, but two, because as we mentioned, despite the strong long-term growth opportunity, when you factor in some of the near-term challenges with the macro situation, I think you're happy with this overall.
So it gets to this idea that assuming this deal goes through and they do this, are we going to see additional M&A activity? I mean, I see all the other home products companies are rallying on the back of this. Is that just kind of wishful thinking?
Well, there has been a couple deals. You had Home Depot last year doing a big deal for a products distributor. You had QXO doing a deal for Beacon Roofing last week. Now you have this one. So I think some people are looking at this with the stock price is down over 30% over the last couple of months, maybe as an opportunity to start, building their platform. So when we do get to the other side of this growth slowdown in the housing market, they're in a better position.
Do you think we'll get any more bidders coming in here for AZEK?
I think it's possible that you see some strategic bidders, but I don't know that there's a whole lot of them, just given the hefty price tag and the full multiple. I think you have companies like maybe a Fortune brand or Masco who might be less interested, and it really has to do with just the price tag of the deal. So, I do think people are interested because of the strength of the AZEK platform, but we'll see. It certainly is possible.
All right, Drew, really appreciate it. Thank you so much. Drew Redding of Bloomberg Intelligence joining us there on that potential deal. So we're still right around the highs of the session. We're up by 1.7%, although options for the next 2 weeks are definitely looking at some implied moves of almost 1% either way in that window. That's according to Citi, because you got jobs and you got tariffs.
Yeah, you got a lot of potential volatility up ahead here for the markets. But, I mean, if you're looking for a silver lining, I mean, I do think that if you do a daily chart here, I mean, you are seeing real conviction in buying. This isn't sort of one of those where we get the big pop, that big gap up at the open, and then it just kind of fades through the day. This has kind of been up and stayed up.
No, totally. I'm still skeptical, but I'm like gold bars and soup cans under my bed. But we're about 15 minutes away from the closing bell. We're going to break it down with Paul Christopher, Managing Director and Head of Global Market Strategy at Wells Fargo Investment Institute. We'll see if he feels as positive as Romaine here. If you're looking at the S&P, up almost 2%. Happy Monday.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Welcome back to The Close. Just 10 minutes until we get to those closing bells. Romaine Bostick here alongside Alex Steele. The S&P 500 setting up for back-to-back daily gains. But look at this. Just looking at the chart, Alex Steele, going to close above that 200-day moving average. I mean, barring a big breakdown in the next 10 minutes.
I appreciate I was poo-pooing this just a second ago. Yeah. But then I looked. The Mag 7 rallying the most since mid-January. The Russell seeing its best day since November. So the best day this year. Same for the SOX, the semi-index, rallying the most since December. So we are seeing some pretty powerful moves here. but can it last?
Wow. So are you a believer
No,
now?
but can it last is still my question. But I can't deny the superlatives.
Yeah, absolutely. And I mean, look, if you go across the tape, you look at the technicals, it's not just stocks here. You're seeing that drop in the VIX. It's interesting to see the price drop that's going on right now in the Treasury space here, and don't really have much concern right now when it comes to the FX market and commodities not getting in the way, at least for today, of the equity rally. Paul Christopher joins us right now, Managing Director and Head of Global Market Strategy at the Wells Fargo Investment Institute. And Paul, we focus so much on these day-to-day moves in the market. I do want to focus a little bit more long-term for a second, because we've seen these ructions back and forth, and there does appear to be a willingness to come into this market and buy, assuming investors have some confidence or reassurance, at least, that maybe whatever chaos, whatever policy volatility is coming out of Washington, that will be minimal and manageable. Is this that moment?
Yeah, I'd like to say so, but I'm a little bit more on Alex's side with this one, where this anticipation that next week's tariff announcements will be targeted and narrow. That may or may not happen, as we've learned already from the president. He likes to kind of get his negotiating partners thinking one way, and then he takes them another way. So that does seem to be what's driving the markets here, but we'll really have to wait and see until next week.
Well, then what sort of becomes the investment thesis? And I'm talking more the long-term investment thesis here. Do you make a play to, say, domestic companies? Do you make a play into tech? Do you buy just, European defense stocks? What?
Yeah, so our basic view is that the tariffs are negative for the economy, but not negative enough to derail the growth that we expect this year. We don't think there's a recession. You'll see some people on Wall Street have elevated their or raised their recession probabilities, but maybe from 5% to 25%. That's still not 50%. So tariffs can be adjusted to. People adjust to taxes all the time. And we think we're going to see some flexibility and some adjustments, some substitutions that are going to be made for a lot of companies, not all, but for a lot of them. And so that leads us to think, okay, if you're going to have growth, then you're going to have earnings. And if multiples have been compressed here, that means there's room for multiples to rise, especially if inflation slows and rates stay low. So what we think is what we want to do here is maybe avoid some of the volatility in long maturities, long investment grade maturities. Take some of that money out, put it in shorter term maturities, protect some of your capital. Meantime, go to the middle part of the yield curve, 3 to 7 years, pull some of that money out. Let's put it into U.S. equities. We still think the U.S. is the best, and we're already overweight large caps. So we kind of like mid caps here, potentially as ways to deal with tariffs if mid caps become a source of suppliers, a source of supply to some of those larger U.S. industrial firms.
Oh, that's interesting. So would that, for the mid caps, be a play on, say, quality and safety, or a play on a cyclical recovery, or a totally third prong?
It's a play on quality and safety for right now. But if we do get the growth that we're expecting, and we do think growth will accelerate into year end because we're going to have some tax cuts, we think deregulation probably plays more of a role as time goes by than it does at its inception, let's say earlier in the year. So growth figures we think to pick up. And at that point, we think you might even see some cyclical opportunities popping up. And by the way, on the large cap side, we still like cyclicals there, too. So we've got that bet already in place. We like industrials, we like financials, we like energy.
What about tech?
On the tech side, we put a marker down on an overweight to communication services a while ago, and we're still waiting for a good price to get in there. But we do see some good prospects for tech going forward. We just didn't feel like paying multiples of 30, 35, 40.
So when we talk about economic conditions overall, Paul, and how that feeds into the economy and ultimately feeds into corporate earnings and then, of course, market prices here, is there a sense that the economic growth story that has sort of provided us with that American exceptionalism or whatever we want to paint it, that is at least still intact long term, despite whatever short term disruptions we may have?
Yes, that's right. Keep in mind that Europe, which has caught people's eye lately, European equities have risen, but they've had very, very cheap multiples. So if you introduce some policy uncertainty to the U.S., where's that money going to go? It's going to go someplace where it thinks the buying is cheap, and that's to Europe. And yes, to be sure, they're going to spend some money on infrastructure in Germany. They're going to spend some money on defense, but that's in the future. And how many countries can really afford that in Europe? And what's their energy situation going to look like beyond this year? When are we going to have Russia resuming gas sales to Europe? I don't think so. So they've got some serious issues longer term still to deal with. There's a reason why those multiples were low in the first place. A lot of regulation, too. We like the U.S. better.
All right. What's kind of the big risk, though, that you are keeping an eye on right now, Paul?
The real risk here is, coming from two sources, both policy related. One is what will happen with tariffs? Are they really going to be winding down here? Are the announcements going to be winding down here? Are they going to get more targeted? Or are they going to be more universal? And the second one is what's going to happen in this budget process? We haven't heard a lot about it so far. Yes, we got past the shutdown with a continuing resolution, but how are they going to pay for the tax cuts that the president wants? Is that going to mean a lot less spending or some taxes elsewhere going up? And that could be contractionary, more contractionary in government spending than what we had anticipated. That would be a little bit more of a headwind.
Before we let you go, I know you talked about mid caps, but the Russell is seeing a pretty powerful move today. At one point, the biggest rally since November 6th. We're at that high, but nonetheless, when would you like small caps?
We've been neutral small caps waiting for a nice cyclical play, but we need interest rates to be lower. We need much less policy uncertainty, and we need stronger growth than what we're seeing right now in the first quarter. So we'll hold on to that neutral for a little bit and wait for a better opportunity. We think the money is placed better. It will have a better outcome for investors in large and mids.
Paul, always great to talk to you. Paul Christopher, Managing Director.
Thank you very much.
Absolutely. And Head of Global Market Strategy at the Wells Fargo Investment Institute. Counting us down to those closing bells. 2.5 minutes to go, Alex Steele. The gains holding here on this day. A nice setup here for tomorrow. But, of course, a lot of economic data bodes for this market.
Well, also, and then the continued headline risk. Although I have to say, when President Trump was talking earlier and talking about auto tariffs are coming, for example, market just totally took that in stride. Maybe the dollar moved, but equities just were like, okay, and kept going higher.
Yeah, I think it seemed maybe they're kind of trying to parse the tone, and maybe the tone is a little bit different and a little less scattershot than before. But as you said, who the heck knows? We'll try to answer some of those questions as a global simulcast to break down all of today's action starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele. We're counting you down to that closing bell with a global simulcast that starts right now. Scarlett Fu in the TV studio, Carol Massar and Tim Stenovic in the radio booth as we welcome our audience across all of our Bloomberg platforms here on a relatively positive Monday afternoon, at least
for U.S.
because
equities. You're back, Romaine. Welcome back.
Thank you, Tim.
He brought the.
I was in your neck of the woods, Tim, out there in California.
I was out there too. Why didn't we hang out?
What?
I was out there the whole week.
Oh, okay. Well, there we go.
You were in Northern California
how close we are.
weren't you?
I was. I probably drove past the Stenovic household.
This is a little messed up because I was also out there.
Okay.
We were like ships passing.
All right, we need to talk after the show.
Okay.
Yeah.
Carol, I have no idea where you were.
You guys got to get your people to talk to each other so that you guys go out for a drink or something. I'm here and.
I know. You know how much you're going to save on a hotel if I just could have crashed at Tim's house?
Yeah, you probably would have called and just got his voicemail. I'm just going to say. No. Hey, what an interesting day. Futures were higher. We saw the market open higher. We saw momentum build, and we saw some buying into the close. So a positive day. We'll see whether or not it holds into the rest of the week.
Yeah, I mean, everyone's buying everything today. Bitcoin's even higher by 4%. You got Ethereum higher by 5%. XRP up 2.8%. It's not just equities. We're also seeing buying in crypto.
And everyone's looking past the manufacturing data that showed manufacturing contraction, also an increase in materials costs, which points to stagflation, kind of echoing what the Fed had indicated in its latest economic projections. But it's a worry for another day, I guess.
Yeah, and I'll just say it again. Looking at the Russell 2000, for example, the best day since November 6th. That ain't nothing from the day of the last election.
Yeah, and there are going to be a lot of superlatives here as we get the closing bell. You were pointing out early the Mag 7 as a group having their best day since, I believe, January. Consumer discretionary stocks, Best day since 2022, believe it or not. That's a big part of the reason why we're seeing the S&P up almost 100 points, or about 1.8% here on the day. The Dow Jones Industrial Average up more than almost 600 points, or about 1.4% here on the day, while the NASDAQ Composite is going to close out the day up about 2.3%. And the Russell 2000 getting in on the party, and more importantly, leading the party, a melon party, up 2.5%.
Yeah, that's pretty significant. S&P 500, guys, most names in the S&P 500 higher today. Scarlett, 424 to the upside, 78 losing ground today.
All right, let's show you the IMAP because it's pretty a pretty basic IMAP here. All green, with the exception of utilities, little changed on the day. And as Romain mentioned, consumer discretionary really in the driver's seat, up 4% as a group led by those auto companies. Communication services also gaining about 2%. And industrials in third place, up 1.9%.
It's not just auto companies, it's Deckers. Don't they make those like ugly shoes you like?
The Uggs, yes, they do.
Yeah.
Wow, harsh shade.
That's okay. He already shames me on the Birkenstock, so this just goes with the territory.
If you have bad feet, you need the Birks, all right?
I think Romain wears Birkenstocks with socks on the weekend.
100% does not.
Oh, come on. All right, let's get to some of the individual gainers, guys. Tesla finishing just off its best levels of the session, but still up about 12% here in today's trade. Number one gainer in both the S&P 500 and the NASDAQ 100, and leading really gains among the Magnificent Seven, as we talked about that whole group higher in today's session. I think just a sign that the risk on trade, is back on, but we've seen Tesla up several days in a row. So some upward momentum certainly in that one continuing. FedEx also a gainer in today's session, up about 5%. Reported earnings last week. Stock dropped when it reported earnings and cut its outlook again amid economic worries. Well, the economic bellwether actually rallying today. Jefferies turned bullish, confident in the company's ability to continue to grow earnings regardless of top-line trends as it executes on its cost-cutting plan. So investors liking that news and moving into that one. United Airlines up pretty much at its best levels of the session, up more than 7%, was a top gainer too in the S&P 500. United will begin charging customers more to access its airport lounges to help combat a rise in overcrowding since the pandemic. We're going to talk a little bit more about this when we get into some of the stories on our radar, but we'll get into exactly what they're going to charge for that. But nonetheless, this was a big-time outperformer today.
There were some good gainers today, Carol.
Yeah, thank you very much.
Sure thing.
Occasionally I get it right.
Hard to find decliners today. I actually had to go abroad to find some decliners because the U.S. market was so strong today. I do want to start with Supermicro Computer in the S&P 500. Shares did fall after Goldman Sachs cut their recommendation on the company to sell from neutral. As of the last close, though, the stock is up 38% so far this year, falling today by about 1%. And then Novo Nordisk, ADRs of Novo Nordisk here in the U.S. fell by 2%. It has been unseated as Europe's most valuable public company. Now, SAP, the German software developer, is on top. Novo lost the top spot in Europe after its shares roughly halved since reaching a record high. That was back in June of last year. The stock got another blow today after Intron health analysts downgraded their recommendation to sell from buy. And finally, to Brazil we go, where we find Embraer. ERJ US are the ADRs here, down 6% today. Wolf Research out with a note cutting its recommendation on the company to peer perform from outperform. Once again, shares down by about 6% today.
Do you have any Asian stocks on there?
No, not today.
Okay.
Maybe tomorrow.
All right.
Maybe next time.
You covered like 3 continents. So that's
I know.
pretty good.
People are buying overseas.
It was kind of grim for decliners here, guys. You know this.
All right, talk about decliners. Let's go to the bond market. It was selling pretty severe, pretty much all across the curve. Whether you look at the 2-year, 8 basis points, or the 10-year, also 8 basis points. And we have $69 billion worth of 2-year coming on tomorrow. And we have the economic data. Ira Jersey, Bloomberg Intelligence, says he thinks the takedown is going to be pretty good for the 2-year. And we get 5 and 7s later on today as well. He said you'd have to double the yield for you to lose money in the 2-year if you bought it right now.
Yeah, wow.
That's a lot.
I'm sorry, though. Can we just go back to something that Carol was talking about? Because she was talking about United Airlines, the stock rallying on these lounges things. You might be in trouble. But here's the thing. So you're saying, so United has finally recognized what we've all known for years now, which is these things are way too crowded, these airport lounges. So now they're going to raise the standards to get in there, right? The price or the miles that you need to get in there. And is that, in theory, that's going to drop the number of people?
Supposedly.
Or limit the number of people?
I mean, Amex
but they're only raising it from like $650 to $750, so it's like basically $100 difference.
Yeah, I don't know.
Do you use lounges, Carol Massar? You probably like to sit out.
I think I've traveled with you and seen you in a lounge.
Yes, actually, yeah, that is true.
Holding court in the lounge. I think I've seen you doing that.
Is true.
Well, I think Amex maybe last year or the year before changed their policy with the platinum card because too many people were getting in. So now you have to spend, I don't know, like a lot of money, $70,000 or $80,000 a year on one of the cards in order to get guest passes for free.
Yeah.
But yeah, I mean, these things, like everything else in life, is getting more and more crowded, and there's a willingness to pay for people. So we'll see if it actually makes a difference. But I think that it could be tough to decrease the crowd.
But increasing the fees from 650 to 750 is just 100 more, but it keeps some of the riffraff out, and it's the starting phase of increasing more, right? Oh my God, I can't believe I high-fived him on that. But no, the idea being that like once you start raising prices, you kind of set the precedent for doing it again and again and again. At some point, it'll get to the level of folks that Remain is comfortable with.
Wow.
You guys.
What will that be?
All I have to say is I spent a lot of money on my Amex, and my husband gets the perks because there's some weird sexist thing that it's like under his name and not mine, and it's very upsetting. So he can get to the Delta Lounge, and I can't. But I do all the work.
Wow.
Yeah. Harsh words.
Drama in the Steele household.
Yes.
Wow.
Riffraff there.
Okay. All right. Well, if anybody needs a laugh, we're going to move on to this. Great story. And I have to really credit Tim because he's like, you got to check this out. Do this as a gainer because initially this stock was really high in the pre-market. I think up like 16%. It was up more than 2% in today's session. I think finishing the day little change. We're talking about Primo Brands, and they are home to Saratoga Spring Water. And an influencer by the name of Ashton Hall has put out a video, and I can't believe we're not going to show it because it's really.
Have you seen? You guys have all seen this, right? In the memes over the weekend.
Wait, this is the blue water bottle, right?
So,
the blue glass water bottle.
So can I just say I saw this while I was on vacation. I had no idea what the whole point was, but I saw it just took over everywhere. I mean, I was more focused on. I was more focused on the fact that this guy apparently
he's trying to get into the lounge.
He looks way better than me on my body. So I was like, so I can drink this water and look like him.
670 million views as of this morning. Yeah. Okay, these videos. It shows sort of his routine, and the routine involves a very strategically placed bottle of Saratoga mineral water. And apparently investors, at least earlier in the session today, thought, okay, maybe this would lead to some sort of sale. A lot of memes over the weekend of people going out and buying bananas, filling up buckets of ice.
I'm sorry, I just have a question. Was what he did, the original video, was that supposed to be a joke or was he serious?
That's a question for him.
Because if he was serious, I have some concerns.
It looks pretty serious to me. Let's just say
because he's like dipping his face in cold water. He's putting on a little thing on his nose.
But those are for your pores.
You rub the banana peel all over your face. Did you see that part?
I did see that.
Okay, good.
I assume this guy has no wife and kids or any sort of responsibilities other than just taking care of his body.
There was a woman's hand that came in at one point and put a bottle down, I think.
I did see that.
So.
His assistant.
Little piece.
I'm still watching it, guys, so I'll get back to it.
Okay.
Oh, here's the banana. Okay, I get it now.
No, don't fall for that banana in the tailpipe.
All right, on that note, we're going to move along. All right, that's a wrap.
We've gone off the rails. Remember we used to always go off the rails here on Beyond the Bell or whatever we're calling this?
We used to.
Nowadays.
I don't know, closing bell, whatever.
Yeah,
I know. All right, that's a wrap. Our cross-platform coverage of the close on radio, TV, YouTube, Bloomberg Originals. Folks, good to have Romaine back. We will see you again, same time, same place tomorrow. I know Alex is going to head out. She's going to continue watching that TikTok video. Scarlett and Romaine continue on TV.
And when we come back, the show does continue with the discussion on how technology is rapidly affecting the globe's institutional markets. The conversation after the break. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. An interesting day on Wall Street. We've talked a lot about these rebound rallies that kind of start strong and then fade. That did not happen today. We had one of the biggest gap ups at the open in at least 1.5 years. And you know what? That open was the low of the day, the high of the day, pretty much what you're looking at right now, up about 1.8% on the S&P 500, more than 2% on the Russell 2000, which was actually your outperformer as far as the big indexes go. The Philadelphia Semiconductor Index also getting a nice rebound. And then keep an eye on what's going on in other parts of the market as well. You had a little bit of a pop in oil today and a little bit of a pop in copper. Of course, both of that tied to a lot of questions and I guess to some degree concerns here about tariffs and other Washington policies. But for now, I guess maybe we can revel in the fact that we got a little bit of green on the screen.
Yeah, led by technology, although there was one tech name and very few precious tech names declining that I want to focus on here. SMCI Supermicro Computer down 1% on the day after Goldman cut its recommendation on the stock to a sell from neutral, saying this downgrade reflects AI server competition as well as margin pressures. AZEK, meantime, jumping 17%. It did climb as much as 21%. This is the maker of outdoor home decks and pergolas. It's being acquired by Australia's James Hardie for $8.75 billion in cash and stock. And you're seeing that give a lift to other makers of home building materials like Knife River as well as Vulcan Materials. A lot of green in that sector right now. And that brings me to our top story this hour, which is about how the outlook for U.S. housing at a time when stagflation and recession fears are rising. And I mentioned the James Hardie AZEK purchase. We actually saw James Hardie shares plunge in Sydney, in part because this deal reflects a bet on the U.S. consumer spending to renovate and upgrade their homes in the face of a very uncertain economy and increased costs tied to higher tariffs. Now, we get a read on demand for starter homes with KB Home's latest results, as well as a snapshot on home price and home sales trends later on this week. Romain?
Well, as far as KB Home goes, Scarlett, unfortunately, is not looking good. Those results just crossing the wire right now. EPS in the most recent quarter, a miss, $1.49. The street was looking for $1.58. Revenue in the quarter, $1.39 billion. That's a miss. The street was looking for $1.5 billion. Deliveries in the quarter, 2,770. That's a miss, below what the street was looking for at 2,996. You see the market reaction there on your screen. Another headline also involving the company naming a new CEO, Robert Diller, going to take over as CFO of that company. We're going to dive a little bit deeper into that in just 1 second. There's a housing.
Let me take over. You need to get a drink of water. We're going to take over on that in just a moment because the housing market, Romain, is just one point of uncertainty tied to the U.S. economy. And with that word, uncertainty, absolutely affecting the markets right now. Shonali Tyson is global head of FIC, e-trading and market structure at Bank of America. And she agrees, Romain. She says we are in a choppier, less correlated market given some of the unknowns in this current environment.
Yeah, so great to have you. I am curious. You talk about this idea of sort of whether the market is healthy and whether the prices that we've seen, particularly over the last few weeks, whether that's a true reflection of price discovery. Does it seem like a healthy market to you?
Well, thanks again for having me back. It's wonderful to be here. And actually to be here at the closing bell for equities, it's really interesting because the Treasury markets now, the high watermark of volumes are really coalescing around that 4 p.m. as well. And if you look at the U.S. Treasury market, we actually think despite, as you say, the choppiness, the uncertainty, it's functioning quite well. Just this month in March, we've had 9 days over $1 trillion of average daily trading volume. That's pretty massive. And that number just continues to grow. So I think it's in no small part due to the fact that the resiliency of the ecosystem has gotten better and better. It's 60% in volumes is now electronic. The turnover in the market, if you look at relative to the roughly 29 trillion of debt outstanding, the market's turning over anywhere from 3 to 4%. That number's actually been accelerating recently. So I actually think that, we're doing quite well, all things considered.
When you look at, though, that turnover and the volatility, and we've joked a lot on this show about how, the bond market, which isn't really supposed to be as volatile as the stock market, how that's kind of outstripped recently. Is a sense, though, that the bond market might have things more right than the equity market. I know bond investors always think they're smarter than stock investors, but this does seem to be one of the times where you get a better read on market conditions based on the price action in the bond market than in stocks.
I would certainly say that the bond market is behaving in a healthy, more organized way, right? Again, looking at the U.S. Treasury market adjacently, the repo markets are functioning quite well. And also going back to what we were just saying, again, that resiliency of being able to trade and express views very quickly is happening. The repo market, for example, just a few years ago was 0% electronic. Now it's almost 75%. And also, if you look at U.S. Treasury futures, that market is now trading in average daily trading volumes almost the same amount or even more at times times than in the U.S. Treasury market. All of these are very connected, and I think that's part of what's driving the efficiencies in the bond markets and in fixed income markets.
We've seen a lot of volatility in the fixed income market over the past month or so. Have you seen anything disorderly, any kind of forced selling anywhere, especially right around mid-February, mid-March?
No, I don't think that again, the markets have gone up, they've gone down. I think that the way that the ticket sizes that are going through, the average duration that's going through in ticket sizes, there's certainly choppiness, as we talked about. Yeah. But, the market is digesting what's happening pretty well.
Okay, so things are going through fairly smoothly, no major hiccups or anything. In terms of products that people are using, you mentioned Treasury futures. There's this big growth of explosion in fixed income ETFs and active fixed income ETFs. I'm wondering how much of that is split between, say, futures or ETF products when it comes to trading these treasuries that you're seeing?
Yeah, that's a great question. So, not to state the obvious, but the market cares a lot more about the cost of capital, the cost of collateral when rates are at 4.5% than when they are at zero. So the growth in U.S. Treasury futures, the focus on cross-margin optimization, the focus on U.S. Treasury volumes going through, again, that whole ecosystem, repo, all working well is what the market has been really focused on. Fixed income ETFs are a massive part of the toolkit. Factor-based trading has come. It's live in fixed income markets now. So all of these levers are being able to be pulled, and that technology underpinning the entire ecosystem, I think, is what's helping us really create some stability.
I'm glad you brought up technology, because obviously we've talked really just everything every day is about AI, but usually in the capacity of more consumer-facing AI, or even what software companies are doing. Are you seeing more integration of AI on Wall Street in trading and other sort of market structure activities?
Yes, I think so. As we roll out AI tools to our global markets teams, I think what we're really seeing is increasing the scale, increasing the efficiency of how we're able to scour through the vast amounts of data, the natural language that comes into us, right? So we're really trying to get to a point where we can create almost a virtual assistant that sits next to our traders, our sales force, and really helps them look through all of the information that we're gathering day over day. Mm-hmm. Ultimately, we want to get to the point where we're actually just kind of wading through the data and information each day and saying, hey, what's the anomaly here? What's the outlier? So that's what we're building towards and working hard.
And I asked that too. And I just want to point out to our viewers, we did get a headline just a few minutes ago about eToro. Of course, the Fintech platform. They are actually filing for a U.S. IPO, filing with the SEC, just crossing the wire. And I am curious about the expansion of what we call Wall Street, but of course it's not Wall Street anymore. But just kind of the expansion of that broader financial universe to include alternatives, if you will, and alternatives that are much more tech-focused, tech-forward, if you will, than maybe some of the traditional players.
I think that's absolutely right. That's absolutely happening. Technology is embedded in everything that we do. We're leveraging technology partnerships and, building a lot more tools in-house. So I think that's absolutely right. This is how we achieve scale in a controlled way. That doesn't mean that we're using Gen AI to come up with pricing, anything like that in the immediate future, but we use it to create scale.
All right, good stuff. Shonali Tyson is Global Head of FIC, E-Trading, and Strategic Investments over at Bank of America. Thank you so much.
Thank you.
All right, well, as we talk about the shifts that we're seeing as institutional markets adapt to new technology and new times, there's a big shift in sentiment, at least out of Fidelity and Schwab today. The two firms blocking purchases of 3 ETFs on their trading platforms. The BlackRock and Texas Capital funds are the first to track money market securities in an ETF structure. Bloomberg's Emily Grafeo wrote the story, and she joins us now from Exchange, which is an ETF experience happening right now in Las Vegas. Emily, thanks for talking to us here, especially as you're attending this conference. This is kind of unusual for Fidelity and Schwab to prohibit clients from being able to buy these money market ETFs. That's typically what they don't do. They want to make every product as accessible as possible. What's going on?
That's right, Scarlett. So typically with exchange traded funds, if you're a retail investor, if you're a financial advisor, if you go on Fidelity and Schwab or these other large trading platforms, if something trades on an exchange like a stock, you should just be able to buy it. And typically that's what we see. You can buy it. That's one reason why ETFs have been known to democratize investing. There's less barriers to entry, this being one of them. We noticed in our reporting that if you go and on either Fidelity or Schwab and try and buy one of these, you're blocked from the trading. You get a notification that says, this security is not tradable. What the firm said, what both Fidelity and Schwab essentially said was they're just applying the standards of how they track money market mutual funds onto ETFs. So if you go onto Schwab, if you're trying to buy a money market fund, you can really only buy a Schwab money market mutual fund. Same thing with Fidelity. ETFs were almost like a backdoor to that, and now they are, blocking access to those ETFs. But that's right, that we don't typically see anything that trades on an exchange locked at Fidelity and Schwab.
Is this the kind of thing that people are going to notice? And I don't mean like, the nerds like us who have to cover this every day, but, are just sort of rank and file people with retirement plans and the folks that manage them for that matter going to notice this?
I mean, I spoke to two financial advisors who were clients of Texas Capital's.
Varun Kothari ji, hello. Yes, Vardhan ji, hello, good evening. नॉट क्लियर अप और डाउन ट्रेंड किसकी बात कर रहे हो? फिलहाल मार्केट को देखोगे साइडवेज ही चल रहा है नेचुरल गैस। जब तक ये 341 के ऊपर नहीं क्लोज करेगा और ऊपर जाने के चांसेस कम ही हैं। 341 के ऊपर क्लोजिंग नहीं आई तो मोस्ट प्रॉब्ली ये रेंज बना के बैठ जाएगा और फिर या तो 341 के ऊपर क्लोजिंग या फिर 328 के नीचे क्लोजिंग। सीधा निकल जाता है तो बढ़िया चांसेस ऊपर जाने के, अदरवाइज लो चांसेस। क्रूड ऑयल भी साइडवेज ही हो गया, रेजिस्टेंस पे थोड़ा वीक रेजिस्टेंस था बट स्टिल वहीं पर रुका हुआ है, ना ऊपर जा रहा है ना नीचे। ऊपर भी कोई लेवल नहीं है इसमें, न्यूज़ का कुछ ज़्यादा ही अच्छा इम्पैक्ट पड़ रहा है। 5:30 होने वाला है, देखते हैं न्यूयॉर्क सेशन के बाद। भी है, उसका भी ध्यान रखना। 6:30 और 7:30 दोनों ही डेटा इंपॉर्टेंट है। टाइम ऐसा लेट हो गया, किसको ट्रेड कर रहे हो? उसका लेवल तो बताओ। नैस्डैक, क्रूड ऑयल, गोल्ड, सिल्वर, क्या ट्रेड कर रहे हो? बाकी अगर ऐसा जा रहा है तो फिर वेट करो ना, मार्केट का ओपन होने का वेट करो। अगर नैस्डैक में ट्रेड कर रहे हो इवनिंग पे, मार्केट में वॉल्यूम भी हमेशा आता नहीं है ना, वॉल्यूम आने का भी अपना टाइम है। नैस्डैक में ट्रेड कर रहे हो तो अभी वेट कर लो, देखते हैं नैस्डैक के लेवल। अभी मार्केट ओपन हुआ नहीं है, यूएस मार्केट। लंदन सेशन भी ओपन नहीं हुआ, न्यूयॉर्क सेशन सॉरी। तो न्यूयॉर्क सेशन ओपन हो जाए तो वॉल्यूम आना स्टार्ट हो जाता है प्रॉपरली। फिफ्टीन मिनट में एक बार फिर भी देख लेते हैं नैस्डैक के लेवल्स। एज एक्सपेक्टेड लुक एट द नेचुरल गैस वापस सेलिंग में आ रहा है वहां से फंस गया ये परसों से इसी रेंज में फंसा हुआ है ना ऊपर जा रहा है ना नीचे ओवरऑल देखोगे एक ब्रॉडर रेंज ये है उसमें भी मार्केट लोअर लो ही बनाया जा रहा है लोअर हाई सॉरी नहीं निकल पाया 341 के ऊपर इट मींस इट इज स्टिल इन अ रेंज साइडवेज ही है इस छोटी रेंज में ऊपर 341 का रेजिस्टेंस मान लो नीचे 328 का सपोर्ट देखते हैं अब ऊपर निकलता है या साइडवेज जाता है आज कम्प्लीटली याद रखना जितनी देर एक ही लेवल पे रुका रहेगा फाइट बहुत हो जाती है उस लेवल पे ऑलरेडी परसों सपोर्ट लिया था कल सपोर्ट लिया था आज भी मॉर्निंग पे सपोर्ट लिया था थोड़ा बहुत यहाँ से ये हायर हाई बना नहीं रहा दैट इज़ अ कंसर्निंग थिंग यहाँ पर देख पा रहे होगे हायर हाई नहीं बना रहा है सपोर्ट अभी भी ब्रेक नहीं हुआ है बट हायर हाई नहीं बना रहा है अभी भी तो रेंज के अंदर ही है प्ले आउट कर रहा है तो ये एक रेंज है किसी ना किसी साइड तो बड़ा मूव जरूर आने वाला है जैसे कल क्रूड में आया था देखते हैं 341 के ऊपर निकल पाता है नहीं निकल पाता है एक घंटा और है न्यूयॉर्क सेशन की ओपनिंग में क्रूड भी साइडवेज ही है रेजिस्टेंस जोन के अराउंड, ना नीचे ना ऊपर, रेजिस्टेंस के अराउंड ही रुक गया, बिल्कुल जैसे कल क्रूड ऑयल हाई लेवल पे था यहाँ पर इस एरिया पे, उसी तरह का कंसोलिडेशन है, फंस रहा है, फाइट चल रही, इट मींस सेलर्स अभी भी निकले नहीं है, बायर्स भी नहीं निकल रहे, दोनों ही ट्राई करने में लगे पड़े हैं इन्हों, या तो सेल किया जाए या फिर प्राइस को वापस बाइंग करके और नीचे ऊपर लेके जाया जाए। अगर अभी मोमेंटम नहीं करता है टिल 5:30 का ही वेट होना पड़ेगा फिर, क्योंकि कंसोलिडेशन काफ़ी देर से इस लेवल पे देखोगे, कैंडल फर्स्ट कैंडल 1 बजे के आसपास आई थी, 5 बज चुका है, ऑलमोस्ट 4 घंटे से यहीं पर रुका हुआ है। ध्यान रखना कल, परसों सॉरी, ट्यूसडे को जीडीपी का डेटा भी है यूएस में, एंड ये वीक तो निकल ही जाएगा ऑलमोस्ट 30 तक, तो यही है 31st को मंडे, फर्स्ट और सेकेंड ऑफ अप्रैल को रेसिप्रोकल टैरिफ लग सकते हैं, दैट इज़ अ मेजर डे फॉर ऑल द सेगमेंट, इक्विटी मार्केट हो, कमोडिटी मार्केट हो, गोल्ड सिल्वर, काफ़ी इंपॉर्टेंट डे है, किन कंट्रीज पे कितना टैरिफ लगाते हैं ट्रम्प, वो इंपॉर्टेंट डे रहने वाला है। डेक को देख लेते हैं, वही मैं देख रहा हूँ, एक सेकंड, उसमें कल भी कुछ खास लेवल थे नहीं, थोड़ा सा वेट करो एक बार। देखो इंट्राडे में वैसे मैं कोई व्यू लेके चलता नहीं हूँ, तो मैं व्यू का नहीं कह सकता, क्योंकि व्यू का कोई ऐसा व्यू नहीं होता, इंट्राडे ट्रेड कर रहे हो वहाँ पर व्यू बस कुछ सेकंड में चेंज हो जाता है। लेवल देख सकते हैं, व्यू का मैं अभी कुछ ऐसा नहीं बता सकता। व्यू के लिए आप वीकली एनालिसिस देख सकते हो। ठीक है, इंट्राडे में व्यू को लेके मत चला करो, व्यू का कोई मतलब ही नहीं हुआ इंट्राडे में। यहाँ पर सपोर्ट है, बाई करो, रेजिस्टेंस है सेल करो, एसएल जा रहा है निकलो, रीटेस्ट पे बाई, रीटेस्ट पे सेल, सिंपल रहता है। फिलहाल के लिए देखोगे कल वाले लेवल पर ही रुका हुआ है, कल जो रेजिस्टेंस बताया था उसी पर रुका हुआ है प्राइस। कल का लाइव स्ट्रीम में आप ही ने पूछा था ना, वो लेवल वही इंटैक्ट है, कुछ चेंज नहीं हुआ है। 20,250 का ये एक एसएल है, सेलिंग कर रहे हो तो पहले बता चुका था, वहां पर 2 बार ऑलरेडी रेजिस्टेंस ले चुका है, थर्ड टाइम प्राइस आया था रेजिस्टेंस लेने के लिए। तो वहीं साइडवेज हो गया, तो इट इज साइडवेज एट रेजिस्टेंस। कल से साइडवेज है 15 मिनट टाइम फ्रेम पर। कल ही बताया था एक बार 7th ऑफ मार्च को, उसके बाद फिर 8th ऑफ मार्च को मार्केट दो दो बार रेजिस्टेंस ले चुका है। कल भी आया उसी लेवल पे, कल भी रेजिस्टेंस लिया थोड़ा बहुत, अभी भी उस लेवल पे है, तो उसी लेवल पे 3 से 4 बार रेजिस्टेंस ले चुका है। अभी ऊपर निकलना है तो ब्रेकआउट करना पड़ेगा। $20,250 के ऊपर अगर ब्रेकआउट रीटेस्ट कहीं होता है तो हाई चांसेस रहेंगे, अदरवाइज देखते हैं। ज़्यादा देर साइडवेज नहीं जाना चाहिए, अगर गया तो फिर ब्रेकआउट के चांसेस बढ़ जाएंगे। तो कल वाली लेवल है, कुछ चेंज नहीं हुआ है। अभी फिलहाल के लिए मार्च का ही चार्ट यूज़ कर रहे हैं, कल अप्रैल का चार्ट यूज़ कर लेंगे। अभी मार्च में, जो मार्च का मंथ है ना, मार्च के मंथ के फ्यूचर में वॉल्यूम ठीक है, अप्रैल में के बराबर ही है वॉल्यूम, इसलिए अभी मार्च का चार्ट लगाया हुआ है, अप्रैल का नहीं लगाया हुआ है। इवन दो अप्रैल की एक्सपायरी हो गई है ऑप्शन की, सॉरी मार्च की एक्सपायरी हो चुकी है ऑप्शन की, अब तो अप्रैल का ही है। बट मैंने फ़िलहाल के लिए कौन सा लगाया हुआ है, ऐसा होता 2 डेज से एक ही ट्रेंड चल रहा है, लास्ट वीकेंड गैप भी था। अब मैं इस पर कुछ कमेंट नहीं करना चाह रहा, मैं इस पर क्या कहूँ। मैं इंट्राडे में ट्रेंड नहीं देखता हूँ। जैसे बैंक निफ्टी पिछले एक हफ्ते से भी ज़्यादा हो गया कंटिन्यूसली बुलिस है, अब मुझे क्या उससे मतलब है बुलिस है या फिर ना हो, या तो कोई स्विंग ट्रेड या पोजिशनल ट्रेड में बैठे हो। इंट्राडे ट्रेड कर रहे हो तो उसमें तो आपको पता ही है, सपोर्ट से बाय, रेजिस्टेंस से सेल ही बेटर रहता है। इंट्राडे में अगर आप ट्रेंड देखने लग गए तो फिर प्रॉब्लम हो जाएगी। क्रूड ऑयल बाकी साइडवेज, नेचुरल गैस ऊपर रेजिस्टेंस नीचे सपोर्ट, 341 के ऊपर कैंडल क्लोज होगी तभी जाएगा ऊपर, नहीं तो नहीं जाएगा। रिजेक्शन मिलता है तो रेंज के अंदर रहना चाहिए, नीचे 328 के नीचे क्लोजिंग आती है तो फिर सीधा नेक्स्ट सपोर्ट पे। यहाँ पर कुछ भी करो रिस्की है, अब क्रूड और नेचुरल गैस में ऊपर सेल करोगे, नीचे सपोर्ट, यहाँ बाई करोगे, ऊपर ये रेजिस्टेंस, बहुत ही कॉम्पैक्ट रेंज है। क्रूड ऑयल नीचे आएगा या ऊपर ही बुक कर लें, ऊपर ही बुक कर लें यार, अभी तो कॉस्ट टू कॉस्ट पर ही है, ऐसा लगा के छोड़ दो, क्वांटिटी कम रख लो, ऐसा टारगेट बड़ा रख लो। बाकी अगर मोमेंटम नहीं हुआ तो 530 की कैंडल है जो मूव करा सकती है। पिछले 4 घंटे से तो कुछ खास हुआ नहीं है, ना ऊपर एसएल के ऊपर जा रहा है ना नीचे आ रहा है, बाकी छोटा सा ही एसएल है, होल्ड करना है कर लो। 16 पॉइंट का एसएल है, इतना बड़ा कोई एसएल नहीं है, क्वांटिटी कम रख सकते हो। ऑप्शन लिया है तो थोड़ा सा हैच कर सकते हो, नहीं तो थीटा डी के बहुत ज़्यादा हो जाएगा। इसे नीचे आ जाता तो बेटर ही था। कोई न्यूज आई तो फिर उस पर हो सकता है ट्रैप कर जाए ऊपर।
So you wonder if that's going to cause another leg down in the market, or whether that's kind of priced in right now.
Yeah, absolutely. Then we have geopolitics to worry about as well.
Yeah, the U.S. and Russia host talks in Saudi Arabia. We'll see how that goes. And then after the market, there's still a little bit more earnings.
Well, maybe not earnings, but there will be a report. And this is actually from GameStop. Who knows what they're going to say, but of course, we'll have all of that coverage for you right here on Bloomberg.
Today, Trump officials mistakenly included a journalist in a group chat about plans to bomb Yemen.
It's Ukraine's turn at the negotiating table as talks in Saudi Arabia enter a second day.
Take stagnant growth and add elevated inflation, and you get stagflation, a dreaded combo.
It's Tuesday, March 25th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, every weekday. I'm Carmel Crimmins in Dublin.
And I'm Sharon Reich-Garson in New Jersey. Now, we've all accidentally CC'd the wrong person on an email or text, but it's a whole other thing to do so when you're detailing highly sensitive military secrets. Top officials in the Trump administration mistakenly included a journalist in a national security team group chat on Signal. The group chat included Defense Secretary Pete Hegseth, Vice President J.D. Vance, and National Security Advisor Mike Waltz, among others, discussing plans for airstrikes in Yemen. The Atlantic magazine's editor-in-chief Jeffrey Goldberg says he was inadvertently invited to the chat where Hegseth posted operational details hours before the strikes. In response to Reuters for comment, White House Press Secretary Caroline Leavitt says that Trump continues to have the, quote, utmost confidence in his national security team, including National Security Advisor Mike Waltz. Some lawmakers called the use of the Signal Group illegal and have demanded an investigation. Our foreign policy editor, Don Durfee, has the details about the communications.
It's all pretty amazing. This chat all came a few days before the U.S. launched major strikes across Yemen. So in this discussion, Hegseth revealed details about the weapons that were going to be used, the targets that they plan to hit, the sequence of the attacks, all highly classified stuff. And beyond that, there was a really fascinating discussion about the rationale for this. So J.D. Vance was one of the people who was in on this conversation. And he was raising the question whether it made sense to be, quote, bailing out the Europeans here, with the implication that the major beneficiaries from an operation that protected Red Sea shipping would be Europe, because a lot of the trade that goes through the Red Sea is Europe-related. And of course, the United States would be bearing the cost.
What happens next? Are there potential repercussions for the national security officials involved in the lapse?
It's not clear that any laws were broken here, but it is highly unusual for the nation's top intelligence and national security officials to be using an open source encrypted app like Signal. And the reaction on the Hill has been pretty brutal, honestly. You had Elizabeth Warren, the senator, calling this lapse blatantly illegal and dangerous. Senator Chris Coons asserted that every one of the officials had committed a crime. But we'll see. There's likely to be some sort of repercussions for this.
A U.S. appeals court judge says that the Nazis were given more rights to contest their removal from the U.S. during World War II than Venezuelan migrants deported by the Trump administration. The White House was asking the court to halt a 2-week ban on the use of the 1798 Alien Enemies Act to justify deporting alleged gang members without final removal orders from immigration judges.
She's a very nice woman, and she loves the concept of Greenland.
Trump is not budging.
Greenland's going to be something that maybe is in our future.
Doubling down on his suggestion that the U.S. should take over the Arctic island. His comments come ahead of a U.S. delegation visit led by Usha Vance, the wife of Vice President J.D. Vance. Greenland's outgoing Prime Minister Mute Egde calls the plans a provocation and says his caretaker government won't meet them.
The U.S. Supreme Court heard arguments in a case that could determine the fate of majority Black congressional districts in Louisiana. Louisiana officials and civil rights groups want to keep an electoral map that raised the number of predominantly Black voting districts. But that map was redrawn to protect conservative legislators, including House Speaker Mike Johnson and the number 2 House Republican Steve Scalise. The unknowns around Trump's trade policy and its impact on the economy are having an effect, even before they land. Some economists are now on the lookout for something called stagflation, a dreaded combo of rising unemployment and climbing inflation. Our Fed reporter Howard Schneider has been looking into it.
A couple weeks ago, a few of the Federal Reserve officials started saying, we've had it pretty easy until now. Inflation's been falling, and there's been no real price to pay on unemployment and no real perceived risks of slowed growth. Lately, however, they've been thinking about the effect of tariffs, this sort of exhaustion of some consumers, and been thinking that directionally, at least, they could be heading to a position where the economy weakens, unemployment rises, but the inflation rate gets jacked up by tariffs. So they didn't use the word stagflation, which is where you get sort of high unemployment and high inflation at the same time. Those two things, they're kind of inversely related or have been in the past. High inflation and high unemployment, they shouldn't coexist at the same time. Some of the Fed officials said, we may be coming to a point where there's tension between our two mandates. They're supposed to keep unemployment low and inflation low. So when they see tension between the two, that's kind of, by definition, a little bit stagflation-y.
The term is most commonly associated with the 1970s, when oil supplies shocked the market alongside high unemployment. We're not at that level, right?
That's correct. The Chicago Fed President Alston Goolsbee said it's more the direction of travel that is causing this word to come up. Even though the levels right now are nothing comparable to the 1970s, if things are moving in that direction, it becomes tough for them to figure out.
It's day 2 of the Riyadh talks, and the Ukrainian and US delegations are meeting. It follows on from Monday's US-Russia talks on a Black Sea ceasefire proposal. Washington is hoping that will pave the way for broader peace negotiations. A White House source says there's been progress. For The View from Kyiv, we're joined by our Ukraine bureau chief, Christian Lowe. Christian, what will be discussed today between Ukraine and the US?
It's kind of a moving target. So the indications from the United States are that the focus of the discussions is a truce in the Black Sea on maritime attacks. However, we're not entirely sure that that's still what the focus of the talks is. It's been going on for kind of the last 48 hours, and it seems to be evolving. Donald Trump said last night there are other things on the table. He talked about demarcation of territory. He talked about a deal on rare earths. And he talked about power stations. So to be frank, we're not sure. I think they seem to be jumping from one topic to another. I think what we can conclude already is that if the ultimate objective is to get a full ceasefire to end this conflict, we're in the foothills of that, the low foothills, because it doesn't seem like the discussions are about that yet. It's about subsidiary issues, smaller issues, like mineral deals, like partial ceasefires that are very limited in their scope.
How important is a ceasefire on the Black Sea?
The importance depends on who you are. If you're Ukraine, then actually, as things stand now, they're able to export grain via the Black Sea, which is the key thing for Ukraine, and levels of exports going via that route are pretty much at pre-war levels. They've got them back up. If you're Russia, then there is something to be gained by a ceasefire because Ukraine has kind of successfully squeezed the Black Sea fleet, the Russian Black Sea fleet. They've been pushed towards the eastern side of the Black Sea. So a truce in Black Sea would allow them to start moving around again, which I think would be welcome from the Kremlin point of view.
And for today's recommended read, To Havana and the End of the American Dream for Cubans. Trump is closing off President Biden's parole program that allowed migrants with a sponsor to temporarily reside and work in the US. A link to the story is in the pod description.
For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. We'll be back tomorrow with our daily headline show.
Congratulations, Mr. President. Well, he's back. And guess
Semiconductor demand is rapidly growing, but producing a chip takes. Manufacturers must deploy full
The next couple of months is going to be a really rocky road.
We are at an unprecedented level of uncertainty.
Gold is a perfect manifestation of policy uncertainty.
The uncertainty effects are much worse this time than they were in 2019.
It's almost impossible for me to say, we've seen the bottom, we can break out of this trading range, and it's time for us to add.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday with stocks bouncing after snapping a 4-week losing streak. Sentiment improving as officials familiar with the matter indicate the president's major tariff announcement may turn out to be far more targeted. That's leaving investors focused on the incoming data, looking ahead to taking the temperature on consumer confidence later on in the week before getting another read on U.S. inflation.
Yeah, this to me raises the question, what's going to be more important, the current economic data or potentially what the tariffs may or may not be? Honestly, how much credence can you put into headlines that whip around markets when you talk about maybe it's only the dirty 15% that we're talking about with respect to tariffs? Those dirty 15 include China, the European Union, some of the U.S.'s major trading partners. So it really comes down to where the economy is now and how susceptible it is to some of these shocks.
I would frame this as the following. This is a snapshot of where current thinking is, and things are always best described as fluid. It always comes down to the mind of one man, President Donald Trump, and that mind can change repeatedly between now and next week.
And the reporting from Josh Wingrove is that the negotiations behind the scenes are continuing to happen. And even Scott Bessent, the Treasury Secretary, who talked about these dirty 15, also said these countries or these unions could come to America first and maybe strike a deal before April 2nd. What I would say, though, is overwhelmingly the reporting is talking about reciprocity and about selective tariffs. I don't think you're going to get the sectoral tariffs come April 2nd. It is going to be country specific. And what I would say to those people is, if you have a trade deficit with the United States or your tariff is much higher than the U.S., then you have a problem. But potentially, if you lower your tariff rate, you may be able to be in the clear.
There was a massive focus on this over the weekend, whether April 2nd was the date of peak uncertainty, where we could move past this and equities could deliver somewhat of a relief rally. The day when we have certainty could also be the day when we appreciate the economic consequences of it. Peter Cheer of Academy over the weekend with a thoughtful note.
And this, to me, really goes to the heart of the anxiety right now. No one expects certainty on April 2nd. Let's be very clear. Question is, what is the new paradigm that we're trading within, and how much is that going to have ramifications on the hard economic data? That's why I think that this week's PCE report and personal income and spending report is going to be interesting. That said, it's likely to be more of the same. The hard data showing just everything is status quo and chugging along, maybe a slight deterioration, where the soft data deteriorates much more significantly. That's what Deutsche Bank thinks. That's what a lot of people are thinking.
Kicking things off with a better tone this Monday morning. Good morning to you all. If you're just joining us, equity futures firmer by 0.9% on the S&P. Coming up on the programme through the next 60 minutes, we'll catch up with Keith Lerner of Truist following a winning week for equities, Terry Haynes of Pangea Policy ahead of Trump's Liberation Day, and Michael Dada of Roth MKM Partners on positioning for the end of the business cycle. We begin this hour with stocks higher on signs that President Donald Trump's next round of tariffs may be more targeted than expected. Keith Lerner of Truist writing, on a shorter-term basis, markets are becoming stretched to the downside, and our work suggests the market is in the ballpark of a bounce. Keith joins us now for more. Keith, welcome to the programme, sir. What gives you the indication that maybe we are in that ballpark for a better bounce from here?
Yeah, well, hey, great to be with you. Great to see some green on the board this morning. You know, back in February when we last were on the program, we actually downgraded equities when we were around 6,000. Around March the 11th, a lot of our work suggested that the market had gone too far, too fast to the downside. We looked at, we had a two-point contraction in the multiple for the S&P over a 2-week period. Historically, outside the pandemic, the last 10 years, we haven't seen something more aggressive really than that. We saw some technical indicators become extremely stretched. And we also saw some things like the put-to-call ratios also spike as well. So you put that all together on a short-term basis, as we were closer to 5,500 in our work, suggested things had become overdone. But we do think it is a bounce within a choppier range at this point, Jonathan.
Keith, credit to you. You downgraded equities back in February. A lot of people were freaking out about tariffs at the time. It's not just tariffs, though. This is what Bank of America and Michael Hartnett have to say going into the weekend, that DeepSeek and Doge are much bigger Wall Street drivers than tariffs in Q1. And Keith, this is where things get complicated going into next week. How relevant is April 2nd? Have we already discounted the tariff story or not?
I think it is relevant. I mean, it's many different factors happening at the same time right now. But the tariffs are, are certainly a factor. And if you think about a market multiple, a valuation or a P multiple is based on confidence. And the key word we keep hearing is the word uncertainty today. And that uncertainty has led to that kind of quick contraction in the multiple. Now, the markets are not cheap. And by the way, uncertainty, we always live with uncertainties. Are you being compensated for that uncertainty? So listen, I think that tariff, even right now, we reset expectations a bit. We're getting a relief on just something that's perceived to be better than expectations. But I also, going back to your original question, I mean, DeepSeek was a competitor that opened up a different view of the Chinese technology companies that we didn't have 6 months ago in this market. So I think altogether that also suggests the upside of the multiples relative to the beginning of the year is likely somewhat constrained as well.
To put these ideas together, there's a real kind of question about U.S. exceptionalism based on that uncertainty tax on valuations that already are elevated. And that, I think, is what a lot of people have been grappling with. How much is this just you have to have a different kind of a risk-adjusted metric in the United States with this level of uncertainty that removes some of the luster of former U.S. darlings? Do you think that is an appropriate way to look at market valuations and a reason to be a little bit skeptical of U.S. equities here?
Well, again, I mean, on a short-term basis, we do think we have a bit more upside. I think we can probably rally in the S&P. We're around 56, 67 this morning. I think maybe we can get up to 5,900, 6,000, and then I think we'll see maybe some selling pressure, some choppiness. But to your point specifically, listen, the U.S. still has some of the best companies in the world, no matter what, and some of the best free cash flow, earnings growth, and so forth. I just think you came into this year where you had an opposite as far as expectations, and you've had a little bit of good news go a long way, in Europe. On a short-term basis, you saw it in the fund manager survey about a week ago. You had the biggest 1 month reduction in U.S. overweight. So in some ways now, everyone's kind of this U.S. exceptionalism kind of collapsed relative to the beginning of the year. I think on a short-term basis with this short-term rally that we're talking about, I think you'll see money rotate back into the U.S. and probably led back to the Mag 7 and some of these technology names.
So, Keith, can you give us a sense of what the trigger is for that? A number of people have come on and said maybe this flow into Europe is overplayed. Maybe people have gotten over their skis with the optimism that Germany really is going to unleash the taps of stimulus and really change structural aspects of their economy that have hindered growth. Are you saying it's a ruse, it's over, it's done, go back to the U.S.?
No, listen, I do think that the fiscal changes from Germany is significant. And I think as you think about, and a lot of what I'm talking about, timeframes matter. If you think over the next year, I think as your allocations, you probably want to have more weight to international than you had, say, a year ago. I'm just saying on a short-term basis, you kind of went to such an extreme. Europe outperformed by about 20% since December, and basically, markets don't move in a straight line. So I think you kind of reset the bar for the U.S. You have an elevated bar for Europe in a short-term basis. A lot of that outperformance in Europe has been defense names specifically. So they've just moved so much that I think they're due for a breather, maybe a little bit of an unwind. But as you kind of have this little bit of the short-term reprieve, I do think, that fiscal stimulus is a big change. DeepSeek is a big change. So again, we're overweight the U.S., but basically what we're saying is like an accordion. You want to kind of bring in those bets as you see this kind of short-term rally that we think has some short-term legs here.
Keith, putting the short-term rally aside, long-term, how do you view the United States? Right now, we're really discussing only one pillar of the Trump agenda, which is tariffs. What happens when you get potentially more deregulation and the extension of tax cuts?
Yeah, and that's the big question right now. I think ultimately, I think that is a positive. After the election, the market was all focused on all the positives. Now, the last month or two, we're focused on all the negatives. In a couple of weeks, we'll start talking about tax policy again. So I think it will be more of a measured picture as we move deeper into the year. So to your question, I still think the U.S. on a relative basis, especially as you look about, longer term, 3 years, 5, 10 years. I mean, the majority of the most successful companies are still in the U.S. So we still want to be overweight U.S. longer term. I'm just saying that relative to the last couple of years, the magnitude of an overweight likely has to come in somewhat because of how much we've outperformed and some structural changes like we talked about in Europe. The other thing that's interesting, going back to China, Chinese tech and U.S. tech moved, basically in tandem from 2015 to about 2021. That's when China started to accelerate, or the government started to crack down more on the Chinese technology companies. So as they've kind of eased up now, those markets have performed better. And I think, again, you're seeing some better innovation out of China as well.
So basically another way of asking my question is you upgraded cash from less attractive to neutral. You think you need a slightly higher cash level. When would you actually say, no, that cash needs to be put to work now?
Yeah. Well, so again, I think we're going to have a bit of a bumpier just road this year in general. So our overall allocation is, Lisa used to joke with me last year. At some point we were there strongly neutral again, and we have that cash. We're not really ready yet to deploy it. But, part of this kind of short-term call that we had a few weeks ago that we had to balance is, when we downgraded stocks, it happened so quickly. Some of the advisors we spoke to, they couldn't move that quickly. So it's kind of saying we're down 10%. I wouldn't be selling here. Wait for a bounce back to 5,900, 6,000 on the S&P, and try to dial back exposure more towards a neutral overall exposure. I still think at this point I would hold that cash. I think we'll have some better opportunities because even with the tax policy debate that comes up, we have such slim margins. I think it's going to be a kind of a choppy period.
Hey, Keith, appreciate the update and your view, sir. Keith Lerner there of Truist. Big week coming up. Looking ahead to next week, April 2nd, and so-called Liberation Day for who? Liberation Day for the equity bulls or not is something we've got to figure out.
Liberation for the uncertainty tax or not necessarily. A lot of people are looking past this. They don't expect this to necessarily be some sort of conclusive moment. What I do find interesting is we are getting challenges to this idea that U.S. exceptionalism is over, that the money that's flowing into Europe is going to stay. Mike Wilson this morning talking about how a weaker dollar will actually support S&P 500 earnings and should bring returns back to the U.S. So a really muddled picture on multiple fronts.
Equities bouncing back this morning to kick off the trading week. We're positive by around 1% on the S&P 500. With an update on stories elsewhere, with your Bloomberg brief, here's Yahara Hackett. Hey, Yahara.
Hi, John. President Donald Trump's incoming wave of tariffs is poised to be more targeted than originally expected. Sources telling us the president's upcoming Liberation Day tariff announcement set for April 2nd is set to exclude some countries from widespread reciprocal tariffs. Meanwhile, SAP has unseated Danish pharmaceutical giant Novo Nordisk as Europe's most valuable company. Shares of the cloud-based software company rising in the current session, giving it a value of $344 billion US. Meanwhile, Novo Nordisk shares are down over 17% year to date as it faces pressures in the weight loss drug market. And Disney's Snow White fell short of box office forecasts on its opening weekend. Disney saying the live-action remake delivered ticket sales of $43 million in the U.S. and Canada, shy of its estimated range of $45 to $55 million. That's your Bloomberg brief. John?
Cost $250 to make. Absolutely bummed. Yahara, thank you. Appreciate it. More on that story a little bit later. Wanted to get you up to speed on this story quickly. The Women's March Madness bracket. Guess who's leading here at Bloomberg? Do you even know?
No.
Anne-Marie Hordern is winning. 1 point behind. 1 point behind Mark Rowan of Apollo.
As you can tell, she's paying a lot of attention.
No, I will admit, I cheated. Bria, the producer, sat with me.
Oh, Bria did this for you?
And we did it. It was a joint effort, but we went line by line together.
She typed, Bria talked.
You're at
I'm
the top
third.
of Bloomberg LP, worldwide, globally, including everybody else. You're just 1 point behind Mark Rowan of Apollo.
Thanks for that news,
so
Jonathan. Happy Monday.
Let's see if this sticks. Up next on the programme, we're counting down to the tariff deadline.
April 2nd is going to be Liberation Day for America. We've been ripped off by every country in the world, friend and foe. That money's going to be coming back to us in the form of tariffs. They're tens of billions. It's going to be numbers like nobody's ever seen.
Up next on the programme, Terry Haynes of Pangea Policy, live from New York City this morning. Good morning.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Anne-Marie didn't know, and now it's the only thing she's talking about.
I'm leading in the bracket. Have you heard?
Yeah, seriously. The rest of the day is wrapped.
Equity futures on the S&P just about positive. A nice bounce. We're up by 1% on the S&P 500. Yields are higher by 3 basis points. The 10-year 4.28. Under surveillance this morning, we're counting down to the tariff deadline.
April 2nd is going to be Liberation Day for America. We've been ripped off by every country in the world, friend and foe. We've been ripped off on trade. We've been ripped off on military. We protect people, and they don't do anything for us. It's just so unfair for years and years. And now some of that money is going to be coming back to us in the form of tariffs. There are tens of billions. It's going to be numbers like nobody's ever seen.
So here's the latest this morning. The White House narrowing the scope of tariffs set to be announced on April 2nd. Sources telling us here at Bloomberg the levies will now exclude some nations, and the president's previously announced sector-specific tariffs are now on hold. Bloomberg's Tyler Kendall joins us now from Washington for more. Tyler, some of our reporting over the weekend. Why don't you give us the headlines and what's changed relative to expectations going into next week?
Well, John, the biggest headline appearing to be that the White House is no longer planning to implement those sector-specific tariffs on April 2nd. As you know, these were tariffs against specific sectors that President Trump had singled out, including on autos, pharmaceuticals, lumber, and chips. To give you an example of how quickly this has changed, it was exactly 1 week ago today, March 17th, when President Trump told reporters coming back on Air Force One that we could have expected those sector-specific tariffs to be stacked on top of the reciprocal tariff plan. Now, at this moment, it does not appear that they are moving ahead with that on April 2nd, but it could come later. And then the other important part of this reporting is that it now appears that the broader reciprocal tariff plan could be pared back and that some countries could be excluded if they don't have tariffs on the U.S. or they run a trade surplus. Importantly, NEC Director Kevin Hassett said on Friday that he felt that markets needed to change their expectations because not every country cheats the U.S. with trade, as he said. But to be clear, that has not been the messaging until really last week when we saw Treasury Secretary Scott Bessent say that we could expect them to target the so-called Dirty 15, the top 15% of our trading partners that make up the bulk of the imbalance with the U.S. here. John, importantly, though, we should note that these tariffs could still result in levels not seen in the U.S. in decades, and this White House really is banking on tariffs bringing in revenue. But at the same time, this is considered to be a more tailored and narrowed down approach.
Tyler, when it comes to how the president is thinking right now, he did say something along the lines of, I don't change, but I like the word flexibility. You have to be flexible. How much are we seeing negotiations play out now before April 2nd?
Right. Well, for one example, one thing that's still held from over the weekend is that we're not expecting carve-outs as of now come next week, even as these negotiations continue, particularly with private sector companies coming in and out of this White House for negotiations. We did see one serious step in talks, particularly when it comes to China over the weekend. U.S. Senator Steve Daines, a Republican from Montana, returning from Beijing, becoming the first top U.S. official to meet publicly with a Chinese diplomat since this administration has started. But still, as we move forward, as of now, this administration saying that it is going to particularly target those countries, and we know that President Trump, when it comes to how he feels that countries are either cooperative or being more combative, will be factored into this. That's why we're also particularly watching the European Union and those specific countries that we are expected to get hit with those tariffs. Just quickly, Anne-Marie, I would just add that we saw Australia, one of those countries that had been really hoping particularly for those steel and aluminum exemptions over the weekend. Their treasurer saying that they expect seismic shifts to the global economy as we start to hear that rhetoric ramp up ahead of next week.
They're not alone, Tyler. Appreciate it. Tyler Kendall with the latest. Thank you. Something we haven't given a ton of thought about, given the rally abroad we've seen, particularly in Europe and in China. But the weaker data started to emerge last week. Might just be a small data point for financial markets, but business confidence in Canada absolutely collapsed. This is not something the market has really traded on, but it's something we could be trading on in the months ahead.
And it's something that the Bank of Canada is maybe moving on or not moving on in response to that potential weakness, because they do see it coming down the pike, which raises this other question. People seem to be going into the rest of the world because suddenly they don't think that they're going to suffer as much as they did earlier this year in the heels of some of the tariffs that are about to be placed on. Will that get rethought as we do get some more details about what these tariffs are going to look like?
Terry Haynes of Pangea Policy joins us now for more. Terry, welcome to the programme, sir. Good morning to you. Let's just start with your base case. What do you expect to see April 2nd?
Well, really two things, John. One is I think your reporting has been excellent on the idea that these are going to be kind of less sweeping, less hammer-like. But I think markets trade one kind of uncertainty for another. My touchstone on this has always been Secretary Bessent's view that tariff direction is always path dependent. And what he means by that is the reaction of other countries outside the United States to what the United States wants in terms of lessening or rationalizing tariffs and economic behavior more generally. And, I think what you're going to get is you may get less than meets the eye on April 2nd, but at the same time, what you're going to see is a lot of negotiations between an awful lot of countries and the United States about how to lessen tariff barriers and, or if failing that, maintain them, and maybe some non-tariff changes as well. So, again, one kind of uncertainty for another kind of uncertainty, I think.
Terry, Jonathan said earlier today the most correct word when it comes to situation, fluid. What kind of behind-the-scene negotiations are having, basically? What's Peter Navarro saying versus what's Kevin Hassett saying?
Well, I'm sure they're negotiating among themselves, and Navarro, of course, is a hardliner, whereas Hassett so much isn't. I would look to what's happening outside the United States as well. I know full well that Commerce Secretary Lutnick's people have been giving sets of tariff and non-tariff requests and demands to different foreign countries so that they can react, respond, and hopefully change things. And that's one of the reasons why I say that I think going forward here, this is very much going to be an uncertain field. This doesn't end April 2nd one way or the other.
Well, when Scott Bessent was talking about the Treasury Secretary, the Dirty 15, he also talked about that some of these tariffs may not go into place because a deal was negotiated beforehand. Do you expect a number of countries to negotiate deals before next week?
Yes, I do. I think some do, and and a lot don't, and that depends on their individual political and market situations as much as anything else. The nimbleness of their governments and the ability to react and respond to what the United States might want, and on the other hand, the coherence of how the United States, frankly, communicates its own demands and requests. I mean, we've seen that before on, for example, on Canada and Mexico tariffs, and I expect that to continue here on a worldwide basis, frankly.
Terry, maybe this is inside baseball, but when I was reading all the stories over the weekend about how the tariffs wouldn't be as broad-based as previously expected, I was thinking, who's leaking this? What is the reason behind the concerted effort by the White House to send the message, hey, guys, it's not going to be that bad? And I'm wondering, is this a message to markets or a sign that this White House cares more about some of the turmoil in markets than perhaps they're letting on?
I think probably a little bit of both, but I think more of the first, frankly. The president's statements are fundamentally not for markets. Markets should pay attention to what the president says, of course, but they're fundamentally not for markets. Presidents are tone setters, and Trump is very good and almost over the top at tone setting. But what you're getting underneath that from Bessent, from Lutnick, from others is a desire to tell markets that, look, the reality of this is going to be somewhat different. It's not going to be completely different than what the president says, but there's going to be more nuance and sensitivity to market concerns.
Terry Haynes of Pangea Policy. Terry, appreciate it as always. This is something we've suspected now for quite a while, that the task was already pretty large to unveil all of this on April 2nd. Maybe you will see all of this unveiled on April 2nd, but to actually see the policies implemented may take months and months after that, which is something, Anne-Marie, you've indicated time and time again over the past few weeks.
Especially if we don't know exactly how they are going to enact these tariffs, meaning if it's IEEPA, Donald Trump can do it day one. That's a national security lever. But if it's 232, 301, they will need to have more of weeks or months to get public comment. What I think is very interesting is this week, Jameson Greer, according to Jenny Leonard, is getting on the phone with his Chinese counterpart. You see a lot of conversations taking place in the lead up to this Liberation Day.
The conversations, though, have different themes. Are they about fentanyl? Are they about immigration? Are they about trade imbalances? Are they about something else that really doesn't have to do with anything above? So these are the reasons why it's difficult. When you talk about the Dirty 15, we're talking China, European Union, Mexico, Vietnam, Taiwan, and Japan. So, just those.
It's quite a phrase, isn't it? The Dirty 15.
Yeah, it's not a small little group either.
It's pretty ugly stuff. Coming up on the programme, Frank Aquila of Sullivan & Cromwell as the FCC threatens to block M&A for companies with DEI. That conversation up next. So a little bit of hope this morning, informed by a lot of reporting. Equity futures positive by 1% on the S&P 500. The hope, informed by our reporting, is that maybe the barrage of tariffs for next week you all feared might be more targeted than expected. That's unlocking some gains across the board this morning.
Yeah, talking about not necessarily on sector specifics, but more broadly on the ones, the companies, the countries that have the biggest trade imbalance. We keep talking about the so-called Dirty 15. Treasury Secretary Scott Bessent put it that way last week. A real question mark about what the Dirty 15 really is and how high the bar is, considering that they are our major trading partners. So it remains to be seen exactly how narrow these are.
Some of the biggest economies on a planet.
Exactly.
Still very, very important. Let's turn to the bond market. So equities just about squeezing out a week of gains on the S&P 500 and snapping that 4-week slide. In the bond market, yields at the front end now pretty much capped. The belief that Chairman Powell is going to go one way or the other, hold or cut. The 2-year 397.74, yields higher this morning by 3 basis points. Just locked in there, Lisa, around 4.
Last week, after Fed Chair Powell's comments, a lot of people just said this is a Fed chair who is more biased to cut than to remain on hold, because he does seem to be emphasizing the weakening in growth from inflation that he says is transitory. The bringing back of the T word was important. Right now, we're expecting almost 3 rate cuts for the remainder of this year. That is how much it's gotten up to in market expectations.
Let's turn to foreign exchange. Lisa mentioned FX just moments ago on this programme. Euro dollar at the moment shaping up as follows. Positive on the session by a third to 108.51. Mike Wilson of Morgan Stanley, the note that Lisa pointed to. Relative performance versus international developed equities can swing back in favour of the United States. A weaker dollar should offer a tailwind for U.S. revisions.
Because it makes their exports more valuable and more profitable as well. This is an argument people were making on the flip side, that first quarter earnings were likely not to be as good because the dollar had gotten so strong. So you can imagine, if you reverse it on its head, how much that could actually give a tailwind at a time where people are saying that the decline in the S&P 500 in tandem with the weakening in the dollar is some sort of recipe for the end of U.S. exceptionalism. Some people are using it as a contrarian indicator.
The dollar weaker again this morning. The euro stronger. On our radar this morning, President Donald Trump's next round of tariffs on April 2nd, shaping up to be more targeted than expected. Sources telling Bloomberg Trump is set to exclude some countries from widespread reciprocal tariffs.
So potentially this is more bark than bite. What I would caution is there's over 100 countries, and Jenny Leonard was talking to me about this, and she's one of the greatest trade reporters we have in Washington. But Trump really cares about the dozen that have massive deficits with the United States. The question we need to be asking ourselves is those 10 or 12. Does this mean that he's going to bring down that, he's not going to go as hard at them and bring down the reciprocal rate? Or is he still going to be very aggressive on those countries that really matter to him the most?
I just wonder if the cat's out of the bag in terms of getting some sort of deal with certain areas. I'm thinking about Canada and the European Union, where there's a lot of anger. And it isn't politically popular anymore to say, OK, you know what, we're going to come to the table and drop all tariffs. So I wonder how much it's going to make it difficult for there to be certain deals and, frankly, to remove some of the tariffs on the table.
Well, how many times has Howard Lutnick come on this program, the Commerce Secretary, talking about the fact that he's going to be having phone calls with his European counterpart, with the auto companies? The conversations are happening now. What gets done between here and now is still very fluid. But I would still remain. President Trump says he wants to be flexible, but he says there's no change. He's still tariff man.
Elisa, I think you hit on a really, really good point. I hope, and this is my hope, that it brings the two sides together and they can negotiate lower tariffs on both sides. That's the hope. But you're right to talk about public opinion. Public opinion has moved completely in the other direction. I'm not sure that's the centre ground in places like Canada right now. I'm not sure negotiation is what the Canadians exactly want.
It's hardening the lines and saying, actually, guys, no, we have a country and we are our own entity. I mean, to talk about the 51st state is sort of, a kick in the shins a little bit to some of the people in Canada. So, it just raises a question of how much people are going to be more entrenched, even if it makes economic sense to come to the table and eliminate retaliate tariffs.
And if the tariffs are going to hurt the United States, you've got to imagine the tariffs hurt Canada. The tariffs hurt Europe. You can't sit there in Europe and say it's only going to hurt America. If you're putting tariffs on too, it's going to hurt you as well.
So this is the interesting aspect. People have kind of ignored that over the past month and talked about European exceptionalism because there isn't a pall of uncertainty. The pall of uncertainty from the United States hangs over Europe as well.
A week away from April 2nd and so-called Liberation Day. Let's turn to foreign policy. US and Russian officials meeting in Saudi Arabia today as President Donald Trump pushes for a ceasefire in Ukraine. Ukraine's defense minister calling talks between US and Ukrainian officials yesterday, quote, productive and focused.
So yesterday, the technical teams out of the United States sat down with the Ukrainians. Today, right now, they're sitting down with the Russians. They're really focused on two things, and this was already agreed upon by the leaders level. And this is basically a moratorium on strikes, on energy infrastructure, and potentially also Black Sea deal. Now, this is the easy part when you're looking at a truce, because these type of negotiations were already happening in 2022, 2023, 2024. They were what I would call off-the-shelf deals. What is going to be hard is getting actual peace agreements on the 20% of land that's Ukrainian that has been Russian held through this war. And I have reporting from over the weekend with another group of Bloomberg reporters that they are very aggressive. This administration wants a deal by April 20th for 30-day ceasefire. That's just in a couple of weeks.
Look, we all hope that this ends up with some sort of resolution. Big question about whether Vladimir Putin will come to the table. That really is the key question at this point. My interest here, aside from that, is Saudi Arabia's role, that they are the epicenter of all of these negotiations time and time again. The sort of circle of power is shifting, and it's shifting to the Middle East.
The new Switzerland.
Yes, exactly.
It's a massive change, isn't it? We'll catch up with Norman Rule in the next hour on that story. Let's finish on this one. Snow White, missing box office forecast on its opening weekend, widely expected to bomb, and it did. Disney saying the live-action remake delivered ticket sales of $43 million in the US and Canada, lower than the estimated range of 45 to 55.
Okay, you could get into sort of the politics and some of the controversies over this movie and the casting and some of the views, political views coming out. It got a 44% on Rotten Tomatoes. Some of the reviews, I love this one. In short, hi-ho, don't go, by Pittsburgh Magazine film critic.
Brutal.
And this one from the New York Times, Manola Dargis, neither good enough to admire nor bad enough to joyfully skewer.
So, $250 million plus to make.
And, I mean, what is it with these sort of remakes in human form of these classics that were lovely?
I think part of the problem is people want nostalgia of the classics. David Hand, this American animator, his son, he had passed away, worked on this. His son said that his father would be turning in their graves, the original team that worked on this. He said it's a disgrace that Disney is, quote, trying to do something new with something that was such a great success. They're making up new woke things, and I'm just not into any of that. And it seems that the viewer isn't either. And I think part of the problem you have here is businesses, potentially, there's a lot of controversy around quote unquote woke, what they should be doing with nostalgic storylines. The issue comes that maybe viewers don't want it and just becomes too controversial. And then at the end of the day, you spend $250 million and no one's going out to watch it.
They become so worried about offending someone, they offend everyone. It's a movie nobody wants to watch. And a bigger issue right now with the Walt Disney Company, and this is a massive issue for them. This is not just sort of cultural identity politics and all of that stuff. Let Washington, D.C. have that fight. This is about business. You've spent almost $300 million on a movie, and it has absolutely bombed. And why? You come across as embarrassed by your own source material. That is not a good position for Disney to be in, and they seem to find themselves in that position time and time again.
If you are going to remake something, you can't just replace certain characters with virtual imagery because you aren't sure exactly how you want to deal with it. It is a question of dealing with source material head on rather than simply around the edges. Oof, we'll have a virtual image instead.
I was looking at some of the movie theatres across the country, just going to various ones and going to like the 8 p.m. in Houston just to see how empty it was. No one's buying tickets for this thing.
You were going around the country?
I was doing my research on the apps last night.
You were doing sort of live
apps,
mapping?
honestly, it was absolutely shocking.
That's really interesting.
The channel checks were just not impressive at all. Let's move away from this story, because spend a lot of time on this. Let's turn to M&A. Under the Trump administration, the US Federal Communications Commission threatening to block mergers and acquisition proposals from companies that promote DEI policies. That move could impact billions of dollars worth of deals in the communications sector. Frank Aquila, the senior M&A partner at Sullivan & Cromwell, joins us now for more. Frank, welcome to the programme, sir. It's not the M&A boom that we quite expected, so let's take a step back. Can you give us the 35,000-foot view? Just what is happening here and where are things going?
Well, a number of things. Well, first of all, thank you for having me on this morning. A number of things are happening. I mean, Secretary of the Treasury Bessent 2 weeks ago proclaimed MAGA does not mean make M&A great again. And I think the expectations that we all had going into this administration, really have been let down. The statement by the FCC chair, I think, indicates that their broader policy focus, is going to be reflected on M&A, and DEI is clearly something that's extraordinarily important to this administration, and the fact that they may, and I think this is still a may, bring that lens to certain transactions is reflective of that. But this is not Ronald Reagan's FTC or DOJ when it comes to merger review. This is much closer. This is a populist version of what we saw with Lena Khan in the last administration.
Frank, one of the criticisms from Lena Khan's administration was that it was inconsistent and that it went after certain companies like affordable luxury that seemed like random made-up concepts that really undermined the confidence that different corporate executives could have about what deals would be signed off on and what wouldn't. Is that something that you're seeing continue in this administration?
I think there is a hesitation on the part of senior executives and boards of directors. I don't think it's necessarily about the merger approval, because I think most of these transactions will ultimately happen, which has historically been the case. The issue is really around the broader economy at the moment. And I think that there are concerns. You were talking a minute ago about rate cuts and the weakening economy and what's going to happen with exchange rates. M&A is not going to happen where there's uncertainty, whether it's about tax rates, exchange rates, the economy. Once there's greater clarity, and I think as we get into this administration in the course of the next few months, there will be greater certainty. And my expectation is that the back half of the year will be quite busy and quite robust, because there is that certainty that is lacking to some extent at the moment.
Frank, I'd love it if you could give us a reality check, because there have been a lot of articles and a lot of histrionics about the undermining of the legal system and this question about how much that's really going to challenge some of the deals and some of the other corporate actions that take place. Do you think that that is all noise and that essentially what we are seeing is just corporations acting logically to an uncertain economic environment, but will come around and will ultimately operate business as usual later this year?
My expectation is that it will be very much business as usual. Will certain companies de-emphasize DEI and some other policies? Absolutely. But, by and large, what we're going to see is what companies do today, U.S. and non-U.S. companies. They adapt to the political and economic realities of the moment. And that's what boards and managements are paid for, is to evaluate that and look at what's in the best interest of their shareholders. How do they create the most value for their shareholders? And to me, that's ultimately business as usual. And so I certainly am seeing that and expect to see that going forward.
Frank, we're already seeing that from the likes of last week. JP Morgan, they came out and they're no longer calling it DEI. They're calling it DOI, diversity, opportunity, and inclusion. Is all of this just about companies rebranding for the Trump world?
Well, I think that, there is largely a misunderstanding maybe created by politicians that somehow DEI was discriminating against certain people or classes, people like myself, older white men. The reality is that it was just making sure that people who were underrepresented, who were talented, had opportunities. So, to some extent, it may be rebranding. I think to some extent, it's also education to the fact that We are, that companies, law firms, investment banks, whatever, aren't discriminating, that they're in fact simply making sure that the best and the brightest have opportunities, are retained and promoted. I think that's what's been happening, and I think that will become clearer as time goes on. So it is a bit of a rebranding and a refocusing.
We appreciate your opinion on that, sir. Thanks for joining us. Frank Aquila there of Sullivan and Cromwell. I wish they'd rename it Development, Opportunity, Investment. And I wish they'd go and focus on socio-economic status and invest in those communities and in education and get all of these massive companies just to do that. And just accept that this is going to take 10, 15, 20, 25 years to do something about, and that you can't just do it at entry-level jobs. You can't just go to a certain group of universities and say, no, we only want one kind of person from one kind of college, and this is who we're going to hire. Because how this worked in practice is not exactly how this worked in theory over the last 4 years.
There are a lot of companies who are doing that. And there are a lot of companies that have programs that go into middle schools, that go into elementary schools. I've seen it. There is just a question of how it's being messaged at a time where the previous regime had one image. This regime has another image. What are companies actually going to do to reach those goals that you laid out? And I think a lot of people would agree on.
Equities right now on the S&P 500, if you are just joining us, positive here by 1 full percentage point. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Hakez. Hey, Yahara.
Hi, John. Newly elected Canadian Prime Minister Mark Carney calling for a federal snap election to be held April 28th, while giving a stark warning about President Trump, saying, quote, Donald Trump wants to break us so America can own us. Carney looking to convince Canadians he's the right person to defend the nation against U.S. aggression. Meanwhile, a U.S. delegation that includes Second Lady Usha Vance and National Security Advisor Mike Waltz will visit Greenland this week. The territory's election winner said the trip, quote, shows a lack of respect and is seen as a move to exert pressure on Greenland as President Trump ramps up his rhetoric that the U.S. should take control of the island. And the surprises kept coming during this weekend's March Madness action. Number 10 ranked Arkansas upset St. John's amid another legendary run for head coach John Calipari. Meanwhile, UConn's quest for a third straight title was denied after falling to number 1 ranked Florida. With all the surprises, there are now 0 perfect brackets remaining, according to the NCAA. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later on in the programme. Up next, navigating a regime change.
The Fed, like so many others, are navigating a regime change. Communicate in a way that convinces people that you will have the possibility of rate cuts, not because inflation is coming down, the so-called good news cuts, but because growth is problematic, bad news cuts.
That conversation up next with Michael Dowda of Roth MKM Partners. Live from New York City, this is Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart. A focus on your story, our legacy.
Equities on the S&P firmer here by a little more than 1 full percent. That we can avoid a barrage of tariffs next week, informed by our reporting suggesting that maybe that effort on April 2nd will be more targeted. Bond yields are higher by 4 basis points. The 10-year still around 430 at 428.64. Under surveillance this morning, navigating a regime change.
The Fed, like so many others, are navigating a regime change. Communicate in a way that convinces people that you will have the possibility of rate cuts, not because inflation is coming down, the so-called good news cuts, but because growth is problematic, bad news cuts. Do so without fueling inflation expectations, which already are pretty worrisome. So that is what they need to do.
So here's the latest this morning. Investors preparing for a total shift in global trade. The next round of Trump's tariffs are planned for April 2nd, with Wall Street lowering expectations for US growth. Michael Dowder of MKM writing the following. If trade war leads to the end of the business cycle, cyclical sectors will fall hard. However, we feel more comfortable buying these groups on weakness if one can adhere to multi-year timeframes. Michael joins us now for more. Michael, welcome to the program, sir. Let's just sort of back up and get an understanding of where you think we are in this cycle. The soft data has rolled over aggressively. The survey data looks weaker. Is it inevitable from your standpoint that the hard data will come next, or do you think that's avoidable?
Hi, John. Thanks for having me on. That's really the risk here, right? We've seen a really large and pronounced pullback in both business and consumer confidence. Obviously, we know there's not a direct read-through from those sentiment measures into the real economy, but the risks obviously have gone up here in terms of growth slowing or, the business cycle potentially coming to an end. And markets reflect that with the 10% correction that we've seen so far this year. I think we need to be a little careful here. I would not just be, buying the whole index here simply because we had a 10% correction. The investment sentiment surveys have crashed. Usually that's a bullish contrary indicator. But S&P 500 valuations as a whole still remain elevated, more than 20 times forward estimates. And those estimates by our analysis are probably 8 to 10% too high here. So I think you got to pick your spots.
Michael, that's exactly where I wanted to go. The idea that sentiment surveys have been so bearish that typically is a sign to buy, and why you don't think that is necessarily a buying signal today. I just wonder what you would have to see in the economic data to give you confidence one way or another, because a lot of people are saying don't pay any attention to the hard data because it's lagging so far behind some of the quickly moving soft data.
Yeah, that's really the critical question. And even these February releases that we're going to get this week, they're important, but maybe a little bit stale. So unfortunately, I think we're going to have to see a few more months of data to see if this uncertainty, which is really ratcheted up dramatically, is starting to chip away at the real economy. Two things to focus on, I think, would be critical labor market indicators. Obviously, layoffs have stayed fairly low and stable here. First-time jobless claims are, only about 10% above where they were right
News when you want it with Bloomberg News Now. I'm Karen Moscow. We begin with senior foreign officials and major tech companies pushing the Trump administration to rethink the country's global semiconductor strategy. This as the U.S. prepares a controversial framework for controlling artificial intelligence development around the world. The so-called AI diffusion rule, which restricts the number of AI processors that can be exported to most nations, prompted an outcry from tech giants like NVIDIA. Biden officials unveiled the rule during their last week in office. A slew of governments and many companies are trying to persuade the president's team to loosen some of the regulations before the deadline for compliance arrives in less than 2 months. Now to Ukraine. Talks between the U.S. and Ukraine and Saudi Arabia have concluded. That's after about 12 hours of discussions between the U.S. and Russia yesterday. Ukraine's President Volodymyr Zelensky says strong measures will be needed to keep Russia on the path of peace.
We need a movement towards real peace, towards guaranteed security. And we all need this. In Ukraine, in Europe, in America, everyone in the world who wants peace in international relations. Russia is the only entity that is dragging out this war and mocking our people and the whole world. And to pressure Russia towards peace, strong things Strong steps are needed.
Ukrainian President Volodymyr Zelensky speaking through an interpreter. Zelensky and Trump still have not signed a pact to give the U.S. part ownership of Ukraine's natural resources. President Trump appeared to invent a new weapon of economic statecraft by threatening what he dubbed secondary tariffs on countries that buy oil from Venezuela to choke off its oil trade with other nations. The threat, delivered via a Truth Social post, then confirmed in an executive order, said countries could face 25% tariffs on trade with the U.S. if they purchase oil and gas from Venezuela, which is already under heavy U.S. sanctions. The White House grappling with what appears to be an extraordinary security breach. Atlantic editor-in-chief Jeffrey Goldberg saying he was included in a text chain about plans to bomb the Houthis in Yemen hours before the attacks. Goldberg tells ABC News he thought it was a hoax at first when National Security Advisor Mike Waltz invited him to join the Signal chat.
It seemed completely absurd to me that the national security leadership of the United States would be meeting on a messaging app to discuss forthcoming military action, and that they would also sort of invite the editor of The Atlantic magazine.
But as the chat got into detailed operational plans to attack the Houthis, Jeffrey Goldberg said he realized the text thread was genuine. The White House National Security Council also says the chat appears authentic, but a spokesman said it was not a breach and showed deep, thoughtful policy coordination. Defense Secretary Pete Hegseth said, quote, nobody was texting war plans.
You're talking about a deceitful and highly discredited so-called journalist who's made a profession of peddling hoaxes time and time again.
But Democrats on Capitol Hill are calling for hearings, including California's Sarah Jacobs.
The fact that these folks, Secretary Hegseth and others, would so carelessly be disclosing this information on a commercially available app means that they don't, to me, it means they don't care about the lives of the service members.
The White House says President Trump has utmost confidence in his national security team. The president claimed to be unaware of the breach when he was asked about it last night. Back in Washington, President Trump expects efforts to reduce the federal government's workforce to reach an appropriate level in the next 2 to 3 months. We get more with Bloomberg's Amy Morris.
President Trump told cabinet officials the efforts of the Department of Government Efficiency, or DOGE, will continue, but he indicated they do have an endpoint in mind.
We're getting down to a point we think probably over the next 2 or 3 months we'll be pretty much satisfied with the people that are working hard.
Trump acknowledged the government overhaul might not be popular, but he defended the effort. The Trump administration has also asked the Supreme Court to halt a ruling that ordered the rehiring of thousands of federal workers who were let go in mass firings across several agencies. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. Well, Dartmouth College's president said proposals to hike endowment taxes threatens the school's research capabilities as well as its ability to enroll the best students. Waymo, the robo-taxi business of Google parent Alphabet, planning to launch service in Washington, D.C. next year. It's a move that would effectively give U.S. lawmakers and other officials more exposure to self-driving cars as they mull a framework for federal standards. Turning to the markets, and futures are little changed following yesterday's rally on Wall Street. Again, S&P, Dow, NASDAQ futures all little change. 10-year Treasury yield at 4.35%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
गैस क्रूड ऑयल को देखोगे अभी भी नेचुरल गैस माफ करना 341 के ऊपर नहीं आ रही है क्लोजिंग, स्टिल साइडवेज। 530 भी हो गया तो सीधा यूएस मार्केट ही ओपन होगा, क्रूड ऑयल भी साइडवेज ही पड़ा हुआ है। 341 के ऊपर ऐसा लग रहा था क्लोजिंग आएगी, विक बना के नीचे आ गया, इसका मतलब ये अभी भी रेंज के अंदर ही है। क्रूड ऑयल को देखोगे तो क्रूड ऑयल का भी सेम ही सिनेरियो है, रेजिस्टेंस पर ही बिल्कुल साइडवेज हो गया, नो मोमेंटम। थ्री 41 के ऊपर अगर ब्रेकआउट इन द सेंस ऑफ कैंडल क्लोज होती है तो हाई चांसेस हैं 350 के अराउंड तक जाने के। नहीं होता है ब्रेकआउट तो फिर चांसेस थोड़े कम ही रहेंगे। लेट्स सी, किसी साइड तो रेंज ब्रेक करना जरूरी है, अदरवाइज मोमेंटम ही नहीं आएगा नेचुरल गैस में। पीछे भी अगर 328 ब्रेक हो गया तो फिर सीधा 315 टू 320 के बीच में ही है सपोर्ट। डेटा भी है 630 का, उसका भी ध्यान रखना गोल्ड और सिल्वर के लिए, S&P कंपोजिट 20 और HPI का। Nasdaq 2000 20,250 रेजिस्टेंस लेवल सही है। मैंने बता दिया हैरी जी, वो दो तीन बार टेस्ट कर चुका है, अब तो वो भी ऊपर निकलने वाला है शायद। वो रेजिस्टेंस नहीं है, वो रेजिस्टेंस का अपर लेवल है जो लास्ट एसएल है, ठीक है, जहां पर कल रुका था, दैट इज अ रेजिस्टेंस एरिया। 20,200 की जो रेंज है वो कोई एक पर्टिकुलर पॉइंट रेजिस्टेंस नहीं होता ना। 20,200 से 300 के बीच में रेजिस्टेंस है। बाकी अगर लास्ट एसएल उसका 450 20,250 बनता है समथिंग, उसके ऊपर अगर कैंडल क्लोज हो गई तो फिर वो ब्रेकआउट ही होगा, फिर कोई नया रेजिस्टेंस ऊपर होगा तो देखना पड़ेगा। वैसे वो मल्टीपल टाइम वैसे ही टेस्ट है उस लेवल पे। क्रूड ऑयल नेचुरल गैस दोनों साइडवेज ही पड़े हुए हैं, दोनों ही साइडवेज हैं। आज तो कुछ मोमेंटम ही नहीं आया है नेचुरल गैस में तो।
One question.
Can you share how your information about war plans against the Houthis in Yemen was shared with a journalist in The Atlantic? And were those details classified?
You're talking about a deceitful and highly discredited so-called journalist who's made a profession of peddling hoaxes time and time again, to include the hoaxes of Russia, or the fine people on both sides hoax, or suckers and losers hoax. So this is the guy that peddles in garbage. This is what he does. I would love to comment on the Houthi campaign. because of the skill and courage of our troops. I've monitored it very closely from the beginning. And you see, we've been managing 4 years of deferred maintenance under the Trump administration. Our troops, our sailors were getting shot at as targets. Our ships couldn't sail through. And when they did shoot back, it was purely defensively or at shacks in Yemen. President Trump said, no more. We will reestablish deterrence. We will open freedom of navigation, and we will ultimately decimate the Houthis, which is exactly what we're doing as we speak from the beginning, overwhelmingly.
Why were those details shared on Signal, and how did you learn that a journalist was privy to the targets, the types of weapons used?
I've heard I was characterized. Nobody was texting war plans, and that's all I have to say about that. Thank you.
कि क्रूड ऑयल देखोगे फाइनली ऐसा लग रहा है ऊपर निकलने वाला है लेवल के। लेट्स सी कोई नया लेवल ही बन जाता है तो। ये ऊपर देखो MCX में तो कोई रेजिस्टेंस है नहीं काफ़ी नज़दीक तक। फॉरेक्स का चार्ट लगा लेते हैं, बेटर रहेगा। या फिर एक काम और कर सकते हैं, हाँ फॉरेक्स का ही चार्ट लगाना पड़ेगा, और कोई ऑप्शन नहीं है। एक रीटेस्ट जोन है यहाँ पर फॉरेक्स में एफएक्स ओपन ब्रोकर को देखोगे ना, यहाँ पर एक रीटेस्ट लेवल है। एमसीएक्स में कुछ नहीं है यहाँ पर, ध्यान रखना कुछ खास लेवल। फॉरेक्स का चार्ट देखोगे, एक रीटेस्ट जोन है, रेजिस्टेंस तो नहीं है एग्जैक्टली बट एक सपोर्ट हुआ करता था। सॉरी एक रईस, हाँ सपोर्ट ही है ना। ठीक है, फॉरेक्स में ही है एक रेजिस्टेंस छोटा सा, $69.55 के अप्रोक्सीमेटली। कैंडल ओपन इक्वल टू हाई एंड ओपन इक्वल टू लो, क्रूड एंड नेचुरल गैस अलग अलग कैंडल है। अगर एमसीएक्स के अकॉर्डिंग देखा जाए तो अप्रोक्सीमेटली 6010 की ओर जाने की कोशिश में है। सिक्स में भी रीटेस्ट ही है यहाँ पर, बहुत माइन्यूट सा है बट है जरूर। मुझे लग रहा है एमसीएक्स और फॉरेक्स दोनों में वहीं पर अप्रोच करने की कोशिश है प्राइस की, 6012 के आसपास। बस अगर और ऊपर आता है ये, एक सेलिंग का प्लान है, सेलिंग ही प्लान इसमें। ये लेवल नहीं होल्ड कर रहा है, काफ़ी देर हो गई, अभी तक सेलिंग इस लेवल से आनी होती तो आ चुकी होती। मोर देन 6 आवर्स हो चुके हैं इस पर्टिकुलर लेवल जोन पे। थोड़ा सा एक और ऊपर की ओर विक बना दे या फिर हल्का सा चला जाए क्रूड, तो फिर से लगभग 15 टू 16 पॉइंट के एसएल के साथ एक ट्रेड बनाएंगे। टारगेट सेम ही रहेगा। ठीक है, इसके ब्रेकआउट रीटेस्ट पे बाय मत करना, बिकॉज ऊपर भी रीटेस्ट जो है पेंडिंग, वो पेंडिंग ही है अभी भी। इतना ही ऐसा रहेगा 15 पॉइंट का समथिंग अराउंड। इसको रिमूव कर दो, जरूरत नहीं पड़ेगी। ठीक है, छोटा सा ही ऐसा है एक और, ऊपर एक रीटेस्ट भी है फॉरेक्स में, रेजिस्टेंस नहीं है एग्जैक्टली, सपोर्ट था, ब्रेकडाउन हुआ है, रीटेस्ट पेंडिंग है यहाँ पर भी। बाकी 6:30 हो चुका है, डेटा आ चुका है, ध्यान रखना। अब सीधा यूएस मार्केट भी ओपन है 7 PM पर। बाकी क्रूड ऑयल भी साइडवे ही चल रहा है, नीचे सपोर्ट अभी ब्रेक नहीं हुआ है, 328 के नीचे नहीं गया है। वैसे तो साइडवेज कहेंगे बट अभी भी सपोर्ट और रेजिस्टेंस के बीच में ही है। किसी एक साइड कैंडल क्लोजिंग चाहिए हमें, 341 के ऊपर कैंडल क्लोज करता है तो ऊपर चला जाएगा 350 के आसपास, नीचे 328 के नीचे क्लोज करता है तो और नीचे आएगा। जो लोग बाइंग में है वो चाहे तो ऐसा अपना कॉस्ट पर रख लो, अब रिस्क मत उठाना, बायर्स स्पेशली, क्योंकि इतने बार रेजिस्टेंस लिया है, अगर अब कोई बड़ी कैंडल बनी तो फिर बड़ा फॉल ना हो जाए अगर 341 के ऊपर कैंडल क्लोज नहीं करता है 15 मिनट में ऑब्वियसली। अब नीचे आ गया क्रूड ऑयल, नीचे नहीं आया, वहीं पर है, एसएल हिट हो चुका है क्रूड ऑयल में, ध्यान रखना, एसएल इज गॉन, प्रीवियस ट्रेड का एसएल जा चुका है, एग्जिट कर लेना उसमें से। ऊपर एक और लेवल है, वहां से एक सेलिंग का प्लान है। एसएल 15 पॉइंट, थाउजेंड 25 के आसपास रखते हैं एसएल। ट्वेंटी फाइव टू 30, 20 पॉइंट फ्यूचर में नहीं होता, फ्यूचर में 3 के नहीं होता। अंदर बैठे हैं यूएस मार्केट ओपनिंग। नीचे ब्लैक कलर की लाइन ही टारगेट है सेलिंग में क्रूड के फर्स्ट एंड सेकंड के नीचे निकलेगा तब देखेंगे 5900। मिनट लेफ्ट गाइस, 15 मिनट ही हैं सिर्फ अब यूएस मार्केट। कोई ओपन पोजीशन चल रही है तो एसएल सिस्टम पे रख लो। नेचुरल गैस अभी भी ब्रेक नहीं कर पाया है 341 का लेवल।
News when you want it with Bloomberg News Now. I'm Karen Moscow. We begin with senior foreign officials and major tech companies pushing the Trump administration to rethink the country's global semiconductor strategy. This as the U.S. prepares a controversial framework for controlling artificial intelligence development around the world. The so-called AI diffusion rule, which restricts the number of AI processors that can be exported to most nations, prompted an outcry from tech giants like NVIDIA. Biden officials unveiled the rule during their last week in office. A slew of governments and many companies are trying to persuade the president's team to loosen some of the regulations before the deadline for compliance arrives in less than 2 months. To Ukraine now, the U.S. and Ukrainian negotiators have wrapped up another round of ceasefire talks in Saudi Arabia. That follows about 12 hours of discussions yesterday between the U.S. and Russia. Begin more with Bloomberg's Rosalind Matheson.
We know these conversations were very technical. Yesterday focused very much on the Black Sea and maritime traffic, so probably some arrangements around that, to your point about making sure that everything can leave Ukraine, including grain, potentially also, which is important for a lot of regions around the world. And so can you get certainty around trade and maritime traffic?
And that's Bloomberg's Rosalind Matheson. The Kremlin says the discussions were technical and their contents will not be made public. President Trump appeared to invent a new weapon of economic statecraft by threatening what he dubbed secondary tariffs on countries that buy oil from Venezuela. The threat, delivered via a Truth Social post, then confirmed in an executive order, said countries could face 25% tariffs on trade with the U.S. if they purchase oil and gas from Venezuela, which is already under heavy U.S. sanctions. Meanwhile, the European Union's trade chief is in Washington for trade talks with the Trump administration. That's as the Financial Times reports. The president is considering a two-step approach to the reciprocal tariffs that he's planning 1 week from tomorrow. Bloomberg's Tyler Kendall has more from the White House.
This White House would like to see the European Union drop its tariffs when it comes to American auto imports into the EU, but we also have to keep in mind that these discussions are revolving around those non-tariff barriers too, including value-added taxes and digital service taxes, which would be considered a pretty lofty goal for this administration. I was there last week when NEC Director Kevin Hassett was asked if this White House is really looking for European countries to dismantle their entire tax systems, and his response was that this White House would be, quote, sensible in regards to that.
And that's Bloomberg's Tyler Kendall at the White House. The White House is expressing confidence in its national security team. This is after the Atlantic's top editor said he was added to a text group in which top U.S. officials discussed detailed plans to bomb Houthi targets in Yemen. The group included high-ranking officials such as Defense Secretary Pete Hegseth and Vice President J.D. Vance. Bloomberg News senior editor Bill Ferry says it's an extraordinary breach of security from an administration that has repeatedly vowed to clamp down on leaks.
This is a president who faced charges of mishandling classified material at Mar-a-Lago, who ran against Hillary Clinton years ago, partly on criticism of her decision to use a private server. So it's been a part of their DNA to say that they're strong on classification and protecting national security, and to see this happen with not just senior aides, but really the most senior aides. Marco Rubio is on there, Defense Secretary Pete Hegseth, Tulsi Gabbard, the DNI. It's just really stunning.
And that's Bloomberg's Bill Ferry. Some Democrats are calling for hearings into the matter. Israel's parliament has passed a state budget. It's a move that shores up Prime Minister Benjamin Netanyahu's governing coalition and grants the embattled leader the chance at months of political stability, even as public pressure mounts over the war in Gaza. Dartmouth College's president saying proposals to hike endowment taxes threatens the school's research capabilities as well as its ability to enroll the best students. Waymo, the robo-taxi business of Google parent Alphabet, plans to launch service in Washington, D.C. next year. It's a move that would effectively give U.S. lawmakers and other officials more exposure to self-driving cars as they mull a framework for federal standards. And turning to the markets, yesterday's rally on Wall Street may be short-lived. That's according to the chief strategist analyst at UBS Investment Bank. He says the, quote, visibly tiring U.S. consumer is set to further pressure stock prices, setting the stage for another 8% slump in the S&P 500. The bank expects the S&P 500 to drop as low as 5,300 points as analysts cut profit estimates for the next 3 to 4 months. S&P futures have turned higher. They're up 0.3%. Dow futures up 0.2%. NASDAQ futures up 0.3%. 10-year Treasury yield at 4.35%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
गाइस यूएस मार्केट ओपन होने वाला है, ध्यान रखना। क्रूड में सेलिंग है ऊपर से एक्सपेक्टेड, फिर से थोड़ा छोटा सा एसएल है, कैंडल का ध्यान रखना बस। बाकी नेचुरल गैस तो साइडवेज ही है, देखो किस साइड का एसएल उड़ाता है पहले, ऊपर या फिर नीचे। अभी भी सपोर्ट होल्ड है, ऊपर एक छोटा सा रेजिस्टेंस होल्ड है। मूवमेंट अभी नहीं होता है तो फिर वही 7 PM की कैंडल पर ही होगा। किसी की ओपन पोजीशन चल रही है तो पुट योर एसएल ऑन सिस्टम। बाकी एक डेटा है 7:30 वाला, वो भी इंपॉर्टेंट है, ध्यान रखना। 6:30 का डेटा तो आ चुका है ऑलरेडी, नाउ 7:30 डेटा इज ऑल्सो इंपॉर्टेंट। तीनों डेटा इंपॉर्टेंट है, कंज्यूमर कॉन्फिडेंस, न्यू होम सेल्स और रिचमंड मैन्युफैक्चरिंग इंडेक्स का। बाकी 6:30 वाला जो डेटा था दैट इज न्यूट्रल फॉर गोल्ड एंड सिल्वर। नेचुरल गैस को थोड़ा सा हायर टाइम फ्रेम पे अगर देखें, वीकली टाइम फ्रेम पे अभी ऐसे 3 दिन है, नहीं ब्रेक होता है अगर कैंडल 334 के नीचे, 328 के नीचे कह सकते हो थोड़ा सा, तो एक इनसाइडर कैंडल बन जाएगी ऑलमोस्ट, एंड डोजी टाइप कैंडल भी कह सकते हैं, विच इज़ अ गुड साइन। बिकॉज फिर अगर ये इस वीक थोड़ा सा डोजी टाइप कैंडल बनती है, ब्रेक डाउन नहीं होता और ज़्यादा मूवमेंट अपसाइड भी नहीं होता है 350 के, इसी रेंज पर रहता है प्राइस, तो वेरी हाई चांसेस नेक्स्ट वीक एक बड़ा मूव हो सकता है। बिकॉज इनसाइडर कैंडल है, ब्रेक डाउन हुआ तो भी इजीली 300 के आसपास आ सकता है, अपसाइड ब्रेक हुआ तो फिर वो 370 80 तक चला जाएगा इजीली। लेट्स सी किस साइड ब्रेक करता है, क्लोजिंग किस साइड आती है वीकली। डेली भी देखोगे अगर ये तो वीक का चार्ट है, पिछले 3 दिनों से कंसोलिडेशन में ही है, यहाँ पर ऑलरेडी इनसाइडर कैंडल है। पिछले 2 वीक से करंट वीक की भी एक डोजी टाइप कैंडल है, इंपॉर्टेंट है। क्लोजिंग आ गई डेली टाइम फ्रेम की 328 के नीचे, आराम से 320 315 के आसपास प्राइस है। Okay, 2 minutes left. US market opening. US market open 7 p.m. हो गया है. से अब कुछ मूव करता है या फिर अब भी नहीं करता है मूव. दोनों ही जगह देखोगे कैंडल ओपन इक्वल टू हाई है. लेट्स सी थोड़ा सा अगर नेचुरल गैस रेंज को ब्रेक करता है तो इस पर्टिकुलर कैंडल पे क्रूड ऑयल में भी सेलिंग है, कैंडल का ध्यान रखना बस, नहीं तो नॉर्मली तो कर ही सकते हैं इसमें भी। बिल्कुल नेचुरल गैस में सपोर्ट स्ट्रॉन्ग ही है दोनों के दोनों। थोड़ा हायर टाइम फ्रेम पे देखोगे ये पूरा एक सपोर्ट जोन है, यहाँ से लेकर यहाँ तक हायर टाइम फ्रेम पे 15 मिनट में ये भी सपोर्ट है, नीचे भी सपोर्ट है, एंड स्ट्रॉन्ग ही है, इसलिए रुक रहा है। हो सकता है डिप मार दे एक थोड़ा नीचे और सपोर्ट लेने चला जाए डेली टाइम फ्रेम के अकॉर्डिंग। बाकी जब लास्ट टाइम आया था यहीं से रिवर्स हो गया था, लेट्स सी इस बार डीप जाता है तो।
But producing a chip takes up to 26 weeks. Manufacturers must deploy
headlines and what's changed relative to expectations going into next week?
Well, John, the biggest headline appearing to be that the White House is no longer planning to implement those sector-specific tariffs on April 2nd. As you know, these were tariffs against specific sectors that President Trump had singled out, including on autos, pharmaceuticals, lumber, and chips. To give you an example of how quickly this has changed, it was exactly 1 week ago today, March 17th, when President Trump told reporters coming back on Air Force One that we could have expected those sector-specific tariffs to be stacked on top of the reciprocal tariff plan. Now, at this moment, it does not appear that they are moving ahead with that on April 2nd, but it could come later. And then the other important part of this reporting is that it now appears that the broader reciprocal tariff plan could be pared back and that some countries could be excluded if they don't have tariffs on the U.S. or they run a trade surplus. Importantly, NEC Director Kevin Hassett said on Friday that he felt that markets needed to change their expectations because not every country cheats the U.S. with trade, as he said. But to be clear, that has not been the messaging until really last week when we saw Treasury Secretary Scott Bessent say that we could expect them to target the so-called dirty 15, the top 15% of our trading partners that make up the bulk of the imbalance with the U.S. here. John, importantly, though, we should note that these tariffs could still result in levels not seen in the U.S. in decades, and this White House really is banking on tariffs bringing in revenue. But at the same time, this is considered to be a more tailored and narrowed down approach.
Semiconductor demand is rapidly growing, but producing a chip takes up to 26 weeks. Manufacturers must deploy foolproof inspection solutions.
About these developments.
Yeah, thanks for having me. Over the past year and change, companies have been trying to see if they can meld AI with hardware. We've seen failed attempts like the Humane AI pin. We've seen bigger splashes like the Ray-Ban smart glasses from Meta. And what these have in common is they have cameras and microphones. And why do you need cameras and microphones? Because to really take advantage of the AI, you need to have a solid understanding of your surrounding environment. And so what Apple wants to do now is bring cameras to its wearables. So they're working on new versions of AirPods, as well as new versions of both of its Apple Watch models that add cameras in order to have a better idea of the outside world. One thing they're looking at now is adding cameras to the Apple Watches. And so what that would entail is pointing your Apple Watch at something, and then that pulling up the visual intelligence feature they added to the iPhone 16 models last year. You can basically scan a poster, scan a plant, scan anything, and it'll tell you what it is using ChatGPT or Google search. And so the idea here is for Apple to eventually convert its models to have that capability to do that instead of OpenAI and Google. But the bigger picture here is adding cameras to as many devices as possible in order to get people to upgrade, but mostly in order to tap into its artificial intelligence offerings.
Hey, Mark, I use ChatGPT a lot, and I talk to it. It talks to me. It's pretty helpful, fun conversations. I try that with Siri, and it just doesn't work as well. When are they going to make real advances with their AI assistant?
It's going to be a while. At this point, my belief is that they're not going to have anything significantly new or really powerful until 2027. So we're about a few years away. And as I wrote last week, they're shaking up their management of Siri. They've actually removed Siri from the oversight of their head of AI, right, which tells you pretty much everything you need to know. And they've moved that into their software engineering organization, and they put the guy who created the Vision Pro in charge of it.
This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just opened. Our top stories. A strong lead-in for Asian stocks, with Wall Street notching one of its best sessions of the year. Risk appetite getting a boost from signs US trade sanctions will be narrower than feared. President Trump, though, warning tariffs on imported cars are coming in the next few days ahead of his April 2 reciprocal duties. And we're live at HSBC's Global Investment Summit in Hong Kong. We'll be speaking exclusively to ARK Invest CEO and CIO Kathy Wood. All right, let's get a check on how markets are tracking. We have just opened for trade here in Australia. Of course, it is a staggered open, so hard to get a read on things in the early going. We're seeing some modest upside there, and modest upside is also what we saw on Monday here in Australia. Just the ASX higher by a few points there. Nikkei futures showing a little bit of softness at the moment. We do get Bank of Japan minutes from its January meeting today. Might give us a little bit more insight into BOJ thinking. We've also got the yen right now back above that 150 level, and not a lot of change there for the Chinese yuan. It was a pretty good day for US stocks, however. We saw a pretty powerful rally, particularly for tech names. The Nasdaq was up 2.2%. The Mag 7 had its best day in about 2 months, and we also had President Trump signaling a more nuanced approach to that big tariff announcement coming on April the 2nd, so-called Liberation Day. There might be some reciprocal relief, so that's sort of a bit of a tailwind for US stocks, but we're seeing futures looking a little bit softer at the moment. The oil price, one to watch as well, climbing a little bit. The US also announcing it's going to be placing a 25% tariff on any country bringing in Venezuelan oil and gas. Now, more details on that also coming on the 2nd of April, but that could impact China as well. So, yeah, a little bit of volatility to watch in the oil space going forward. Well, let's get a bit more on those tariff plans. President Trump saying he's going to announce tariffs on vehicle imports in the coming days, while indicating that some countries will receive breaks from next week's reciprocal tariffs. For more on this, let's get to Bloomberg senior editor Derek Wallbank. So, Derek, in terms of these potential reciprocal breaks, what could be on the table here, and which countries might get a bit of relief?
Well, what a big question that turns out to be. I think we've talked a lot, right, over the last couple of weeks about the difference between what Donald Trump has threatened at its most maximal levels, as well as what winds up actually getting done. There's a certain arbitrage opportunity within those, as you saw markets reacting there. Now, Trump has said that he's going to announce tariffs on these automobile imports in the coming days. We've been looking for that as details of where those are going. Trump has pushed for automobile manufacturers to move production into the United States to do that. But at the same time, he did, as you mentioned, note that there are going to be opportunities for countries to sort of figure ways around some of the tariff packages and open things for negotiations. We've seen a lot of countries trying to do this already. Speaking to in our local area, right? Australia is one of those key partners. The Albanese government has been very keen to try and figure out ways that it can get around some of the tariffs that have been mentioned there. Haven't found quite so much success so far, but it is a critical question that all of these countries are figuring out, because as Trump is going through and saying that there may be ways around, he is not necessarily giving countries a full roadmap on how exactly to do that, what is the package of deals that may be necessary to do so, but he has indicated that such things are possible, and you're seeing a range of reactions and strategies for how to do that, from a very sort of soft, non-confrontational tone that Mexico has taken, to a very sort of ice hockey-inspired elbows-up response that Canada has taken.
Let's talk a little bit about these potential oil tariffs as well, secondary tariffs on any country, 25% that's importing oil from Venezuela. What's the reasoning behind this, and which countries could feel the most impact potentially?
Well, again, great question. We just had some breaking news before we just started here, which was that the Trump administration has released an executive order on this. Now, we're still going through the details of this. I've had a quick look at it. it does appear, as written, to have a little bit of wiggle room in it, a little bit of discretion. So it may not be every single country that imports Venezuelan oil, either directly or indirectly. Of course, it should be mentioned the United States is an importer of these products, but obviously there's probably not a mechanism to tariff itself. This order, as I say, does give the State Department a little bit of wiggle room in terms of figuring out who would get this. But what Trump is talking about here is a 25% secondary tariff. That would be a tariff on top of anything else that is already promised, threatened, implemented. So a secondary addition. Think of this almost as a tariff version of sanctions, if you will. So a little bit of a novel kind of theory of the case that you see the administration rolling out. This is going to come on April 2nd is the first day that these could go into effect. So that's something to watch for. One nugget in that executive order that stood out particularly to me is that this one continues a trend that the U.S. has been doing of ensuring that everyone knows that if a decision is made on China, it would affect Hong Kong and Macau as well. No differentiation in the special administrative regions.
All right, Bloomberg senior editor Derek Wilbank there. Well, Atlanta Fed President Raphael Bostic now expects just one rate cut this year instead of two. He told us exclusively that it's unclear whether tariffs will be a one-time hit to prices. But President Trump's top economic advisor has played down the idea of short-term damage to the U.S. economy.
I don't think that there's going to be material short-term pain from the tariffs. I think the short-term pain is coming from the reorientation of the economy from the government to the private sector. Now, of course, as you know, the tariff situation is still developing.
I was at 2. I moved to 1, mainly because I think we're going to see inflation be very bumpy and not move dramatically and in a clear way to the 2% target. Because that's being pushed back, I think the appropriate path for policy is also going to have to be pushed back in getting us to that neutral level.
Well, let's get some more perspective now on markets with our next guest. Rahul Chahda is founder and CIO at Shikara Capital. Joins us right here in Sydney. So, Rahul, thanks for joining us today. Just want to start with those remarks from Raphael Bostic there, potentially just one rate cut now in 2025. What's your outlook for what the Fed's going to do this year?
Yeah, Paul, I think those projections seem to be moving. I mean, if you look at 6 months back, there was almost one towards the end of the year. A couple of weeks back, it was 2 or 3 beginning June, and I think as the tariffs get a lot clearer, and our sense is the tariffs are going to be a lot more narrower in scope, a lot more moderated, I think the rate cuts would be much higher than one. Our sense is still 2 or 3. Yep.
And in terms of the impact of tariffs, I mean, everyone's got an opinion on this. Are they inflationary? Are they not inflationary? Is it a one-time hit? What's your view on the impact?
So the sense is here that, look, unlike 2018, where U.S. had a deflation issue, right now inflation is one of the biggest concerns, which is why the incumbent government, the Democrats, were voted out. And we've seen that in recent weeks with the current Trump administration also. They've been far more discerning about implementing the tariffs. So there's been a lot of noise, a lot of escalation to de-escalate, but you've not seen large-scale tariffs being implemented, basically.
In the terms of some reciprocal relief and maybe some carve-outs for some of the more cooperative countries, look, the markets took some comfort in that.
Absolutely. Yeah. So if you look at it, I think what is going to be is buy more U.S. oil, buy more U.S. kind of a defense equipment and other thing, etc. Probably buy more treasuries at low interest rates or zero coupon, etc. So I think that's the way, or probably invest in U.S. pretty much like the Plaza Accord of 1985. I think that is going to be the way out, but the space evolves in the coming quarters.
So is that your approach to U.S. markets, just buy more, full stop?
Yeah. So I think the way we are looking at this is our view is U.S. kind of goes through this period of detox, 2-3 years of course correction. Look, coming out of COVID, most other countries cut back on the fiscal spends. They've kind of curtailed their fiscal deficit, but for U.S., where fiscal deficit is about 8%, the trade deficit is exceptionally high. And to fix all these structural issues, These issues cannot be fixed in a quarter or two. They require 2-3 years, and most investors were overexposed to US, whereas as you come to, again, emerging markets, China is doing all the right things from June of last year. They're giving the consumption stimulus. They're taking care of the local government issues. India has gone through this cyclical downturn, which kind of impacted the economy last year, so things should improve.
I want to come back to the China-India story a little bit later, but if we can just look at the US for the moment and get to our Bloomberg question of the day. Do you think it's going to be not too long before we see the S&P 500 notch a new record?
I think it's going to bounce around these levels. So you see, the market is not cheap. It's kind of most people are overexposed. So what we're seeing in US is kind of a sell on rise for at least this year. And what we're seeing in some of these Asian markets is they are buy on dip. So you continue to see China, India touching new highs, where the US is going to jump around these levels.
All right. Rahul Chanda, founder and CIO at Shikara Capital, going to be staying with us. We will talk a little bit about China next. Also coming up on the Asia Trades, Bloomberg Scoop. Xiaomi looking to raise about $5.5 billion in an upsized share sale as it invests aggressively in its EV business. Also ahead, Newton Investment Management going to tell us why the dollar could be suffering from a positioning squeeze. We're going to head to the HSBC Global Investment Summit and talk to ARC's Cathy Wood. We'll also discuss Australia's defence spending plans ahead of tonight's budget. This is Bloomberg. It's shaping up to be a bumper year for share sales in Hong Kong. Bloomberg's learned that Xiaomi is set to raise about $5.5 billion in an upsized share sale to help expand its electric vehicle business. The offering comes just weeks after EV giant BYD raised $5.6 billion. So for more, let's bring in our China correspondent, Min Min Lows. So, Min, tell us a little bit more about this share sale. What's the plan and what's Xiaomi going to use the money for?
So according to the terms of the deal that Bloomberg has seen, Xiaomi was initially planning to sell 750 million shares, but sources have told us that Xiaomi plans to raise that to 800 million shares, selling at about 553 Hong Kong dollars a piece, which is slightly below the midpoint of the marketed price range. The company plans to use these funds to invest in R&D and to drive their overseas, drive their expansion as well. And this company, obviously, they're taking advantage of their share prices. You can see on the screen, it's actually flipped nearly 3 times over the past year or so, and investors like that this company has been able to replicate its success in the smartphone business in the crowded EV sector as well. Xiaomi has invested heavily into its EV arm. It's raised the delivery target this year after posting the highest revenue since 2021. It's planning to expand the scale of this second factory planned for Beijing to ramp up production. So very strong prospect for this company. And what this means for Hong Kong as well is that it could raise the overall share sales volume for Hong Kong to the highest this quarter since late 2021. And part of it is because the Hang Seng has been outperforming global indices, and that's drawn a lot of investors' interest and hopefully revive this deal pipeline as well as more companies tap on the equity markets for funding.
Let's talk about those BYD numbers as well, those sales topping Tesla for the first time. What's the car maker saying about what's next and which markets is it looking to expand into?
Yeah, so BYD managed to hit that milestone of $100 billion in revenue. As you said, leapfrogging Tesla. Its revenue came in at 29% growth on year, beating estimates. Net income grew by 34% on year, also beating estimates. But here's where it has fallen short of Tesla. It's the profits. Tesla still makes more profits than BYD, and that's where BYD's aggressive pricing strategy has an impact on its bottom line. But still, very aggressive targets this year for BYD. It's estimating that it could sell 5 to 6 million cars this year, up from 4.2 million last year. And it's already made good inroads in the first 2 months of the year, where sales was up about 93% year on year. And the company's chair said that the company will still continue to focus on R&D and to improve the company's competitiveness overseas. We know that it doesn't really have a market in US because of those tariffs, but it has made inroads into Europe and parts of Asia like Thailand, Singapore as well.
All right, Bloomberg's China correspondent Min Lo there. Let's get back to Rahul Chadha, founder and CIO at Shikara Capital. Rahul, you were mentioning a little bit earlier that you are overweight China, you like China. How do you feel about the car makers? You buying BYD, Xiaomi?
Yep, no, we've invested in these car makers, and even when we were positioned in China prior to this rally, our view was the global champions coming out of China, the likes of BYD, Xiaomi, Pinduoduo, Strip.com are super attractive because these names were trading at almost 50% discount to the global, the US peers, etc. And one could sense the product quality was getting significantly better than their international peers, and they were gaining traction in the global market. So I think that is going to be an interesting story for years to come, these new global champions from China, basically.
Obviously, though, China in the crosshairs of the US vis-a-vis trade policy, but we've heard from the government saying it's preserving fiscal power for any impact. How do you see this trade battle between China and the US shaping up?
So I think unlike 2018, where China was caught by surprise, China has been a lot more prepared this time around. If we see a lot of Chinese exporters who export to the US over the last 5 years have moved to ASEAN countries, have moved to Mexico. More importantly, I think the market's kind of pricing in this trade war. And what is happening also is over the last 6-9 months, the leadership in China is doing all the right things in terms of taking care of the local government debt issues, taking care of the real estate bubble, and then in a very targeted way giving the consumption stimulus. So they're then keeping their gunpowder dry, at the same time making sure the business and the consumer confidence comes back, basically.
Do you feel this rally that we've seen in China, though, feels a little bit uneven? Because if we take a look at the Hang Seng, it's done amazingly well. It's up something like 19% on year, while the CSI 300's looking pretty flat. Do you have any concerns about the confidence of retail investors in China and consumers as well?
I think what happened prior to this rally was a lot of the locals were kind of positioned in CSI 300 because their idea was this is relatively insulated from the foreign selling. And if you look at HSAI, the valuations are very attractive. So and bulk of these consumer platforms, the internet platforms, are in HSAI. So when the foreigners returned, it was bound to re-rate much better than the CSI. So no specific issues with the outperformance HSCI has. I think the companies there are great. The valuations were attractive. It was under-owned. And you look at the inflows from the southbound, the inflows, YTD has been record, basically. If I'm not mistaken, more than $150 billion.
I want to talk to you about India as well, because you're also bullish on the outlook here. We did see some pretty heavy selling for the nifty towards the end of the year, but the last 6 days, it's really started to see that turn around. Do you feel that that's sustainable?
Absolutely. So our view was somewhere around mid-Feb that India's bottom. See, what happened in India was, again, in H2 of last year, you had RBI, which was tightening. Again, there was a Forex reserve drawdown of about $60 to $80 billion. Domestic liquidity was tight. RBI was worried about the unsecured lending. Look, government had run out of this, all these infrastructure projects. So all that kind of turns better now. What we've seen, YTD, is RBI's cut rate by 25 bips. We've seen government give some bit of a fiscal handouts, $12 to $13 billion to the people, and the economy is kind of a bottom and is improving Q&K. And India is a structural story. See, something we've got to understand is, with whatever China is doing, growth is not going to be beyond 3 to 4%. So you've got to buy market share gainers in China, you've got to buy global champions in China. But India is a story of 9 to 10% nominal GDP. And when a $3.5 trillion economy grows at that creates a whole bunch of opportunities.
All right, Rahul, thanks so much for coming in today and sharing your insights. We're out of time, though. Thank you. That's Rahul Chadha, founder and CIO at Shikara Capital. We have more ahead on the Asia Trade. This is Bloomberg. Welcome back. Here are some of the top corporate stories that we're tracking today. Hyundai has announced plans to invest almost $6 billion in American manufacturing, including a new steel plant in Louisiana. The company also says it plans to spend about $21 billion in the US through 2028 to increase vehicle production, confirming earlier reporting by Bloomberg. President Trump hailed Hyundai's plan, saying it's a clear sign that tariffs work. Boeing reportedly wants to withdraw from a deal with US prosecutors to plead guilty to misleading regulators before the two deadly crashes of its 737 MAX aircraft. The Wall Street Journal says the plane maker is seeking potential leniency from the Trump administration, which is reviewing many pending white-collar criminal cases. OpenAI is expanding the role of its chief operating officer, Brad Lightcap. He'll now oversee day-to-day operations, including international expansion and partnerships with firms such as Microsoft and Apple. OpenAI CEO Sam Altman's shifting his focus to the technical side, including guiding research and product efforts. Meanwhile, in an effort to rival the ChatGPT maker's dominance in generative AI, Google is reshaping its search engine. However, as the company's leadership embraces chat-based searches, Google's struggle to translate AI breakthroughs into substantial consumer products persists. Well, let's bring in Bloomberg technology reporter Julia Love. Julia, why has it been so hard for Google to incorporate generative AI into search?
So this really hits on some existential questions for Google. They invented many of these breakthroughs in generative AI, but it has been really tough for them to fundamentally reinvent their core product, Google Search. To really roll out generative AI in search would potentially mean disrupting the ad business. And so that has kept them moving more slowly. And with our story, we documented some attempts that were made internally to launch this technology in search well before the launch of ChatGPT. But there was just a real cultural resistance to shaking things up at that time.
So how's the response to OpenAI been going so far?
It has been a bit bumpy. Google rolled out AI overviews in the middle of last year. The product was delivering some faulty advice to users, telling people to eat rocks and put glue on pizza. And I think that Google is just held to a different standard. When ChatGPT hallucinates, people kind of view that product as a bit more of a novelty, and Google Search has become a core utility in all of our lives.
All right, Bloomberg technology reporter Julia Love there. And subscribers can read more about Google embracing AI in today's Big Take, and that's available on the terminal and on Bloomberg.com. Right, let's check in on US futures. Looking a little bit softer at the moment after what was a pretty strong day on US markets. We've got S&P E-minis off by just 5 points at the moment, although we did see stocks rally pretty hard in the US session. The Nasdaq up 2.2%, Mag 7 having its best day in about 2 months. And we've got Dow futures looking kind of flat at the moment. The reason for today's rally, though, of course, we have President Trump signalling a more nuanced approach to Liberation Day tariffs. That's April the 2nd, signaling that there could be some reciprocal relief for a number of countries. We did see factory activity, though, slipping back into contraction in the US for the month of March. And yeah, you guessed it, that's due to a tariff-related rise in raw material costs. Well, let's take a look at how we're tracking here in Australia. Meanwhile, we've been up and running now for just coming up to 27 minutes, and we have actually that's not on the board there, so I'll tell you about FX instead. We've got the yen softening a little, now at 150.81. We're going to get minutes from the Bank of Japan a bit later from the January meeting. However, they're always a little bit slow to make an appearance. Not a great deal of change for the Aussie dollar there, just softening ever so slightly against the greenback. Big day in Australia, of course. We do have the budget being handed down later on this evening, so that's in, let's say, about 9 hours' time. And that budget will, of course, be foreshadowing an election, which is yet to be called, but we know that it's going to happen before May the 22nd. All right, we have more ahead on the Asia trade. Do stay with us. This is Bloomberg. You're watching the Asia trade. Here's a look at how the Aussie dollar is doing, just still hovering below that 63-cent US level. We are, of course, awaiting this evening's budget. Treasurer Jim Chalmers set to unveil that annual budget in Canberra tonight, Tuesday night. Economists expecting a small revenue upgrade with an underlying cash deficit slightly better than predicted. Government reporter Ben Westcott joins us now with more. So, Ben, we've had a couple of surpluses out of the bag from this government that we didn't really expect, but is that the end of the line?
Well, for the moment, certainly. I think the government is at the moment saying that they are not expecting any budget surpluses. Well, they're not effectively saying when we would expect the budget to go back into surplus. Part of that is probably because they want a bit of leniency when it comes to this. Part of it is because the first two surpluses, I mean, it's fair to say, didn't help them economically. Didn't help them politically a huge amount. Obviously, they were, for a long time, a surplus was the gold standard of budget management in Australia. But certainly in recent years, despite getting those two surpluses, there's been a lot of criticism of the government's budget strategy. So now going forward, I think they're looking more at small deficits rather than anything else.
And of course, this year's budget coming earlier than usual because it's setting us up for an election probably in May. And how are they going to balance these questions over cost of living on the one hand with probably a need to increase defence spending on the other?
Yes, well, I think it's going to be a really delicate balance for the government because they still can't afford to increase spending too much and risk inflation going through the roof again. Because, even though they are planning for the election, they are also looking at potentially a second term in office, which would then mean that there was a giant jump in inflation later in the year, partly as a result of their spending and partly as a result of global factors. Then that would be really bad for their government. But what they're looking to do at this point is they are sort of throwing the guardrails aside just a little bit, opening it wider than they have in previous years to make sure they can fit in some of that spending that they need, particularly on things like healthcare, which is going to be one of their biggest ones. There's not going to be, we think, too much new spending on defence in this budget. It'll be more a highlighting of what they've previously done on defence, just as a result of the fact that they haven't really got huge mountains of cash to splash around.
All right, Australian government reporter Ben Westcott there with a busy night ahead of the budget. And you can join us tomorrow. We'll have a full debrief of the Australian budget. Finance Minister Katie Gallagher is going to be with us live, 7:15 a.m. Hong Kong time. Also, Shadow Treasurer Angus Taylor is going to give us the opposition's response about an hour after that. And we'll have more scrutiny of Australia's budget and defence spending plans coming up in the next hour. We'll be joined by the Australian National University's Jennifer Parker. Well, Atlanta Fed President Raphael Bostic says he now sees just one interest rate cut this year rather than two, and that's due to tariff hikes impeding progress on disinflation. Speaking exclusively to Bloomberg, Bostic also says the big question is how consumers will react to higher prices.
My projection of where inflation is going to go this year is pretty much sideways, and we won't get back to a more neutral level of inflation, our 2% target, I don't project until sometime early in 2027. But it is very much hearing people take in the latest news, figure out what that means for them, and then I will respond to that in terms of how I think about the economy's trajectory and policy.
Last month you said you thought that we would have 2 rate cuts this year. The dot plot didn't change, still calling for 2 rate cuts, but a number of people moved their dots up to say maybe we get fewer than that. Were you one of those?
I was one of those. So I was at 2. I moved to 1, mainly because I think we're going to see inflation be very bumpy and not move dramatically and in a clear way to the 2% target. Because that's being pushed back, I think the appropriate path for policy is also going to have to be pushed back in getting us to that neutral level.
Well, some of your colleagues also moved their dots down, suggesting that we might see more rate cuts, probably because they think the economy will weaken. What do you think the odds of an economy weakening because of fiscal policies are?
Well, what I would say is I am hearing more concerns about the trajectory of the economy. That's undoubted. But what I also will say is the data that's come in to date has not actually shown that, and we've still seen a resilient economy. I do know that consumer sentiment has started to take a dip, and the question that we face right now is Is consumer sentiment going to be a leading indicator like it was pre-pandemic, or is it going to be something that doesn't really translate into actual observed behavior in the economy, that as how it played out for most of the pandemic? Right now, it's an open question, and it's one of the things I'm going to be watching very closely in the months to come.
Well, it's hard to know for sure what consumers are going to do, but you talk to business leaders all the time. What's the general attitude of CEOs right now about business outlook and about their plans for, say, hiring or even raising prices?
So, we actually have started to ask our business leaders exactly this question. Where do you think pricing pressures are going to go, higher or lower? What we've heard consistently is they think they're going to go higher. Then we ask, what do they think is going to happen in terms of their sales? And they're also quite bullish on the sales rising as well, which says to me they think that consumers are going to be able to manage these higher levels of prices and whatever changes in prices that happen moving forward. We'll have to see if that actually plays out. I think that would be one of the big questions and stories that emerges through the course of 2025, namely how the consumer manages in the face of these elevated price levels.
That's Atlanta Fed President Raphael Bostic speaking to Bloomberg's Mike McKee. Well, joining us now from Hong Kong is Ella Hoxha, Head of Fixed Income at Newton Investment Management. Ella, thanks so much for joining us today. I just want to start with those remarks from Raphael Bostic that there may just be the one rate cut in 2025. What's your outlook around this?
Well, of course, there's a lot of uncertainty in markets right now, particularly April 2nd being a very important date, which is just around the corner. We would probably say that the risks are that we get more cuts. And the reason for that is the Fed is more likely to be reactive this year rather than proactive. So just the way we've revised from 3 to 2 to now 1, as Bostic was saying, I think potentially we could go the other way around. Certainly the risks have gone up on the growth front, although the shorter-term inflation implications are more sticky, as we just heard. So we would probably err more on the side of caution and say more cuts, I apologize, likely rather than hikes, sorry.
In terms of the stickiness of that inflation, I mean, Raphael Bostic, I mean, he sits on the Fed board. He's unsure if this is just going to be a one-time hit to prices from tariffs. What's your view of the inflationary impact of these tariff policies?
There's no doubt a hit in terms of price levels, but thinking more akin to tariffs as a bit of a VAT hike. So you get the one-off effect, and there's, of course, no doubt on inflationary impact from that. But in order to sustain that down the road, I think you need a series of chains of events. And so we would probably more see it as a short-term higher inflation, but down the road, potentially less so. Definitely in that camp.
We've seen yields ticking up ever so slightly as well. The yield on the 10-year was up about 9 basis points in the last session. Now, this is not what Scott Bessent wants. He's been saying that he wants yields lower, and he's shown some signs of taking concrete action to achieve that, limiting the size of 10-year debt auctions, looser bank regulations. Where do you see yields tracking in 2025?
We probably see more of a roller coaster environment. So we would argue perhaps over the next quarter or two that yields actually head down. And that's because of this uncertainty that we have both for consumers and for businesses. And so that should act as an anchor on yields and pull them lower. Down the road, it's a very different story. Of course, we're operating in a highly uncertain and highly unusual environment. So we don't know for sure. But I think the odds are definitely stacking in favor of yields lower. So maybe we will get what the policymakers want, which is certainly a lower yield. But I do think that's potentially going to come on the back of concerns around growth and possibly what financial markets do. So what equities do probably is even more important here. Because I sense that fixed income, or in terms of treasuries, they're following equity markets. So equity markets are very important here in terms of gauging that sentiment of what's actually happening in the real economy. So it's a little bit of the reverse of what we've been seeing over the last 3 years. It's been rates leading equities and credit. Now I think it's the reverse of that. It's almost like equities leading credit and rates.
Yeah, well, if equities are a gauge of sentiment in the economy, we've had a pretty wild ride. Do you feel that this is reflecting the uncertainty to a large degree?
Absolutely, and obviously the correction has been heaviest in the Magnificent Seven, but we have felt it across the board. But of course, a lot of dispersion. If you look cross-country, you'd probably not feel that it's it's a very bad setup in equities. But certainly, when it comes to U.S. equities, it's been a much softer patch. But I think it goes down to the roller coaster environment I was describing earlier for fixed income. So I think we are in that setup, and it's very much a trader's market rather than a buy and hold environment. So I do think this year it's going to pan out like that.
I'd like to get your views on Japanese bonds as well, because we've seen 10-year JGB yields creeping higher as well. And so far, Governor Ueda's not shown too much concern over this, but at the same time, he said, look, the BOJ stands ready to act if necessary. Where do you see the JGB yield tracking from here, and what's the threshold for the BOJ to do something?
Well, I would say probably at the long end of the curve, we're getting around those levels. I mean, you're getting towards 3%. I would probably say that's at best fair value. But of course, the pressure for yields has persisted. Also, there's been something that's acted as an anchoring for yields globally. JGBs and German bonds have de-anchored over the last couple of months. So that pressure is very difficult to say what stalls it. But I do think it's going to be connected to this risk sentiment in general. But I think right around here, should the BOJ intervene? Perhaps not, because we've had a healthier repricing of the curve in Japan. Certainly in the belly of the curve, the 5 to 10 year, we have still room to pressure higher. But I would say in the long end, we're probably around those levels where I would deem very difficult to see why pressure should continue from here in a significant manner.
And how about the next move for tightening from the BOJ? Is May a live one, or do you think it's going to happen later than that?
I think May is quite a tricky month, right? Because we have the Fed, and I think if we're going to get a reaction from the Fed, and if markets are going to potentially force the Fed to do something, that is likely to be the month. So perhaps the BOJ will be guided by what happens with the Fed. But as things stand, as the inflationary picture develops, and what we've seen with wage prices, they should certainly be pulling rates higher here, and that's kind of like what the market is trying to tell them. So I would probably err on the side and say yes. But of course, it depends if we get any surprises from the Fed, then that might change pretty rapidly.
Ella, before we let you go, I'd like to get your view on the dollar as well. We've got the Bloomberg Dollar Spot Index off about 4% since its January high. Is this a trend, or do you feel that Forex markets are gripped by the same sort of uncertainty that other assets are?
I mean, I would see the dollar probably over the short term a little better supported, certainly over the next month or two. And I think the argument there is, of course, we have some clarity coming up on tariffs, but I don't think it's going to be all over on April 2nd. But also risk sentiment remains fragile, so that typically tends to support the dollar, so you have that famous dollar smile. But of course, this time could be different, so maybe we don't get that risk bid to the dollar as we've seen in the past. So it's not a high conviction call over the short term, but over the medium term, I would have more conviction to say the dollar is headed lower. And so I think that's probably something that investors can engage with down the road.
All right, Ella Hoxha, Head of Fixed Income at Newton Investment Management. Thanks so much for joining us today. Still to come, Bloomberg has learned that HSBC is weighing outsourcing some of its trading operations to help lift returns. Details of that story next. This is Bloomberg. HSBC is said to be considering outsourcing part of its trading business as executives struggle to justify making technology investments. For more on this Bloomberg scoop, let's get to Bloomberg Intelligence Senior Analyst for Australian Financials, Matt Ingram. So, Matt, what's HSBC trying to achieve by outsourcing what looks like a core business?
G'day, Paul. Yeah, it's an odd question for them to be asking. They need to find $3 billion. About half of that is transfers within the business. About half of that's cost cuts. And so I think this falls into the latter bucket, the $1.5 billion of cost cuts. Big IT spend, yes, but it's a core business. It's a strange one for me.
Yeah, so what could the consequence of this be?
So the thing about sales and trading, and particularly market making, is you know where the skeletons are buried. So when it comes time to build a book on a bond deal or an equity deal, you know who the buyers are and you know who the sellers are. And HSBC loses that visibility if they do this. Yes, they're going to cut costs, but at what expense to revenue?
And how about what brought about this aggregation of bond trading to these platforms?
It's been a particularly opaque business pretty much from day one, bond trading. A lot of it was customer to customer, over-the-counter type trading. And as we've seen that business progress into more of a on-the-screen type trading, some of it done by machines, obviously that opacity has disappeared. It's become a far more transparent business, and that's massively eaten into margins. So I guess the problem is they were earning big spreads on that business historically. They're now not, and they're asking themselves the question, does the revenue justify the cost?
Yeah, and who's picking this up? It's Citadel and Jane Street. What sort of role are they going to play here?
Yeah, so look, they're obviously going to be putting this stuff on the screen. They're going to have algorithms at the back end matching buyers and sellers. It's going to be very thin spreads. But as I said to you, once that business goes out the door, HSBC's sales trader no longer knows where the buyer is. They no longer know where the seller is. So longer term, one might ask the question, are the investment bankers happy about this, for example? When they've got a big bond deal to place, who do they sell it to?
All right, Bloomberg's Matt Ingram there with a hanging question. We're going to hear exclusively later from the HSBC CEO, in fact, Georges Al-Deri, as we bring you live coverage from the bank's Global Investment Summit in Hong Kong. And in a few minutes, we will be at the summit with our first live guest, ARK Investment Management's Cathy Wood. And that is followed by an exclusive with Yum China CEO Joey Watt. More ahead. This is Bloomberg.
I don't think that there's going to be material short-term pain from the tariffs. I think the short-term pain is coming from the reorientation of the economy from the government to the private sector. Now, of course, as you know, the tariff situation is still developing.
I was at 2. I moved to 1, mainly because I think we're going to see inflation be very bumpy and not move dramatically and in a clear way to the 2% target. Because that's being pushed back, I think the appropriate path for policy is also going to have to be pushed back in getting us to that neutral level.
All right, that's Atlanta Fed President Raphael Bostic there, also hearing from President Trump advisor Stephen Marron. Let's take a look at how U.S. futures are tracking at the moment. Kind of flat right now, but it was a very strong day for U.S. stocks. A pretty decent rally there. The NASDAQ up by more than 2%. The Mag 7 also having a really good day. Tesla was up almost 12%, so a sharp rebound there, but it's still down about 31% year to date. So the reason for all this optimism, President Trump signaling there's going to be a more nuanced approach to April 2 tariffs, possibly some reciprocal relief for some countries as well. Let's take a look at top global headlines now. The Atlantic's top editor says he was added to a text group where U.S. Defense Secretary Pete Hegseth shared detailed plans for bombing Houthi militants. Jeffrey Goldberg says he received a connection request via the encrypted messaging service Signal from National Security Advisor Michael Waltz. The White House spokesman says the report appears to be authentic, and they're reviewing how the journalist was added to the conversation.
I've heard I was characterized. Nobody was texting war plans, and that's all I have to say about that.
U.S. and Russian officials have met in Saudi Arabia. This is a day after American and Ukrainian teams held talks. The discussions focused on the safety of navigation in the Black Sea and a potential maritime ceasefire, with the goal of achieving a broader and permanent peace. Ukraine's ambassador to the U.S. told us they support the U.S. push for a full 30-day ceasefire.
We believe the idea of a full ceasefire, which President Zelensky not only commended, but again, we embraced it wholeheartedly. It's a great idea. President Trump suggested the full ceasefire for 30 days. That's a great idea, actually. That would save lives. Unfortunately, we need Russia to agree to that.
India is planning to seek an exemption from President Trump's reciprocal tariffs. Sources say officials in New Delhi are expected to make the case when the two sides meet on Tuesday for talks on a bilateral trade deal. India has already taken steps to appease the US president, including lowering imported taxes on certain goods, and is considering further concessions. The UN is asking 1/3 of its international staff based in Gaza to temporarily leave over security concerns. Hundreds of civilians, including a UN worker, were killed last week by renewed Israeli strikes in the Strip. The Israeli military, meanwhile, says it's intercepted projectiles launched from Yemen and northern Gaza in the past few hours. Got an alert on this long-running potential deal between Seven & I and Couche-Tard. Got a statement from Seven & I saying that it isn't true that they have rejected the Couche-Tard proposal. They are saying, however, that Couche-Tard refused to sign a non-disclosure agreement. Seven & I adding that it takes antitrust concerns in the United States very seriously, but reiterating that it is not true that Couche-Tard proposal has been rejected. So, yes, another incremental development in this long-running story. Let's take a look at how markets are tracking at the moment here in Australia. After coming up for 55 minutes of trade, pretty positive day at the moment. We're better to the tune of 0.2%. Pretty much every sector in the green with the exception of materials, but that sector is only off by about 0.1%. Financials having a pretty good day here, better by about 1% at the moment. Taking a look at Nikkei futures as well, setting up for a positive start to the Tuesday session there, also better by a shade over 1%. We did see Japan slipping a little bit on Monday. We're going to have Bank of Japan minutes coming out a little bit later. However, they are for the January meeting, so some interest, but perhaps limited interest there. S&P futures, as I mentioned, are currently looking kind of flat at the moment. We'll also got Korea opening at the top of the hour as well. We'll be getting some data out of Korea shortly. We've got consumer confidence numbers for March. That's seen slipping. Retail sales for the month of February coming out later as well. And keep an eye on Hyundai after it announced a $21 billion investment in the US through 2028. That's to boost its vehicle production on American soil and help it avoid President Trump's tariff plans. Still to come on the Asia trade, we're going to be crossing live to the HSBC Global Investment Summit. We'll be talking exclusively to ARC's Cathy Wood about unlocking opportunities in Asia. We'll also have more on the Australian budget. That's tonight. We'll be joined by the Australian National University. And later, we'll be speaking exclusively to Qantas CEO Vanessa Hudson about her outlook for the carrier and the aviation industry. She'll be joining us at the Airbus Summit in Toulouse. We have market opens coming up in a moment. Seoul and Tokyo set to start trading next. This is Bloomberg.
जब सेविंग्स अकाउंट पे हर महीने इंटरेस्ट मिले तो इंटरेस्टिंग चीजें कर लेनी चाहिए।
हर महीने इंटरेस्ट नहीं मिलता, वो तो 3 महीने में एक ही बार मिलता है।
अरे भाई साहब, मिलता था आपके ब्लैक एंड व्हाइट जमाने में। हमारा बैंक तो हर महीने देता है। IDFC फर्स्ट बैंक में अकाउंट होगा
तो मोर मिलेगा।
This is the Asia Trade. We're counting down to Asia's major market opens. And of course, we're continuing to be on tariff watch, right? President Trump saying that auto tariffs are coming. Reciprocal duty breaks, are kind of being teased at the moment, but there's still a lot of wait and see. And in terms of the longevity of anything that's announced, too, is a question mark.
And April too, I mean, in the context of what we've seen so far this year, it's so far away, it feels like an eternity. But on a more certain front, we do have the Australian budget coming out tonight as well. So that's going to be interesting to watch for potential potential election year sweeteners.
And it's interesting, right, because it's sort of federal budget, it's the same sort of conundrum that global central banks are facing. How do you deal with the unknowns, the known unknowns, I guess, when it comes to the Trump administration, how that could impact Australia's fiscal situation as well. Let's get you straight to the start of trading in Japan and Korea as that comes online. We do have the BOJ minutes from that January meeting saying that the price expectation risk there could exceed 2%. The rate is around 1%. That's desirable for the second half of the full year 2025. This is, of course, if you recall, the January meeting where they hiked. After that, they have, of course, paused in March. And one significant thing that may have changed since then is of course, the wage hikes that we've had through the Rengo Union pay deals, as well as just expectations of further real wages continuing to improve, given that has really been a tension between sort of household confidence and inflation starting to creep up there as well. We are seeing the Nikkei 225 just coming online. A little bit sort of to the upside there. The tariff signals we're seeing create some positivity when it comes to risk sentiment today. About a 1% start to trading for the Nikkei 225. The topic's also not far behind, but 0.8%. US equities, of course, in the previous session had one of their best sessions of the year. And a lot of this sort of on hopes and expectations, perhaps, that these trade sanctions from the Trump administration might be narrow in scope, and perhaps there are sort of reciprocal avenues for relief as well. Let's head over to the Korean market, where this is the picture as we get into the start of trading for the Kospi there, up by 0.7%. We're seeing tech stocks also seeing some leadership there as well. We're watching Hyundai Motors as shares they're rising 7.5%. As of course, we did hear from President Trump hailing its US investments, and of course, kind of, I guess at this point, putting it into the good books, if you will. So we are seeing a bit of a relief rally there for Hyundai Motors. And of course, it has been such a difficult time when it comes to a lot of these Asian car makers, given the threat of automaker tariffs. But President Trump saying that he could give a lot of countries breaks on tariffs without being awfully specific at all.
Yeah, and that, relatively good news, helping to float stocks here in Australia as well. We've got the ASX also showing some upside to the tune of about 0.7%. Almost every sector is in positive territory, even materials now just turning flat after having a negative start to the day. Not a lot of action on the rest of that board, though, is there? Everything else pretty much unchanged. We did see yields in the US climbing as well. And we also heard from the Fed's Raphael Bostic saying, well, look, maybe we're only going to see one rate cut in 2025, although in the broader theme of uncertainty, well, let's see how that call evolves in the coming few weeks and months. For more on markets now, let's get to Bloomberg M-Live strategist Mark Cranfield. And let's start on that tariff story. Mark, tariffs on auto imports coming in a few days, according to President Trump. Possible reciprocal breaks as well. I mean, look, do we know any more detail here, or could it all change in an instant?
I think investors are just hoping that it's not as bad as what they were expecting just a few weeks ago. So they're currently coming from the angle that they're happy to hear that the tariffs might not be on everybody. They might be diluted in some cases, and that's obviously what helped to boost the equity market overnight in the US. And it's not too surprising when you consider that US equities have gone through a pretty rough patch. For a few weeks they were being sold off pretty aggressively, so people will be underweight. They'll be looking to get back into the market to some extent, and yet we don't really know the full details of what the tariffs will look like next week. It's just that people are assuming that they can take the word of President Trump that it won't be as bad as what they were expecting recently. So that's why you're seeing a little bit of optimism creeping back into the market. That could easily change very quickly. We've seen that this is a very fluid situation. From day to day, different things are announced. Today we've had tariffs being put on Venezuela related to oil. Who knows who will get stuck with something similar tomorrow. So traders are taking a very short-term approach to that. Just because we've seen a decent bounce in Wall Street on Monday doesn't really tell you anything about what's going to happen to trading on Tuesday, depending on the next headline that hits. One of the most interesting things, as you mentioned in the run-up there, is that Mr. Bostic from the Fed is now only seeing one interest rate cut from the Federal Reserve this year. So much of the situation related to US equities is because the Fed is on a pause at the moment. They do have two dot plots written into their forecast for this year. But if Mr. Bostic is dialing back, that could mean that others are as well. So here you are, a situation for investors where the Fed is no longer being as supportive as they may expect for US equities. So it does tell you that any kind of bounce that you see in the very short term for US equities may not last too long. And of course, we wait to see whether or not April the 2nd really is a very serious day for tariffs across the board, or whether it's going to be heavily diluted. We have to wait and find out.
What are the expectations when it comes to China tech at the moment? Because it seems like we're seeing leaps and bounds. Of course, BYD with a big fundraising round. We're seeing Xiaomi now, that $5.5 billion upsize Hong Kong share sale as well. Does this tell us that we're seeing these companies sort of capitalize on the momentum? And I guess, are the long-term sort of positives still intact for China tech?
Well, as you say, it tells us a number of things. Obviously, clearly, investors are buying back into the Chinese tech story. They're very excited about AI developments. Otherwise, these companies wouldn't be able to raise such significant amounts. And it may well be that investors are still relatively underweight, considering that during the zero COVID period, so much money left China. People may have even actually gone short of China equities, given that they went through such a rough period as well. So not only money needs to come back in that had completely disappeared from China, they're getting excited about this AI story, and it's coming from a pretty low base as well. So not too surprising that this may well have legs, particularly if companies continue to boost decent numbers, as we saw with BYD, and we saw some of the reports last week. Earnings are pretty good in the Chinese tech sector. All of this fundraising from people like Xiaomi and BYD, also, there's a big gorilla in the background that they're all worried about is CATL. This company is one of the biggest in China, is probably going to have its earnings in the middle of April, and not too long after that, people are expecting that CATL will go for a secondary listing in Hong Kong. When they do, it will be one of the biggest IPOs ever seen in Asia. So a huge chunk of money will be sucked out of the Greater China markets. So people obviously want to do their fundraising ahead of that. They want to get ahead of CATL just in case the market completely dries up by the time they approach. So you may well see other companies trying to get in this window while the market is very favourable, and they're very concerned about which next big, huge IPO may be coming to drain the market in a few weeks' time.
Mark, it's an interesting kind of environment for dollar yen at the moment, right? Particularly with those Bostic comments and just a growing divergence between what we're expecting from the Fed and from the Bank of Japan. The BOJ minutes, obviously they're quite backward looking. A lot of the data has really kind of just supported more action from the Bank of Japan to come. Where's the next kind of pain threshold for dollar yen then?
It can probably go a little bit higher in the near term. And it's very interesting that just yesterday, Governor Ueda was in front of Parliament. He sounded relatively hawkish, and yet dollar yen has still gone higher. So that tells you that the bias is shifting a little bit in the near term. Clearly, yen traders are a bit concerned about the political situation in Japan. Prime Minister Yoshida and his government here, the cabinet ratings are very low. They've just collapsed, basically, and this was not supposed to happen. Japan was supposed to put all these controversies behind it. That's why we had a new government came in last year, and yet they seem to be falling back into the same space. When you have this uncertainty in the political situation, that isn't good for the Bank of Japan. They need a clear run in terms of they need the government right behind them to say that they are fully supportive and that the yen can get stronger. That isn't happening in the short term, and traders have noticed that.
Bloomberg's Mark Cranfield there. Let's get some more on, of course, what traders are watching as an evergreen theme, those tariffs, with President Trump saying that he will announce tariffs on vehicle imports in the coming days, while also indicating that some countries will receive breaks from next week's reciprocal tariffs. Let's bring in Bloomberg senior editor Derek Wallbank. Derek, every day we kind of get more around this narrative and commentary. There's very little in the way of certainty in terms of what we know what to expect.
That's exactly right, Heidi. Look, April 2nd has been billed as Liberation Day by President Donald Trump. He has said that this is the day when the great tariffs are going to be coming. A whole wide swath of reciprocal tariffs are on the menu. More things to be rolled out at some point soon. The automobile tariffs, as you noted. But there is a lot of uncertainty over what this is going to be looking like with now just, a week away. So we're very much waiting for details from the White House. And I think we're not the only ones waiting. I think markets generally are waiting. Countries are waiting to see what the plans are for this, as well as how they might be able to negotiate their way around them. Now, one thing does appear to be clear. The initial kind of fears that this was going to be a line-by-line reciprocal tariff drawing exercise seem like that's not going to necessarily be the case. One of the reasons for that is simply a function of time. That would be a massive involvement across thousands of tariff lines and then more than 100 countries and regions and trying to figure out who gets what and all of those sorts of things. It would just be an absolute Herculean effort that the administration does not seem to have time to be able to do within a span of a week. So we're hearing talks of this maybe being a little bit broader, more categorization based. Again, I'm speaking in fairly broad terms because the details of this are not rolled out yet. So we're waiting for.
ओए गाइस, ये क्रूड ऑयल में हाफ प्रॉफिट जरूर बुक कर लेना, ठीक है। फर्स्ट टारगेट हो गया, बुक द हाफ प्रॉफिट एंड रिमेनिंग क्वांटिटी का स्टॉप लॉस कॉस्ट पर डाल दो। बुक द हाफ प्रॉफिट एंड ट्रेल द रिमेनिंग क्वांटिटी। देखते हैं सेकेंड लेवल तक आता है या फिर नहीं। बाकी यूएस मार्केट के बाद अब कोई डेटा नहीं है, ध्यान रखना। 7:30 वाला डेटा ऑलरेडी आ चुका है, अब कोई और डेटा आज के लिए तो शेड्यूल नहीं है। सीधे कल ही डेटा आएगा। नीचे आता है तो यहाँ से बाइंग प्लान है, नीचे वाले ब्लैक कलर की लाइन के अराउंड। देखते हैं रुकेगा यहाँ पर, नहीं तो एग्जैक्ट सपोर्ट थोड़ा सा नीचे रहेगा, बट ट्राई करेंगे यहाँ से भी अगर ट्रेड बनता है इन केस। ये नीचे वाला सपोर्ट भी ठीक ही है, मेजर सपोर्ट है। हाफ प्रॉफिट बुक करके ट्रेल करना, ध्यान रखना, एटलीस्ट हाफ प्रॉफिट बुक करके। करते रहो। साइडवेज रहा नेचुरल गैस तो पूरे दिन आज। क्रूड ऑयल भी थोड़ा बहुत मोमेंटम मॉर्निंग पे करने का साइडवेज हुआ, अब थोड़ा बहुत मोमेंटम आ रहा है। नेचुरल गैस भी ब्रेक नहीं कर पाया, ना ऊपर 341 ना नीचे 332 328 सॉरी। क्या आने वाला है टारगेट पे? क्रूड ऑयल बुक कर लेंगे यहाँ पर। एक एसएल गया था, उसके बाद वैसे देखा जाए तो थोड़ा बहुत रह गया। कैंडल ओपन इक्वल टू हाई हुई, फिर ऊपर से सेलिंग। यहाँ से कैंडल नॉर्मल बनती है, एक हल्का सा पुल बैक। अगर ओपन इक्वल टू हाई बनाते हुए आई इस लेवल पे तो फिर वेट कर लेंगे, फिर बाय नहीं करेंगे। फिर सीधा यहाँ तक जा सकता है उस केस में, क्योंकि ऊपर एक पुल बैक के लिए ज़रूर जाएगा फिर। बेस्ट बाइंग नीचे से ही आएगी। इसको रिमूव कर सकते हैं। बुक कर लिया, ग्रेट। 8:30 हो गया, टाइम है अभी मार्केट के पास, 3 घंटे हैं। तब नेचुरल गैस क्लोजिंग होते होते मूव करेगा या फिर कल। बाकी 4 अप्रैल शायद है, सॉरी 2 अप्रैल मेजर डे रहेगा उस दिन। देखने के लिए मिलेगा कोई रेसिप्रोकल टैरिफ किन कंट्रीज पे लगते हैं। सो मेजर डे है। इस वीक जीडीपी का डेटा भी आ जाएगा, तो ऑल डेटाज आर इंक्लूडेड। वरुण कोठारी जी 22 के बुक कर लिया क्रूड ऑयल में। ग्रेट 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 ग्रेट। अवॉइड करना अब नेक्स्ट कोई ट्रेड लेने से, ठीक है। जिनको ऑलरेडी हो चुका है प्रॉफिट, अवॉइड। इस वर्धन जी कितने लॉट लिए दोनों, कितने लॉट में ट्रेड कर रहे हो वरुण जी? फॉरेक्स में ट्रेड कर रहे हो, फिर तो और बढ़िया है। फ्यूचर फॉरेक्स और ऑप्शन सेलिंग, इनके बहुत, जितना मैंने देखा है, अगर आपके पास फंड ज़्यादा है मैक्सिमम टाइम प्रॉफिट में ही रहते हैं। ऑप्शन बायर को थोड़ी सी प्रॉब्लम होती है, जैसे नेचुरल गैस का ही केस है। आपको यहाँ से बाइंग करके बैठा हुआ है, मान लो उसको यहाँ तक का टारगेट है, उसका तो पूरा थीटा डिकी हो जाएगा। या फिर मान लो कि यहाँ से सेल करके बैठा हुआ है, मार्केट अगर ऐसे ही घूमता रहा तो फिर उसको कुछ मिलता नहीं है प्रॉफिट ज़्यादा। क्विक मोमेंटम बड़ा इंपॉर्टेंट हो जाता है। अरे वरुण जी मैसेज क्यों डिलीट कर दिया इनका? लाइक करते रहो गाइस, जिन लोगों ने लाइक नहीं किया है। बाकी पुल बैक देता है तो वापस सेल कर सकते हैं, ठीक है, वापस भी सेल कर सकते हैं। ट्रिक्वीन बांग्लादेश, रियल न्यूज है क्या बांग्लादेश में? इस वर्जन जी हमें भी फॉरेक्स में शिफ्ट होना पड़ेगा, पर वहाँ नेचुरल गैस में स्प्रेड बहुत ज़्यादा है। नहीं नहीं, एमसीएक्स से करो, कोई इशू नहीं है। वहाँ स्प्रेड भी ज़्यादा है और ओवरनाइट चार्जेस भी बहुत ज़्यादा है नेचुरल गैस के लिए। एक दो ब्रोकर ही होंगे जिनके कम होंगे, अदरवाइज यहाँ इंडिया में जो ब्रोकर यूज़ होते हैं बाहर के, उनमें सब में स्प्रेड बहुत ज़्यादा है। एमसीएक्स में कर रहे हो तो बढ़िया ही है, काम हो जाता है एमसीएक्स में भी। Might coup speculation in Bangladesh army chief refutes rumors. बुक कर सकते हैं क्रूड में। काफ़ी परेशान कर दिया क्रूड ने नेचुरल गैस की तरह, बट अल्टीमेटली आ ही गया नीचे। सेलिंग एक्सपेक्टेड ही थी। सुमित योर लेवल ग्रेड सर, मज़ा आ जाता है। ठीक है, बुक कर लेना क्रूड में। बढ़िया रहता है, रिस्क रिवॉर्ड अच्छा हो तो कोई प्रॉब्लम नहीं आती, रिस्क रिवॉर्ड बेकार हो तो प्रॉब्लम आती है। छोटे छोटे ट्रेड अगर लें तो प्रॉब्लम क्रिएट हो जाती है लॉन्ग टर्म में। तो एक सफिशिएंट एसएल 15-20 पॉइंट का मान लो एग्जांपल के लिए क्रूड ऑयल में, 1:3 1:4 का टारगेट इनफ रहता है। लेट क्यों आए? अरे मॉर्निंग पे निफ्टी बैंक निफ्टी में बिजी रह गए। चार्ट ने बड़ा परेशान कर दिया निफ्टी बैंक निफ्टी में दोनों में ही। इस वजह से देरी हो गई। क्रूड ऑयल बाय ऑन सपोर्ट लाइन, हाँ क्रूड ऑयल में बाइंग सपोर्ट पे करेंगे। यहाँ पर तो सिर्फ एक पुल बैक एक्सपेक्टेड है, ज़्यादा कोई बाइंग एक्सपेक्ट नहीं, थोड़ा बहुत पुल बैक आ सकता है। मेजर सपोर्ट नीचे है थोड़ा सा, यहाँ से बस थोड़ा बहुत पुल बैक ही एक्सपेक्ट करना, ज़्यादा कोई बहुत बड़ी बाइंग अभी एक्सपेक्ट नहीं कर रहा हूँ। एग्जैक्ट सपोर्ट थोड़ा सा दूर है, बट डायरेक्टली तो नहीं आना चाहिए लॉजिकली, तो एक छोटा सा पुल बैक एक्सपेक्ट कर सकते हो, ज़्यादा नहीं। बड़ी क्वांटिटी मत ट्राई करना, इससे बेटर है कि आप ऊपर से वापस सेल कर दो, ऊपर से वापस सेल कर दो, वो ज़्यादा सेफ है। एग्जैक्ट सपोर्ट 5900 के आसपास यहाँ मिल जाएगा। नेचुरल गैस क्या मूव करता है अब यहाँ से?
To do that, what is the package of deals that may be necessary to do so, but he has indicated that such things are possible, and you're seeing a range of reactions and strategies for how to do that, from a very sort of soft, non-confrontational tone that Mexico has taken to a very sort of ice hockey-inspired elbows-up response that Canada has taken.
Let's talk a little bit about these potential oil tariffs as well. Secondary tariffs on any country, 25% that's importing oil from Venezuela. What's the reasoning behind this, and which countries could feel the most impact potentially?
Well, again, great question. We just had some breaking news before we just started here, which was that the Trump administration has released an executive order on this. Now, we're still going through the details of this. I've had a quick look at it. It does appear, as written, to have a little bit of wiggle room in it, a little bit of discretion, so it may not be every single country that imports Venezuelan oil, either directly or indirectly. Of course, it should be mentioned the United States is an importer of these products, but obviously there's probably not a mechanism to tariff itself. This order, as I say, does give the State Department a little bit of wiggle room in terms of figuring out who would get this. But what Trump is talking about here is a 25% secondary tariff. That would be a tariff on top of anything else that is already promised, threatened, implemented. So a secondary addition. Think of this almost as a tariff version of sanctions, if you will. So a little bit of a novel kind of theory of the case that you see the administration rolling out. This is going to come on April 2nd is the first day that these could go into effect. So that's something to watch for. One nugget in that executive order that stood out particularly to me is that this one continues a trend that the U.S. has been doing of ensuring that everyone knows that if a decision is made on China, it would affect Hong Kong and Macau as well. No differentiation in the special administrative regions.
All right, Bloomberg senior editor Derek Wallbank there. Well, Atlanta Fed President Raphael Bostic now expects just one rate cut this year instead of two. He told us exclusively that it's unclear whether tariffs will be a one-time hit to prices. But President Trump's top economic advisor has played down the idea of short-term damage to the U.S. economy.
I don't think that there's going to be material short-term pain from the tariffs. I think the short-term pain is coming from the reorientation of the economy from the government to the private sector. Now, of course, as you know, the tariff situation is still developing.
I was at 2. I moved to 1, mainly because I think we're going to see inflation be very bumpy and not move dramatically and in a clear way to the 2% target. Because that's being pushed back, I think the appropriate path for policy is also going to have to be pushed back in getting us to that neutral level.
Well, let's get some more perspective now on markets with our next guest. Rahul Chadha is founder and CIO at Shikara Capital. Joins us right here in Sydney. So, Rahul, thanks for joining us today. Just want to start with those remarks from Raphael Bostic there, potentially just one rate cut now in 2025. What's your outlook for what the Fed's going to do this year?
Yeah, Paul, I think those projections seem to be moving. I mean, if you look at 6 months back, there was almost one towards the end of the year. A couple of weeks back, it was 2 or 3 beginning June, and I think as the tariffs get a lot clearer, and our sense is the tariffs are going to be a lot more narrower in scope, a lot more moderated, I think the rate cuts would be much higher than one. Our sense is still 2 or 3. Yep.
And in terms of the impact of tariffs, I mean, everyone's got an opinion on this. Are they inflationary? Are they not inflationary? Is it a one-time hit? What's your view on the impact?
So the sense is here that, look, unlike 2018, where US had a deflation issue, right now inflation is one of the biggest concerns, which is why the incumbent government, the Democrats, were voted out. And we've seen that in recent weeks with the current Trump administration also. They've been far more discerning about implementing the tariffs. So there's been a lot of noise, a lot of escalation to de-escalate, but you've not seen large-scale tariffs being implemented, basically.
In the terms of some reciprocal relief and maybe some carve-outs for some of the more cooperative countries, look, the markets took some comfort in that.
Absolutely. Yeah. So if you look at it, I think what is going to be is buy more US oil, buy more US kind of a defense equipment and other thing, etc. Probably buy more treasuries at low interest rates or zero coupon, etc. So I think that's the way, or probably invest in US pretty much like the Plaza Accord of 1985. I think that is going to be the way out, but the space evolves in the coming quarters.
So is that your approach to US markets? Just buy more, full stop?
Yeah. So I think the way we are looking at this is our view is US kind of goes through this period of detox, 2-3 years of course correction. Look, coming out of COVID, most other countries cut back on the fiscal spends. They've kind of curtailed their fiscal deficit, but for US, where fiscal deficit is about 8%, the trade deficit is exceptionally high. And to fix all these structural issues, these issues cannot be fixed in a quarter or two. They require 2-3 years, and most investors were overexposed to US, whereas as you come to, again, emerging markets, China is doing all the right things from June of last year. They're giving the consumption stimulus. They're taking care of the local government issues. India has gone through this cyclical downturn, which kind of impacted the economy last year, so things should improve.
I want to come back to the China-India story a little bit later, but if we can just look at the US for the moment and get to our Bloomberg question of the day. Do you think it's going to be not too long before we see the S&P 500 notch a new record?
I think it's going to bounce around these levels. So you see, the market is not cheap. It's kind of most people are overexposed. So what we're seeing in US is kind of a sell on rise for at least this year. And what we're seeing in some of these Asian markets is they are buy on dip. So you continue to see China, India touching new highs, where the US is going to jump around these levels.
All right. Rahul Chadha, founder and CIO at Shikara Capital, going to be staying with us. We will talk a little bit about China next. Also coming up on the Asia trades, a Bloomberg scoop. Xiaomi looking to raise about $5.5 billion in an upsized share sale as it invests aggressively in its EV business. Also ahead, Newton Investment Management going to tell us why the dollar could be suffering from a positioning squeeze. We're going to head to the HSBC Global Investment Summit and talk to ARC's Cathy Wood. We'll also discuss Australia's defence spending plans ahead of tonight's budget. This is Bloomberg. It's shaping up to be a bumper year for share sales in Hong Kong. Bloomberg's learned that Xiaomi is set to raise about $5.5 billion in an upsized share sale to help expand its electric vehicle business. The offering comes just weeks after EV giant BYD raised $5.6 billion. So for more, let's bring in our China correspondent, Min Min Lo. So, Min, tell us a little bit more about this share sale. What's the plan and what's Xiaomi going to use the money for?
So according to the terms of the deal that Bloomberg has seen, Xiaomi was initially planning to sell 750 million shares, but sources have told us that Xiaomi plans to raise that to 800 million shares, selling at about 53 Hong Kong dollars a piece, which is slightly below the midpoint of the marketed price range. The company plans to use these funds to invest in R&D and to drive their expansion as well. And this company, obviously, they're taking advantage of their share price, as you can see on the screen, is actually flipped nearly 3 times over the past year or so. And investors like that this company has been able to replicate its success in the smartphone business in the crowded EV sector as well. Xiaomi has invested heavily into its EV arm. It's raised the delivery target this year after posting the highest revenue since 2021. It's planning to expand the scale of this second factory planned for Beijing to ramp up production. So very strong prospect for this company. And what this means for Hong Kong as well is that it could raise the overall share sales volume for Hong Kong to the highest this quarter since late 2021. And part of it is because the Hang Seng has been outperforming global indices, and that's drawn a lot of investors' interest and hopefully revive this deal pipeline as well as more companies tap on the equity markets for funding.
Let's talk about those BYD numbers as well, those sales topping Tesla for the first time. What's the car maker saying about what's next and which markets is it looking to expand into?
Yeah, so BYD managed to hit that milestone of $100 billion in revenue. As you said, leapfrogging Tesla. Its revenue came in at 29% growth on year, beating estimates. Net income grew by 34% on year, also beating estimates. But here's where it has fallen short of Tesla. It's the profits. Tesla still makes more profits than BYD, and that's where BYD's aggressive pricing strategy has an impact on its bottom line. But still, very aggressive targets this year for BYD. It's estimating that it could sell 5 to 6 million cars this year, up from 4.2 million last year. And it's already made good inroads in the first 2 months of the year, where sales was up about 93% year on year. And the company's chair said that the company will still continue to focus on R&D and to improve the company's competitiveness overseas. We know that it doesn't really have a market in US because of those tariffs, but it has made inroads into Europe and parts of Asia like Thailand, Singapore as well.
All right, Bloomberg's China correspondent Min Min Lo there. Let's get back to Rahul Chadha, founder and CIO at Shikara Capital. Rahul, you were mentioning a little bit earlier that you are overweight China, you like China. How do you feel about the car makers? You buying BYD, Xiaomi?
Yep, no, we've invested in these car makers, and even when we were positioned in China prior to this rally, our view was the global champions coming out of China, the likes of BYD, Xiaomi, Pinduoduo, Strip.com are super attractive because these names were trading at almost 50% discount to the global, the US peers, etc. And one could sense the product quality was getting significantly better than their international peers, and they were gaining traction in the global market. So I think that is going to be an interesting story for years to come, these new global champions from China, basically.
Obviously, though, China in the crosshairs of the US vis-a-vis trade policy, but we've heard from the government saying it's preserving fiscal power for any impact. How do you see this trade battle between China and the US shaping up?
So I think unlike 2018, where China was caught by surprise, China has been a lot more prepared this time around. If we see a lot of Chinese exporters who export to the US over the last 5 years have moved to ASEAN countries, have moved to Mexico. More importantly, I think the market's kind of pricing in this trade war. And what is happening also is over the last 6-9 months, the leadership in China is doing all the right things in terms of taking care of the local government debt issues, taking care of the real estate bubble, and then in a very targeted way giving the consumption stimulus. So they're then keeping their gunpowder dry, at the same time making sure the business and the consumer confidence comes back, basically.
Do you feel this rally that we've seen in China, though, feels a little bit uneven? Because if we take a look at the Hang Seng, it's done amazingly well. It's up something like 19% on year, while the CSI 300's looking pretty flat. Do you have any concerns about the confidence of retail investors in China and consumers as well?
I think what happened prior to this rally was a lot of the locals were kind of positioned in CSI 300 because their idea was this is relatively insulated from the foreign selling. And if you look at HSAI, the valuations are very, very attractive. So and bulk of these consumer platforms, the internet platforms, are in HSAI. So when the foreigners returned, it was bound to re-rate much better than the CSI. So no specific issues with the outperformance HSAI has. I think the companies there are great. The valuations were attractive. It was under-owned. And you look at the inflows from the southbound, the inflows, YTD has been record, basically. If I'm not mistaken, more than $150 billion.
I want to talk to you about India as well, because you're also bullish on the outlook here. We did see some pretty heavy selling for the Nifty towards the end of the year, but the last 6 days, it's really started to see that turn around. Do you feel that that's sustainable?
Absolutely. So our view was somewhere around mid-Feb that India's bottom. See, what happened in India was, again, in H2 of last year, you had RBI, which was tightening. Again, there was a Forex reserve drawdown of about $60 to $80 billion. Domestic liquidity was tight. RBI was worried about the unsecured lending. Look, government had run out of this, all these infrastructure projects. So all that kind of turns better now. What we've seen, YTD, is RBI's cut rate by 25 bips. We've seen government give some bit of a fiscal handouts, $12 to $13 billion to the people, and the economy is kind of a bottom and is improving Q&K. And India is a structural story. See, something we've got to understand is, with whatever China is doing, growth is not going to be beyond 3 to 4%. So you've got to buy market share gainers in China, you've got to buy global champions in China. But India is a story of 9 to 10% nominal GDP. And when a $3.5 trillion economy grows at that creates a whole bunch of opportunities.
All right, Rahul, thanks so much for coming in today and sharing your insights. We're out of time, though. Thank you. That's Rahul Chadha, founder and CIO at Shikara Capital. We have more ahead on the Asia Trade. This is Bloomberg. Welcome back. Here are some of the top corporate stories that we're tracking today. Hyundai has announced plans to invest almost $6 billion in American manufacturing, including a new steel plant in Louisiana. The company also says it plans to spend about $21 billion in the US through 2028 to increase vehicle production, confirming earlier reporting by Bloomberg. President Trump hailed Hyundai's plan, saying it's a clear sign that tariffs work. Boeing reportedly wants to withdraw from a deal with US prosecutors to plead guilty to misleading regulators before the 2 deadly crashes of its 737 MAX aircraft. The Wall Street Journal says the plane maker is seeking potential leniency from the Trump administration, which is reviewing many pending white-collar criminal cases. OpenAI is expanding the role of its chief operating officer, Brad Lightcap. He'll now oversee day-to-day operations, including international expansion and partnerships with firms such as Microsoft and Apple. OpenAI CEO Sam Altman's shifting his focus to the technical side, including guiding research and product efforts. Meanwhile, in an effort to rival the ChatGPT maker's dominance in generative AI, Google is reshaping its search engine. However, as the company's leadership embraces chat-based searches, Google's struggle to translate AI breakthroughs into substantial consumer products persists. Well, let's bring in Bloomberg technology reporter Julia Love. Julia, why has it been so hard for Google to incorporate generative AI into search?
So this really hits on some existential questions for Google. They invented many of these breakthroughs in generative AI, but it has been really tough for them to fundamentally reinvent their core product, Google Search. To really roll out generative AI in search would potentially mean disrupting the ad business. And so that has kept them moving more slowly. And with our story, we documented some attempts that were made internally to launch this technology in search well before the launch of ChatGPT, but there was just a real cultural resistance to shaking things up at that time.
So how's the response to OpenAI been going so far?
It has been a bit bumpy. Google rolled out AI overviews in the middle of last year. The product was delivering some faulty advice to users, telling people to eat rocks and put glue on pizza. And I think that Google is just held to a different standard. When ChatGPT hallucinates, people kind of view that product as a bit more of a novelty, and Google search has become a core utility in all of our lives.
All right, Bloomberg technology reporter Julia Love there. And subscribers can read more about Google embracing AI in today's Big Take, and that's available on the terminal and on Bloomberg.com. Right, let's check in on US futures. Looking a little bit softer at the moment after what was a pretty strong day on US markets. We've got S&P E-minis off by just 5 points at the moment, although we did see stocks rally pretty hard in the US session. The Nasdaq up 2.2%, Mag 7 having its best day in about 2 months. And we've got Dow futures looking kind of flat at the moment. The reason for today's rally, though, of course, where President Trump signalling a more nuanced approach to Liberation Day tariffs. That's April the 2nd, signalling that there could be some reciprocal relief for a number of countries. We did see factory activity, though, slipping back into contraction in the US for the month of March. And yeah, you guessed it, that's due to a tariff-related rise in raw material costs. Well, let's take a look at how we're tracking here in Australia. Meanwhile, we've been up and running now for just coming up to 27 minutes, and we have actually that's not on the board there, so I'll tell you about FX instead. We've got the yen softening a little, now at 150.81. We're going to get minutes from the Bank of Japan a bit later from the January meeting. However, they're always a little bit slow to make an appearance. Not a great deal of change for the Aussie dollar there, just softening ever so slightly against the greenback. Big day in Australia, of course. We do have the budget being handed down later on this evening, so that's in, let's say, about 9 hours' time. And that budget will, of course, be foreshadowing an election, which is yet to be called, but we know that it's going to happen before May the 22nd. All right, we have more ahead on the Asia trade. Do stay with us. This is Bloomberg. You're watching the Asia trade. Here's a look at how the Aussie dollar is doing, just still hovering below that 63-cent US level. We are, of course, awaiting this evening's budget. Treasurer Jim Chalmers set to unveil that annual budget in Canberra tonight, Tuesday night. Economists expecting a small revenue upgrade with an underlying cash deficit slightly better than predicted. Government reporter Ben Westcott joins us now with more. So, Ben, we've had a couple of surpluses out of the bag from this government that we didn't really expect, but is that the end of the line?
Well, for the moment, certainly. I think the government is at the moment saying that they are not expecting any budget surpluses. Well, they're not effectively saying when we would expect the budget to go back into surplus. Part of that is probably because they want a bit of leniency when it comes to this. Part of it is because the first two surpluses, I mean, it's fair to say, didn't help them economically. Didn't help them politically a huge amount. Obviously, they were, for a long time, a surplus was the gold standard of budget management in Australia. But certainly in recent years, despite getting those two surpluses, there's been a lot of criticism of the government's budget strategy. So now going forward, I think they're looking more at small deficits rather than anything else.
And of course, this year's budget coming earlier than usual because it's setting us up for an election probably in May. And how are they going to balance these questions over cost of living on the one hand with probably a need to increase defence spending on the other?
Yes, well, I think it's going to be a really delicate balance for the government because they still can't afford to increase spending too much and risk inflation going through the roof again. Because, even though they are planning for the election, they are also looking at potentially a second term in office, which would then mean that there was a giant jump in inflation later in the year, partly as a result of their spending and partly as a result of global factors. Then that would be really bad for their government. But what they're looking to do at this point is they are sort of throwing the guardrails aside just a little bit, opening it wider than they have in previous years to make sure they can fit in some of that spending that they need, particularly on things like healthcare, which is going to be one of their biggest ones. There's not going to be, we think, too much new spending on defence in this budget. It'll be more a highlighting of what they've previously done on defence, just as a result of the fact that they haven't really got huge mountains of cash to splash around.
All right, Australian government reporter Ben Westcott there with a busy night ahead of the budget. And you can join us tomorrow. We'll have a full debrief of the Australian budget. Finance Minister Katie Gallagher is going to be with us live, 7:15 a.m. Hong Kong time. Also, Shadow Treasurer Angus Taylor is going to give us the opposition's response about an hour after that. And we'll have more scrutiny of Australia's budget and defence spending plans coming up in the next hour. We'll be joined by the Australian National University's Jennifer Parker. Well, Atlanta Fed President Raphael Bostic says he now sees just one interest rate cut this year rather than two, and that's due to tariff hikes impeding progress on disinflation. Speaking exclusively to Bloomberg, Bostic also says the big question is how consumers will react to higher prices.
My projection of where inflation is going to go this year is pretty much sideways, and we won't get back to a more neutral level of inflation, our 2% target, I don't project until sometime early in 2027. But it is very much hearing people take in the latest news, figure out what that means for them, and then I will respond to that in terms of how I think about the economy's trajectory and policy.
Last month you said you thought that we would have 2 rate cuts this year. The dot plot didn't change, still calling for 2 rate cuts, but a number of people moved their dots up to say maybe we get fewer than that. Were you one of those?
I was one of those. So I was at 2. I moved to 1, mainly because I think we're going to see inflation be very bumpy and not move dramatically and in a clear way to the 2% target. Because that's being pushed back, I think the appropriate path for policy is also going to have to be pushed back in getting us to that neutral level.
Well, some of your colleagues also moved their dots down, suggesting that we might see more rate cuts, probably because they think the economy will weaken. What do you think the odds of an economy weakening because of fiscal policies are?
Well, what I would say is I am hearing more concerns about the trajectory of the economy. That's undoubted. But what I also will say is the data that's come in to date has not actually shown that, and we've still seen a resilient economy. I do know that consumer sentiment has started to take a dip, and the question that we face right now is consumer sentiment going to be a leading indicator like it was pre-pandemic, or is it going to be something that doesn't really translate into actual observed behavior in the economy, that as how it played out for most of the pandemic? Right now it's an open question, and it's one of the things I'm going to be watching very closely in the months to come.
Well, it's hard to know for sure what consumers are going to do, but you talk to business leaders all the time. What's the general attitude of CEOs right now about business outlook and about their plans for, say, hiring or even raising prices?
So, we actually have started to ask our business leaders exactly this question. Where do you think pricing pressures are going to go, higher or lower? What we've heard consistently is they think they're going to go higher. Then we ask, what do they think is going to happen in terms of their sales? And they're also quite bullish on the sales rising as well, which says to me they think that consumers are going to be able to manage these higher levels of prices and whatever changes in prices that happen moving forward. We'll have to see if that actually plays out. I think that would be one of the big questions and stories that emerges through the course of 2025, namely how the consumer manages in the face of these elevated price levels.
That's Atlanta Fed President Raphael Bostic speaking to Bloomberg's Mike McKee. Well, joining us now from Hong Kong is Ella Hoxha, Head of Fixed Income at Newton Investment Management. Ella, thanks so much for joining us today. I just want to start with those remarks from Raphael Bostic that there may just be the one rate cut in 2025. What's your outlook around this?
Well, of course, there's a lot of uncertainty in markets right now, particularly April 2nd being a very important date, which is just around the corner. We would probably say that the risks are that we get more cuts. And the reason for that is the Fed is more likely to be reactive this year rather than proactive. So just the way we've revised from 3 to 2 to now 1, as Bostic was saying, I think potentially we could go the other way around. Certainly the risks have gone up on the growth front, although the shorter-term inflation implications are more sticky, as we just heard. So we would probably err more on the side of caution and say more cuts, likely rather than hikes, sorry.
In terms of the stickiness of that inflation, I mean, Raphael Bostic, I mean, he sits on the Fed board. He's unsure if this is just going to be a one-time hit to prices from tariffs. What's your view of the inflationary impact of these tariff policies?
There's no doubt a hit in terms of price levels, but thinking more akin to tariffs as a bit of a VAT hike. So you get the one-off effect, and there's of course no doubt on inflationary impact from that. But in order to sustain that down the road, I think you need a series of chains of events. And so we would probably more see it as a short-term higher inflation, but down the road potentially less so. Definitely in that camp.
We've seen yields ticking up ever so slightly as well. The yield on the 10-year was up about 9 basis points in the last session. Now, this is not what Scott Bessent wants. He's been saying that he wants yields lower, and he's shown some signs of taking concrete action to achieve that, limiting the size of 10-year debt auctions, looser bank regulations. Where do you see yields tracking in 2025?
We probably see more of a roller coaster environment. So we would argue perhaps over the next quarter or two that yields actually head down. And that's because of this uncertainty that we have both for consumers and for businesses. And so that should act as an anchor on yields and pull them lower. Down the road, it's a very different story. Of course, we're operating in a highly uncertain and highly unusual environment. So we don't know for sure. But I think the odds are definitely stacking in favor of yields lower. So maybe we will get what the policymakers want, which is certainly a lower yield. But I do think that's potentially going to come on the back of concerns around growth and possibly what financial markets do. So what equities do probably is even more important here. Because I sense that fixed income, or in terms of treasuries, they're following equity markets. So equity markets are very important here in terms of gauging that sentiment of what's actually happening in the real economy. So it's a little bit of the reverse of what we've been seeing over the last 3 years. It's been rates leading equities and credit. Now I think it's the reverse of that. It's almost like equities leading credit and rates.
Yeah, well, if equities are a gauge of sentiment in the economy, we've had a pretty wild ride. Do you feel that this is reflecting the uncertainty to a large degree?
Absolutely. And